Free market, come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning to my two favorite brunettes on the planet. Number one, we've got, I'm on the right side. I've got Jenny Andrews and Vanetta Logan. Hello, ladies. How are you today?
Hello.
Good morning.
Good morning. Vanetta, your personal fast market, you are looking flawless. No matter what happened this morning.
Yes, Vanetta, you look great. How was your holiday?
It was wonderful. It went by too fast. It was just me, my mom, and my dad. We watched a ton of movies. We ate a lot of food. I drove back yesterday. It was a little dicey, but I made it.
Oh, did you?
It was okay. It wasn't too bad.
Yeah, that's crazy.
Yeah, but there was one spot on the toll road. It was like almost like whiteout conditions, but then once I got through it, then it was okay. So
I was thinking about you because my son was driving to school yesterday and he had to get off of 65 and drive side roads because 65 was shut down, which is that you do take 65 up to...
No, I take 80, 90. So I take the toll road. But yeah, I bet 65 was not fun.
Well, at least you made it. Hopefully everybody made it. But the storm was crazy, honestly. There's so much snow here.
How much did you guys get?
We got about 10 inches.
Yeah. Oh, wow. Yeah.
Yeah, I mean, we got about 10 inches. And so my son flew out yesterday and the airports were bonkers. They were cuckoo for Cocoa Puffs. We're never doing that again. They always say it's the biggest travel holiday of the year at the airports. I had never really...
Was he at Midway or O'Hare?
O'Hare.
Oh, yeah.
So it was gridlock getting into O'Hare. So the 294 wasn't bad, but then they spent 45 minutes trying to get into O'Hare.
Really?
Mm-hmm.
And I imagine it was gridlock on the runways. I think the planes were stacked up like 20, 30 deep, just trying to taxi and take off.
Hey, listen, Vanetta, once we dropped him off at the airport, I didn't care how long he was stuck there for on the plane. Just knew he was contained within the vehicle. So
when you say you're never doing that again, will he drive home? Will you get him next year?
Well, no, I'm not going to go get him. But I think the week between Thanksgiving and Christmas, because he's only there for 2 weeks, he can drive down and back. Do you know what I mean?
Oh, yeah.
Just for 2 weeks. They can figure out where to put their car for 2 weeks.
Right. That makes sense.
Yeah.
How was your Christmas bonanza extravaganza?
Oh, exhausting, Vanetta. It was super fun, though. It was really fun. It was funny because John was talking about the Bears game. John's our super producer, John McGloin. Him and James were talking about the Bears game in between. I was like, Bears game was on, but I didn't have a second. I don't think I sat for 3 days, but yeah.
Liz had party after party after party. I tried to contact her, Vanetta, and the text I received was, I'm in between two parties.
Well, because I had to clean up after one in order for a second one to come in. It was bonkers.
Net, how many people were in your house this weekend?
60?
I don't even know 60 people.
It's crazy, Vanetta. She loves. I know your husband. He likes to throw parties too, but between the two of them, it's crazy over there.
Well, this is going to sound crazy, but I mean, everybody knows both my parents are gone. So it's just me as the family representative. Do you know what I mean? So it's me with both sides and my cousins and everything like that. I'm always like, whatever, just come to my house. I've got the room for it, so it's easy.
I guess that's very nice of you, very magnanimous of you. Jenny, how was your Thanksgiving?
You know what, Vanetta? I've just been decorating. Right now, I have 6 Christmas trees up in my house.
You have 6 Christmas trees?
Mm-hmm. Yeah, 6 Christmas trees up in my house, and I'm in the town Christmas holiday house walk this Friday. Mm-hmm. So
so people like come into your house?
Yes.
Oh my God, wait a minute, Jenny, and I'm so hesitant to have you say this on air, but Vanetta, last time she was on a walk, it was the garden walk in the area.
Yeah.
And she sent the email. This is my favorite story ever. Jenny was real mad. I thought it was hilarious. She sent the email this is when Tasty we were before IG bought us.
Liz and I used to have a combined email address, and then our email signature was Liz and Jenny. Liz and Jenny.
So everyone that walked through her house walk, because the email sent from Liz and Jenny, everybody that walked through the house walk was like, "Oh, are you Liz or are you Jenny?" It looked like we were a married couple and our daughter was Lily.
Because
Oh, I love that. Love is love.
yeah, so the person who wrote the program, I had to send them information on the garden. That was for the garden walk. I had to send them information on the yard. And I sent it from my work email. So this like automatic signature was Liz and Jenny. So in the program, they wrote like, "This is the home of Liz and Jenny and their daughter."
And their beautiful daughter, Lily. It was so fun.
And the funniest thing, I saw Brittany, and Brittany has ties to Frankfurt. And Brittany told me, she's like, "Hey, I'm going to go on the Frankfurt house walk." I was like, "I'm in it, Britt. I'm in it." So I'll be seeing Brittany walk through my house.
Oh, yeah, that'll be so fun. Take a picture.
Yeah. So Vanetta, you should come out. It's fun. The house walk is a lot of fun.
I gotta lock in my GPS coordinates for Naperville, which I know it's not close to you. It's sort of close to you.
Not far from Liz.
Not far,
Yeah,
because it is the third and final year for the Mary Swiftmas house, and it has the Life of a Showgirl theme. It has gone instantly viral. It is in Naperville. I need to get down there so I can see. They have the engagement photo on their roof. It's blown up, as well as like a 5-foot tall engagement ring. So I need to make the pilgrimage to pay my respects.
I need pictures of both these or they didn't happen. And now you guys will not receive a single photo of me because I'm going to Vegas on Thursday, baby.
Oh, that's right. That's right. Liz is going to what is it called? The Sphere.
Oh, are you going to see The Wizard of Oz?
No, I'm going to see Zach Brown.
Ooh.
Yeah, I can't wait.
That's exciting. How long are you going to be in Vegas?
36 hours, baby.
That's the way to do it. Anything longer and you're pushing it.
So my son was home this weekend, and in honor of my Vegas trip, he watched all 3 Hangovers.
You're going to have fun. They're going with a big group to celebrate her husband's 50th birthday.
Well, he claims it's not, but Zach Brown's never been at Sphere. We've always gone to see Zach Brown at Wrigley, but now he's at Sphere. Did you know that he is married to Kendra Scott?
No.
The jewelry designer?
Yes. I just found this out.
How did they even meet?
Hold on. I don't know if they're married yet, but they might just be engaged. I don't know if it's done. It's a done deal, but they are engaged.
Wow. I did not know that.
Yep.
When's the last time you went to Vegas and it wasn't for a money show?
Oh, I know what this was. It was the last time I went to Vegas. This is once again, Jenny, I'm sorry we've known each other for this long. The last time I was in Vegas without a money show was for our friend's wedding, and Jenny and I decided to stay up all night long at the blackjack table and not get a hotel room.
That was the last time you went to Vegas for not a money show?
That's correct.
But that's crazy that you haven't. That was literally 21 years ago.
Well, I'm not a huge fan of Vegas. I love to gamble. Don't get me wrong. I'm not trying to say that I don't like to gamble. That would be a false if I said that. I just am not a huge Vegas fan.
Yeah. What is your game of choice?
Blackjack.
Oh, blackjack?
Mm-hmm.
What about you, Anna?
What?
What about you?
I don't gamble. I don't gamble at all. I'm taking my money and I'm going to either Ulta or Panda Express.
Speaking of shopping, Vanetta, I heard that because I went out on Black Friday. My daughter wanted to go out on Black Friday. So I was fighting the crowds in the mall early in the morning on Black Friday. But I heard that the Gen Z spending was down on Black Friday.
It was up, but it was all mobile. But I'll cover it. I got it for news. But did you find any deals?
You know what? They had deals there. I don't know that there were any bigger deals on Friday than there were on Thursday or Wednesday or Tuesday.
Or the week before, right? Yeah.
Yeah. Everyone started their Black Friday deals 5 days ahead of time. So I didn't see anything too crazy on Black Friday, although maybe I'll give one to everyone. There was this little set I found at Sephora that I really liked, and it was such a cheap deal. I was like, I'll buy the balance. I got a whole bag of them just to have on hand to give out as little gifts.
Oh, that's good.
Vanetta, can't wait to get what her everybody gets one gifts are.
I might have one around. So I do like getting those little sets at Sephora.
Yeah, those could be nice. How about you, Liz? Are you going to shop online today? It's Cyber Monday.
I don't know. Probably.
Well, you have 60 people you got to buy presents for. No, I'm just kidding. Now, how many people do you have to buy actual presents for?
Well, the number has decreased this year. Well, to be honest with you, Vanetta, so on Christmas Eve, I usually throw a huge party too. And
Yeah.
one of these parties kind of replaced Christmas. So I'm already kind of done and dusted with some of like half the people will not be coming to Christmas Eve because of this party I had.
Wow.
Yeah. So the number went down a little bit. So I'm happy about that.
All right. Well, that's pretty
But
good.
a lot.
Well,
The number is a lot. How about that?
the limit does not exist.
No, there's no position limit.
You said you were watching movies. Do you have a favorite? I'm always looking for movies to watch with the kids. Do you have a favorite from your weekend of movies with your parents?
We watched the documentary on the 85 Bears and the Super Bowl Shuffle. It's great. It was very fast because I don't have HBO. Like my parents have all these services that I don't have. So I was like, I have a list. I was like, here's all the things that my friends are telling me I need to watch because I don't have these services. But no, it was a great documentary. And we said it because we were there, but they filmed it at the Park West, which is where we had our last show. If you came to Chicago to see Tom and Bat, we were at the Park West once.
Yeah.
Yeah, and so it was cool to see it, in 1985.
It was good. I thought the documentary was really good. I had no idea I didn't remember that they made that before they ever even.
You don't remember that?
I didn't remember that they made that before they went to the Super Bowl.
Oh, they were so ballsy back then because they were so convinced that they were going to win.
No, if you watch the video, it wasn't them. Like they were nervous and some of the players didn't want to make the video.
I loved it. I mean, it's iconic.
Oh my God. Yeah, this video was great. And it was hilarious because I didn't know the guy who made the video also made the commercials for Jovan.
Jovan Musk, yeah. I didn't know he was
dad.
6'7" and that he could dance.
That was my dad's cologne. This is what he wore everywhere.
Oh
was it really? Oh, that's awesome. But anyway, we don't want to spoil it. But I mean, there's some crazy things. I mean, it's a good documentary. It's on HBO. It's short. It's not very long. So that's what we watched. We also watched Naked Gun with Liam Neeson and Pamela Anderson.
Oh, that's good.
Yeah, how was the new one?
Just turn your brain off. Just turn it off. But it was Liam Neeson is funny. Like it was funny. I don't know.
Yeah, I heard Pam Anderson's supposed to be funny in this one.
Yeah,
too.
to be fair, whatever services my parents have, we didn't have to pay for it. So I say if you can watch it for free.
Hey, I'm gonna watch the new Taylor Swift. Do you have Disney Plus to watch the new Taylor Swift?
I gotta get it. But yes, I will. I gotta.
So, do you think everyone's gonna get Disney Plus just for that, and Disney will go up?
No.
I don't know.
You're not either.
I
100% do not agree with you, Disney or Disney, Jenny.
I got Long Disney just when they announced that it's Taylor Swift series. I got Long Disney, thinking everyone would have to get it to watch that.
I will have to give them some money temporarily, so you can factor me in. But that's just me. I'm a sample size of one. I don't know.
Come over. We'll watch it together.
That's funny. But we hope that you're watching us this morning. We are back on this magnificent Monday after a nice little hiatus. Hope you guys enjoyed your time with your family. We have a wonderful show for you today. Always a pleasure when you're joined by Liz and Jenny. I do not know what happened to the bats. I know Nikki was like hiking in Arizona and maybe Bat got taken down by a Sunwa turkey. I don't know.
Did the turkey get produced? Did we have pictures?
Yeah, did you not see his video? He met Tom. He met up with Tom at Sunwa. It's on Bat's Twitter. Follow Bat on Twitter. And so he did get it, but I don't know anything other than that. There were no follow-up videos.
Let's fill Jenny in. As Tom's last parting gift, he ordered turkeys from Sunwa for both Bat and Scott. And so, but there was no receipt, no time to pick it up. And he's like, just pop in there and give me your name. You're going to pick it up. And so the over-under was, is there going to be a turkey at Bat's house?
There was no confirmation. There was no time to pick it up. There was no additional instructions. And I was like, You're not getting that turkey. But I was wrong.
I should have posted a picture of my sister-in-law. She has a farm, and they raised every year turkeys for the whole family. So this year they had 21 turkeys, and they have to put the live turkeys in the trailer. So my brother-in-law put all the turkeys in the trailer, lined up at like 5 p.m. for a 7 a.m. opening at the Amish farm to process the turkeys because the line is so long of people with trailers full of turkeys to have the turkeys processed. And then they came over with the trailer full of turkeys to deliver it. It's crazy.
That is my worst nightmare. What just happened? All of that sentence strung together is my worst nightmare.
Well, it was good. The turkeys were good. And you know what? They're raised humanely. They're free range, fed
Sure.
well. No, they have a nice farm. They take care of their animals.
Well, we take care of our animals. No, that's the worst segue
no,
ever.
that's good.
But hey,
That's good. I like it.
we got a good show for you on this magnificent Monday at the top of the 8 o'clock hour. We have an options jive, a research corner. Kai coming in to give his outlook for the markets for the week. Then at 8:40, we got Dr. Jim in the house, the skinny on options abstract application. Are options pricing models realistic? Ooh.
I did not get a look at that one. Did you get a look at that one, Jenny?
No, I didn't.
Well, Dr. Jim is very good at explaining things. That is the professor in him. And Dr. Jim, if you're going to be in Tampa, you can see Dr. Jim this weekend.
This Sunday, right? December 7th.
Yes.
Yeah.
Yes, on Sunday in Tampa.
I'm tempted to go to Tampa to see him just to get out of this cold weather.
I know. You might get stuck there, which wouldn't be bad. But yes, I think tickets are still available at tastylive.com/events because nothing like doing a little holiday shopping and then learning about options pricing models. It's a well-rounded weekend. But yes, the Options Crash Course Live, it is the last Dr. Jim show. So he did cities that mean a lot to him. So he did Detroit and Boston and now Tampa. I think it was very cool. So this is the last one. So you can catch him on Sunday. This is the last
of all the Tasty Tours for this year.
Right, the end of the year.
Yeah. And then we got a market measures at 9 a.m. 0-hour breakdown.
I almost think it should be 0 DTE breakdown.
Okay.
But is it like the last hour of the day?
No.
Okay. Well, we will do some more explaining at the 9 o'clock hour breakdown. So that's that market measures for that. And then 9:20 live from the trade desk. We got Quinton and Ryan in the house. Quinton counting down all the top trending tickers over at Tasty Trade, and Mr. Ryan Grace providing his insight into all things crypto.
He's got some explaining to do because crypto really, really tanked.
It was up to 92 on Friday, and now it's trading like 86.
We will hold him accountable.
Yeah.
We will have Ryan Grace in to explain what is going on with crypto. But hey, in the meantime and in between time, do you want your daily dose?
Yes.
Yeah, all right. Hit me with my theme music. Let's go.
Our leading story, breaking news,
Across
the wire. Our leading story, top story, just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. Rabbit. It's December the 1st. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
We are ready.
Yes.
So yeah, it's the last month of the year, and investors are looking for a smoother month to round out the year after choppy November trading saw the NASDAQ Composite snap a 7-month winning streak, while the S&P 500 moved back to within 1% of a record high. The final 5 days of November were good for the market, but over the last month, Meta lost 13%, Nvidia shares are down 8%, and Oracle lost 30% over the period. The only exception has been Google, whose stock is up around 20% after a strong earnings report. In the week ahead, investor focus remains on the odds of a rate cut at the Fed Reserve's December meeting, which is next week. Traders are predicting an 86.9% chance of a 0.25% rate cut. Also, we might get a Fed chair announcement, and we have some economic data that is slowly coming out after the 43-day U.S. shutdown. This week, you're going to get private reports on U.S. manufacturing activity, service sector activity, and ADP's private payroll. Also, earnings in the sphere this week: Dollar Tree, Dollar General, Salesforce, and CrowdStrike.
And Marvell.
Yes, and Marvell. So,
Yeah.
what are you guys looking at in this December to remember?
In this December. Number one, I love this graphic, so good job. I don't know where you pulled that from, but I really like the Christmas tree, the graphic there. This should be interesting. I mean, it's not a good start to the month of December. I mean, SPOOs are down, NASDAQ's down, everything's down, bonds are down, but you never know. Like, we're waiting on the economic news, but I'm also waiting to see, and you kind of touched the nail, you kind of dipped a toe in the water here. We know we might get a new Fed chair. He says he knows who it is. When are they going to tell us?
It's Kid Rock, by the way. I'm putting that out there. He wants to go with the unconventional pick. It's Kid Rock.
It's Kid Rock. Just putting that into the...
There's a lot coming up that could move the market, so we'll see what happens. But it is, like Liz said, kind of a bad start to December. I didn't expect, honestly, when I went to bed last night and SPOOs were down 35, I thought, they'll probably be unchanged in the morning. So to see them down even more, I didn't think that this would be the way we started December.
I mean, but we have had such two-sided action where, I mean, the SPOOs are down 45 right now. That doesn't mean anything anymore, right? So because we've had like these violent moves in both directions.
Well, rolling into the next story, I don't know if we'll get that Santa rally. Wall Street says December may break from its usual strength. The Santa Claus rally is usually one of Wall Street's favorite holiday traditions. Stocks tend to grind higher after Thanksgiving volatility fades, and December often delivers one of the strongest months of the year. If you had to just do like a Las Vegas up-down sort of vote, do you think we're going to get a Santa rally?
I'm going to say yes, but here's where I get totally thrown off. And I would like to take this to the tape with Mr. Vecchio, who did a great job last week with you, by the way. But so the Santa Claus rally is sometimes, which is totally throws me off, after Christmas.
It's the last 5 days, I believe, technically after Christmas. I say it's anytime after Thanksgiving. Go Santa, go.
Yeah, you would think it would just be all of December, but I did hear him say that it's after Christmas.
Yes.
It's after Christmas. So is that the Santa Claus rally? Santa's sleeping after Christmas. He's exhausted.
I mean, honestly, like if thinking back, I only remember one terrible December. I remember one terrible December where the market was down quite a bit. In my mind, that's all I can remember. The rest of the Decembers seemed to be positive. I don't know if we have facts or stats on it, but I really only remember one really bad December.
Do you guys trade a lot in December, or do you find it harder to do?
No, we still trade.
We trade, yeah. We trade just as much.
We still trade. There isn't a reason for me not to trade, minus being on vacation.
You're going to be trading at the Zach Brown concert?
Yes, I will be.
Hey, she's only there 36 hours.
Hey, well, the yen was up last night on comments from Ueda, and the dollar is also bracing for a crucial December, helped by comments from Bank of Japan Governor Kazu Ueda, who left the door open for a near-term rate hike. The yen rose on Monday, while the dollar began the month on the back foot as investors ramped up bets of a U.S. rate cut this month. Let's look at currencies.
So go ahead, Jenny, go ahead. I'm sorry.
I was going to say, just it looks good. The yen's finally having a bounce, finally. And we have some FX positions in the yen, the USD JPY, and that is coming in. That should be coming in a little bit too. So anyone who's had some yen positions finally is moving in our direction, because.
And this is going to be very, 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 very dependent on who is the next Fed chair. This is going to be the most dependent decision they have. It's going to be your currencies and it's going to be your bonds.
But at least we've got yen having a little bit of a bounce, because that went like nothing but down for so long.
And our very own Mike Butler, he's in Japan right now. So
he is?
Yeah, on vacation.
Who did he go with?
I think he went with his girlfriend.
Oh, he has a girlfriend too? Everyone
Yeah. Oh, yeah.
Nikki has a girlfriend. Mike Butler is a girlfriend.
Yeah.
Too bad those two spent their honeymoon fund to travel with each other last year.
Hey, in other news, though, the Eurozone inflation is near 2%, and that seems to be able to seal the deal on the ECB's rate hold. That should be enough to satisfy officials that they can avoid tweaking interest rates in December. I think that's going to be ahead. That news is coming out on Tuesday. We didn't really talk about the euro, but what are you doing in the euro or the pound? I wish our inflation was 2%, but that's neither here nor there.
Euro's up. Euro's up too. So for the last 5 days, Euro's been up. Looks like a similar move to the yen. So I don't know that we have a euro position right now.
No, but you know who, just foreboding, you know who we've got? Oh, no, not Glenn. I was thinking we have Quinton coming out from the trade desk, but Glenn is in the office and we have him on Thursdays and he's going to become very important here soon.
Yeah.
Although this Thursday, Liz is going to be in Vegas, so I have TP on Thursday.
Oh, yeah. Oh, no, Glenn.
Well,
Yeah.
maybe that can be your 2026 resolution to trade more FX.
we trade FX every Thursday and we've got him on and it's great. Like I love the FX and I love the tasty FX positions. It's just learning a new trick.
Yeah. Yeah, there you go. Well, something that is reaching and learned a new trick because it's reaching new highs. Silver hit record highs in 2025. The Devil's Metal has further to run. First of all, I didn't know we were calling it the Devil's Metal.
I didn't know that either.
Also, word on the Twitter street, as I was checking Twitter Friday morning, I saw that the CME had a data server like overheat. And then they were like, no, someone just blew out in silver. And there was all these conspiracy theories. I didn't know what was happening. I was like, this is going to be a lot of comments in my social inbox. I'm just close my computer.
That was Friday, right?
Yeah, that was Friday. Yeah.
Yeah. There was a lot.
The CME had like a 10-hour they were a 10-hour outage as they had to fix their backup cooling capacity. But let's talk about silver.
Silver and copper are both getting a huge lift.
My son was at trivia night last week with his friends because they were all home from college. And one of the questions at trivia night was, what is the most conductive metal?
Silver. Oh, copper.
Vanetta?
Oh, I don't know.
Palladium.
It's silver. Yeah, I didn't know. We all guessed wrong. Nobody guessed silver, but he came home testing us with all of his trivia questions, and I didn't know silver was the most conductive metal.
I'm surprised because isn't it copper? Oh, it's copper pipes for plumbers. I'm sorry, my brother's a plumbing contractor. They're not trying to put electricity in your pipes. Sorry.
Well, even though it's the most conductive, they really don't use it because
it's expensive, probably.
Yeah, or like I don't know, or it tarnishes or what. I'm not sure, but it is the most conductive. That was according to a 21-year-old coming home drunk from trivia night. So
this is the most mom story ever.
These are facts. These are facts.
What are you guys doing in silver trade-wise?
Okay. We don't have it in our account, Vanetta, but you know I am a gold and silver bug.
So Liz has it.
I like them both. I like the metals. I actually am long copper too. I'm long some palladium. Thank you to Tim Knight, who we have on our show on Tuesdays.
Yeah, Tim Knight is bullish on palladium, so we all have palladium in honor of Tim Knight.
Look at you diversifying. Well, that brings me to my next story, which is gold. Gold also seems to be up on news of a potential Fed rate cut. Precious metals were likely supported by a combination of the erratic trading hours on the CME and continued Fed dovishness.
Yeah, gold's up too, but silver and copper were the big winners today.
Yeah.
This weekend. But gold is still up.
Well, staying in the commodity sphere, let's talk about oil. OPEC Plus holds 2026 group-wide oil output steady, and the meeting of OPEC Plus, which pumps half the world's oil, comes during a fresh U.S. effort to broker a Russia-Ukraine peace deal, and they agreed on a mechanism to assess members' maximum oil production capacity. What is oil doing this morning?
It's weird because it got up as high as almost 60 today, but now it's down to 59. But at least it's close to that 60 handle. The nice thing is Landman is back. Thank God. I was missing that. So happy to have Landman back. A new one dropped last night.
Ooh. Mm-hmm. I will tell you this, gas in Indiana, under $3.
No.
Yeah.
I feel like it's always under $3 in Indiana.
It's not. It is not. It has not been. But it was when I was home, and I was like, how do I take this home with me?
It's under $3?
Yeah.
Wow. Wow, wow, wow.
Yeah.
No, I mean, yeah, oil's been in a range, right? It's up today. It's up almost 1% today, but CL's been within a range. It hasn't really been moving that much.
Okay.
Yeah,
Yeah.
I feel like it's been bouncing around that $60 handle.
What about natural gas? Because we're gonna get like an Alberta Clipper. I don't know what they're called, but maybe over the next couple of weeks, like it's gonna get real stupid cold here.
Oh,
I was
I was
wondering.
like, what's an Alberta Clipper?
No,
So
it just
it shot up on Friday. Natural gas really shot up on Friday. It's trading right now at like 487.
okay.
But
We have 25 days left to get it to 5, Jenny. That's what
we've got an upside broken butterfly in natural gas, Vanetta.
Okay, come on, butterfly.
Come on, big money, no whammies. Yeah.
I know Ryan Grace is going to be in to talk about this later, but CoinShares filed on Friday to withdraw their plan to launch 3 ETFs as the Euro cryptocurrency firm plans to focus on higher margin opportunities. They withdrew their registration for an XRP ETF, a Solana staking ETF, and a Litecoin ETF. This comes after last week a Dogecoin ETF was launched, to which people were like, why? But crypto moving.
So they pulled.
They did. They want to hire on higher margin products, and they were like, we don't know how many people really want a Solana ETF, so they're going to focus.
Friday coin closed at almost 273, and today it's going to open around 260. So all the cryptos are getting hit today.
And Vanetta, I don't want to step on your news if you have this. Did you have about how IBIT they are releasing, or they're trying to up the position limits for it?
No, I do not. What is that?
So IBIT is, that's BlackRock's ETF, and it's like the number one. And I know you have a lot of
liquid.
It's super liquid, right? So the position limits they're put in place for options to keep people. And I was in market reg before I worked at the SIBO. And I was on the positions limits team. So when I heard this news, I was like, you got to be kidding me. The position limits on options are in place to keep not one entity to have more, like a gaming of the system, right? So you can only have X amount. So the position limits are usually like 2,500. When IBIT launched, they moved it to like 250,000. Now they're asking for 1 million. That's how liquid IBIT is.
Wow.
So each entity can control meaning like have a stake in up to 1 million options at a time. And that's all you can have. They're asking for 4 times the limit on IBIT for the position limit. That really piqued my interest because I want to look at it today once we open because I want to see what the volume is in there.
Okay, yeah.
Options though. Position limits are only in options.
That's good clarification.
Not the underlying. Not the
underlying. No. The underlying, you can do whatever in the underlying. The position limits are on options.
Okay.
Meaning like you can't have, and it makes sense because otherwise there's one entity or person or thing can only control up to whatever the position limit is. Now 250,000 is a big position limit. They're trying to get to 1 million.
Now, Liz, is that like multiple options or is it just one strike? Or is that all of your total options in every cycle, every strike?
No, but back in the day when I was there, it's like lines. Do you know what I mean? But there are certain other limits. Like you can only, I don't know what the exact term is for like your whole portfolio, but it used to be back in the day because we didn't have all the expirations back then when I was on the position limit team, right? So I think the rules might have changed and maybe they did coagulate them or put them all together. But I don't like, it's just, that's 1 million a position limit seems insane to me.
Yeah, but back in the day when you were on market reg, that was so long ago. I think there's a lot more like volume than there used to be. Exactly.
No, but asking for 4 times the position limit, which the position limit, they're set. They rise if you're more liquid, and I will give you that. But asking for 4 times is a lot. That's all I'm saying. Even if your position limit was 25,000, which it was, if you're asking for 100,000, that's a lot. So they're asking for 1 million. 4 times is a lot.
Good thing Liz isn't still on market reg, or she'd deny.
Hey, you got to swing for the fences, I guess. I don't know. We'll see what happens, but like you said, we'll keep an eye on it at the open and see what the volume is.
I want to see what the volume and the options are on the open.
AI helped drive Black Friday online sales to a record $11.8 billion, up 9.1% from last year. That's according to Adobe Analytics. AI tools can help consumers find deals, and that boosted online shopping. Physical store traffic was subdued due to inflation. Cyber Monday, which is today, is projected to hit $14 billion in online sales. A lot of moving parts here. Jenny, you did ask me. Gen Z shoppers were shopping on Black Friday, but they were doing online, and they were also more likely to use a buy now, pay later service. Don't get into that.
Really?
It's a slippery slope. Yeah. So Affirm saw like a nice little bump across a bunch of segments of consumers, whether it was millennials or Gen X or boomers, but people are spending. But if they have the money to spend is TBD. But maybe look at Affirm or Klarna this morning or Amazon. So lots going on for shoppers.
This snowstorm that like leveled and I don't want to just say Midwest because I think it was Northeast
Everywhere,
too,
yeah.
the snowstorm. I think it's really messed up Amazon because yesterday I was trying to buy some things on Amazon and I was getting crazy delivery days. Crazy.
Oh yeah, I ordered stuff. It's not going to get here till like Friday. I ordered stuff last like Thursday, like on Thanksgiving or whatever. It's not going to get here till like Friday. So
This is how spoiled we are. I was like, what do you mean I can't get it today?
I want it now, Daddy.
Now. You got 2 hours. Okay, now let's play a fun game because I'm looking at this picture. Let's guess what store it is.
Oh, okay. That is a fun game.
I have the answer, and I know what
you do have
store
the
it
answer.
is.
I'm going Macy's.
Oh yeah, I think you're right. I think it is Macy's.
Man, we're good. 3 for 3. Yes, it is Macy's. It is Macy's.
I wasn't even there. It looks like a Macy's.
I was there. I was at the Orland Mall. We hit the mall.
Is that
Did you watch the parade? You watch the Macy's Thanksgiving Day parade?
Yes,
Yeah,
it
we
was
did.
it was good. It was really good.
It's a
Yeah.
tradition in our house. We got to watch it.
Yeah. All right. Hey, in other news, MIT finds that AI can already replace almost 12% of the U.S. workforce. The study was conducted using a labor simulation tool that was created by MIT and the Oak Ridge National Laboratory. And basically, they found that AI can already replace 11.7% of the U.S. labor market, or as much as 1.2 trillion in wages across finance, healthcare, and professional services. They simulated how workers interact across the country and how they would be affected by AI and corresponding policy.
Yeah, it's coming.
I think it's a little bit scary for these young kids trying to figure out what to do. You know, we were talking about, my daughter's always talking about what major should she go into. And so many people, it doesn't matter what major she says, people's response is, AI is going to replace that. Pick something else. Like,
Become a phlebotomist because a robot can't stick you in the arm. So
Oh, the phlebotomist. That's a great word.
job
Excellent.
security right there.
That is the number one AI-proof job, isn't it? Phlebotomist. Well,
I think so. It's up there. Yeah.
So my brother's a plumbing contractor, and he knows all. I mean, getting into the trades is not a bad thing because you can't be replaced.
There you go.
yeah.
The trades are not bad.
There you go. Get into it. Hey, in other news, this is crazy. ChatGPT launched 3 years ago yesterday on November 30th.
3 years?
It's only been 3 years. I was like, what? So on November 30th, 2022, OpenAI introduced a new product, and they said they called it ChatGPT, and then a whole bunch of things. But then I saw this on Twitter. So since then, since ChatGPT's release, the S&P has added 2,900 points, or $24 trillion, or $22 billion a day for 1,096 days straight. Damn.
That's a mouthful. That's insane. But all I kept thinking about while you're giving this story is, do you remember how excited Dr. Data was when this launched? He was like a little kid on Christmas.
Yeah. But how do you guys use ChatGPT? How do you guys use AI? So sorry.
I don't think I've ever used it, Vanetta.
Oh, I have have ChatGPT. I use it for everything.
Well, I use the AI system that Dr. Data created for our summarizing.
I mean, you can either use, well, now AI. So a long time ago, I did get ChatGPT like years ago. And so that was a better system. But now Google has AI built in.
Yeah, there's Gemini, there's Claude, there's Anthropic, there's GPT.
In the beginning, it didn't. So ChatGPT was the OG, and so I still sometimes use ChatGPT.
Right, and it's become kind of like the Xerox, where you say that you're using ChatGPT, but
you're using something else. Yeah,
right.
Yeah.
So it's like Kleenex or Xerox.
Yeah, like Kleenex.
AI.
Yeah.
But you don't use it, Jenny?
What do I need to use it for?
You're so smart, you know everything.
It's all up here, Vanetta. All in the noggin.
I used it to. I had a physical done, so I had some lab work, and I was like, "Hey,
that's fantastic."
I was like, "Hey, I'm a age redacted female, and here's my lab work. Like, what issues should I look out for?" And it analyzed all of my lab. Like, I don't know what Billy Rubin is.
No, but I think that's one of the best uses for it, is taking, medical records and just being like, here you go. Tell me in layman's terms, as if I'm a fourth grader, what this means.
Right. Like, am I going to die, or am I like the best human you've ever seen?
I'm going to go with the latter.
But also I have friends that use it for like meal prep. They're like, hey, here's all the stuff my kids like, what they don't like. Here's what I have. Like, make me a meal prep schedule for the week. I have people that have used it for like planning vacations or trips or.
Okay, so this is what we did the other day when I was going through party after party. So one time I was like, these are the ingredients that I have at my house. What can I make? And you just put it into ChatGPT and it'll give you, it'll combine all these things for you.
Clever.
I showed my mom how to use it because she hadn't read her book for book club.
Funny.
I was like, give me a synopsis of, whatever this book is. And then it did.
Honestly, the only time I'm really on my computer is trading. Every time I open my computer, it's into the trading platform.
Yeah,
that's about it. That's about it. So I don't know.
No,
but
now you're a known liar because you're on Pinterest all the time.
No, I haven't been.
Oh, Etsy. It's Etsy. Sorry.
That's just to shop. That's only to shop. I do a lot of shopping on Etsy.
I will say my favorite use case of this is this young lady on TikTok who's getting married. And she's like, I have $3,000. Here's a photo of me. Tell me what procedures I could get before my wedding to make me more attractive. And it analyzed her face and it was like, okay, based on this and based on the money you have, I would recommend these treatments. And so she's doing them and she's updating her progress.
That's awesome. Now that's something that you can sink your teeth into.
Now that's AI. Hey, a company called Databricks is in talks to raise capital at $134 billion valuation. I've barely heard of this company, but they're worth $134 billion. Sure, why not? They're in talks to raise $5 billion. That's a totally normal number. It's 32 times their expected sales.
I've never heard of them, but the logo looks familiar.
Yeah, I've heard of them, but it's an AI company. But yeah, they were founded in 2013 and they help users ingest, analyze, and build AI applications. So
I mean, they're not going public, right? They're just trying to raise capital right now.
Now they're just trying to raise capital.
I still think I want, I'm going to ask the research team for this, and maybe when Kai comes on, we can ask him. I want to see all the IPOs and what they did this year. I don't care about 20 years ago when I was on with Tony on last Monday. He's like, oh yeah, no, I was in IPOs. I was like, there was the 90s. I want to talk about now.
Yeah, I want a recap of the 2025 IPOs. I think that's a good request.
Yeah, okay, that's good data. We'll get that in.
Just glancing up, somebody said Databricks is like Snowflake.
Oh, okay.
Oh, so competitor to Snowflake.
Yeah, not the same, but just similar.
Sure.
Good to know.
Sure.
Hey, congratulations. Apple will ship around 243 million iPhone units this year. It's almost enough to give every man, woman, and child in America an iPhone. And that's versus 235 million shipments from Samsung. That means Apple iPhone shipments are going to beat Samsung for the first time in 14 years. Fear, fear, fear. Apple's success is being driven by its iPhone 17 series, which was launched in September. I believe Apple stock is down this morning.
So, Vanetta, does that mean for 14 years more people have been using Samsung than Apple?
Globally, yes.
Oh, because I get very frustrated in group chats when the dot is green, when one person does not have the iPhone, and then the chat throws the whole chat off.
So what countries are more predominant Samsung?
The rest of the world.
Hello?
Yeah, but what countries are more predominant Samsung?
Lost you.
Did you lose me?
No, we lost Vanetta. I think we lost Vanetta.
No, I got you. I got you now.
Okay.
Yeah, so Vanetta, what do you think? What countries are more predominant?
No, my Z.
Your Z-scaler?
Oh, no,
Yeah, my Z-scaler. I hate Z-scaler. Like China, Asia. Asia is a continent. But yes, China. But Apple's gained a lot of ground in China this year.
Huh. Interesting. I wouldn't have guessed.
What are you doing in Apple stock?
We don't have anything in Apple right now, to be honest with you. Apple's down a wee bit today. When you said down, I get it's down because those are facts. It is red, but it's trading 277. It's down like
barely, like a dollar, a dollar. But it's still. I think Apple's near highs right now, up at 278.
Okay. I thought it's been kind of a lagger. Hold on. I haven't looked at it in a while. Let me look at the chart.
Kind of a flyer.
Yeah, kind of a flyer.
Yeah.
Did you
bring Tim Apple?
Vanetta, did you bring any Intel news today?
I did not have Intel news. I have Micron news. But what is your Intel news?
Well, I don't know. It was up a lot on Friday. Friday, I was Black Friday shopping, and I didn't know what was going on, but it was up a lot on Friday.
I don't have a specific story, but Micron is investing $9.6 billion in Japan to build an AI memory chip plant. So we can look at both Intel and Micron this morning.
Yeah, we'll take a look at both. We will. Yeah, I think what I want to say Intel was up like $4 or $5 Friday, and Micron. What was Micron doing? I'll take a look at Micron. MU. Micron today is down from 236 to about 231, but it has rallied the last like 4 or 5 days. I mean.
Everything's kind of down today. I mean, the market in whole, everything's down a little bit today.
That makes sense.
Right.
With the tech stocks leading the down move.
Yeah.
As they should. Hey, this is crazy. The Amazon of South Korea apologizes for a massive data breach. It is publicly traded here, which is why I'm bringing it up. It's called Coupang, CPNG. They apologized over the breach of personal information from 33.7 million customer accounts. I looked this up. There's only 51 million people that live in South Korea. So 33.7 had their information breached. Whoops.
We'll have to look at that, Liz. We've never traded that CPNG.
Yeah, it's called Coupang, and it's the Amazon of South Korea.
So I sort of feel like we've looked at it. I had no idea it was the Amazon of South Korea. But yeah, it's down. It's low. It's a $27 product. You might have given us something to trade today.
Hey,
you might have did something, Vanetta.
Coupang.
All right, we'll take a look at that.
Hey, ChatGPT may be turning 3, but Tesla's Cybertruck is turning 2. Got a couple of toddlers over here. CEO Elon Musk once described the Cybertruck as Tesla's best ever product, but demand for the controversial pickup has dried up. It's basically the Edsel of the 21st century. I don't know.
It is the ugliest car I've ever seen in my entire life.
There are like 2 people in our town who have them, and then you know who they are when they're driving by because they're the only 2 people driving them.
It looks like somebody's carved out of a piece of soap. Like, remember when they used to be like, when we were little, this is what we used to have to do. They'd give you a piece of soap, be like, carve a car out of this. That's what the car would come up with.
I mean, it is like unconventional looking. My issue for me is that it doesn't do what they said it was going to do. Like, it gets stuck in like an inch and a half of snow. Like, I drive a RAV4. I'm fine.
Yeah.
Like, but if it had the capability, like if it was good off-road and it had, all of these proficiencies, I think it would be better, but it's not good at anything.
Yeah.
Yeah. I don't know. I don't know what'll happen. But I do like the Rivian trucks. The Rivian trucks are pretty nice looking.
Well, what are you doing in Tesla? Because Elon Musk needs to sell a bunch of these to get his $1 trillion pay package.
I don't have anything in Tesla right now, but we are long Rivian.
I'm long Tesla, and so is my son. And I'm long Tesla because my son's long Tesla, so I like to keep an eye on what he has.
Okay.
And what's Tesla doing today, Liz?
Tesla is down a little bit. I mean, it was trading 430. It's trading 424. So it's down, a couple percent. Nothing crazy. 0.5%.
UNH agrees to sell their South American business to private equity firm Patria for $1 billion. United Health Group has agreed to sell its last South American business to a Brazilian private equity group. What are you doing in UNH?
We don't really trade it. We kind of missed the whole UNH craze this year.
Yeah, UNH is a $327 stock. It's the ironic part about it is it's not as liquid. So we kind of follow liquidity and volatility. And I know there was a big UNH. It's been in the news, but it wasn't that liquid, was it?
Well, so it went from almost 600 down to 200, and I can't even remember. That was back in like April and May, and I don't even remember.
Yeah, because they were doing Medicare fraud.
There you go. That'll do it.
Scams.
So we avoided that. I mean, we never got caught in that, and I don't think we ever really got into it afterward.
Okay, I wasn't sure. But hearing that it's not super liquid, that just it makes sense. So,
yeah, and it's not so easy to trade for a smaller account. Like our show account is a smaller account, and
it's a $327 product. Now, granted, it's not $650, but it's still $327.
Yeah, maybe when it got into the 200 level, we might have been able to afford selling puts in there, but not now.
Well, congratulations are due. Never thought we would see the day, but the Bears are the new #1 seed in all of the NFC because the Rams lost to the Panthers. So the 9-2 Rams entered Sunday as the Super Bowl favorites and the #1 seed in the NFC. But the Bears, we didn't do it pretty, but we did it. And then Ben Johnson took his shirt off. That means the whole city gets free hot dogs. It's a whole thing. But we beat the defending Super Bowl champs, the Eagles. I was surprised our whole offensive line was out. That's neither here nor there. The Bears are the #1 seed. I say it's because of the Pope. I'm just happy to be here.
I know. Did you see the picture of the Pope wearing all Bears clothes?
Yeah, I don't know. I don't know what is happening, but it's fun. Like,
are you going to go get your free hot dog today from the Wiener Circle? You gonna make the trek up there, Vanetta?
I gotta go into the office after this, so probably not.
I just feel like everyone is on cloud 9 around here. My neighbors, people you see outside, everyone is just walking like they're, skipping through the streets, so happy about the Bears. No one ever thought this was going to happen.
No, I mean, literally no one. But I mean, it's a scrappy team. I love to see it. We'll see what happens because we have to play the Packers at Lambeau on Sunday. So,
well, I bet before the season started, I bet $50. That's it. I put $50 on DraftKings that the Bears would make it to the Super Bowl.
Wow. Okay.
I know. I don't know what.
I don't have a DraftKings account. I called my son. I was like, do you have a DraftKings account? He said no. And I wanted to make a bet.
What were you going to bet?
You can open a DraftKings account.
It's a slippery slope.
It is a slippery slope. Finally today, for my viral video of the day, speaking of football, they're adding flag football to the Olympics, the Summer Olympics, the next time that happens. But I saw this viral clip of a young lady who is quite the athlete. Watch this. Someone in the comments said you can tell she's under 25 by the way all of her, like her ACL, her ankle.
That's cool that they're adding flag football.
They're adding girls flag football to our high school this year.
Yeah, our high school added it last year. They're adding it everywhere. It's getting
That's
big.
awesome.
Mm-hmm.
I think that's great. Ladies, super fun as always. What's coming up next?
We've got Confirm and Send, Vanetta. Thank you very much for joining us, giving us all the news we need. We appreciate it.
Thanks, Vanetta. Have a good day.
Have a good day.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with forex on Tasty Trade. Get in on 80-plus forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Jenny, we are back, my friend, with Confirm and Send. Are you ready?
I am ready, Liz. We've got Confirm and Send, and then after Confirm and Send, is Kai coming in?
Yep. Then we got Kai. We got lots of visitors. We got Kai, we got Dr. Jim, we're going to have Ryan Grace, we're going to have Quinton. It's going to be fun.
Oh, I can't wait to see you put Ryan Grace through the ringer. I do have a lot of crypto questions ready for him.
I got to see him already last week. I was on with Tony last week. I was like, oh, I'll get in here. So it was good. But do you want to start Confirm and Send so we can keep this Boeing going?
Sure. Okay. December 1st. Can you believe it's December?
I can't believe. I mean, time is flying by. This was a really late Thanksgiving, though.
It was right. It is. I mean, the kids all went back to school yesterday, and it's December today.
Yeah, they'll be back in a couple weeks. Houses will be filled again in a couple weeks. All right, hit us with our first question, John.
Okay, is there such a thing as a Santa Claus rally?
Yes. Next. Just kidding.
No, I mean, we were just talking about it a little bit with Vanetta. And again, we heard Chris Vecchio say last week, it really is the week after Christmas. But I'm happy if December's up all month.
I do think there is such thing as a Santa Claus rally. I like the name. I think it's cute. I believe December's are, like you said, there was only one that you remember that was down. And the rationale is that you're supposed to grind up through the month of December. And self-fulfilling prophecy, maybe, because there's lots of things that have to end at the end of the year. Maybe that's why the Santa Claus rally.
And I'm not saying like there was only one down December. I just only remember one really bad December. In my mind, I remember one very bad December, but I'm sure I would love the research team to give us a take on December's, how many are up, how many are down, and by what percent.
I think your wish is their command. I'm pretty sure they're working on it.
Okay. All right.
All right. Number 2.
All right, I'm going to try my first long call spread and want to make sure I understand what I'm doing. If I buy a $5 debit spread, SPX 6805 call, and sell the 6810 call in the 0D to E for $3. So as long as the closing price of SPX is at or above 6810, I'll make $2. Is that correct?
Yeah, that 100% is. So you just think about it from that perspective. You're paying for it. You're paying $3. So the most you can make is the inverse. If it's $5 wide, you pay 3. You can make 2. If it's above your short strike.
And that's and if you're paying $3 for a $5 wide, that's probably trading right around at the money. You could expect this call spread trading right around where SPX is trading. We'll trade about 260 to 290, somewhere around there. So
yeah, it's almost wrapped around the at the money. It's right.
Yeah. So you need a little bounce, and you need it to end up above that 6810 to make that full $2. Now, if it bounces up a little bit during the day, you won't make that full $2 until the end of the day, and it's about to expire.
So we're assuming this is 0DTE SPX. Oh yeah, 0DTE. Yeah, it is. So that being said, it's all or one. So if this wasn't 0DTE and you did a debit spread in, say, 45 days, you need it above it at expiration.
Right at the end of the day.
At the end of the day, yes.
Oftentimes when we put in these 0DTEs, we'll put in a GTC to take a percent of profit. So if you're paying $3 for it, if you take 20% of your max profit potential, that would be, or even if you're paying $3 for it and you put in 20%, it would probably close for $360, taking $60 out of it.
Yeah, you could take less. You absolutely could take less. But to answer your question, you're doing it right. That is correct. Okay, number 3.
Is there a cutoff price for a stock under which you won't sell either puts or calls? In other words, is there a price level where it just makes sense to buy the stock?
So I think this is a common sense question. Don't you think, Jenny? There's a common sense slide, meaning that it's not necessarily a price cutoff. I mean, usually lower price products for sure. But if you're opening up, say, a $10 stock and you're getting $1 or $2 for the calls, I'm still selling, or for the puts, I'm still selling puts.
That's what I was going to say. It's not a price cutoff for the stock. It's more of a price cutoff for the option. So to your point, if it's a lower price product and you're still getting even 50 cents for those puts and you're in a really low price product, fine. But if you open up a product and the options are trading, 20 cents, 30 cents, well, then it's not worth the risk. But sometimes, I mean, you could remember when AMC was just a few dollars and we were getting a decent amount of premium for those options. So
that's where the common sense slide kind of kicks in.
Yeah. All right, great. Now, I think the next question is the last question.
It is. So the NASDAQ 100 rebalances at the end of December. Do you have any research on what happens to companies that are dropped from an index? I know when a company gets added, there's an increased demand from funds tracking the top 100 stocks. So it seems being dropped from the index could lead to prices falling substantially. Or is my read wrong? 2 companies that appear to be on their way out are Lulu and TTD.
Okay. So honestly, I don't know exactly what happens after the rebalancing. But luckily we have Kai coming in from our research team and we'll ask him. But it would make sense to me if a company's dropped that maybe it wouldn't have as much like oomph behind it. What do you think, Liz?
I would so I'm very happy that we do have the research team. We have an amazing research team here at Tasty. This isn't something that you or I necessarily track. It's very similar to when something's going in. It's not like you and I go out and buy it, right? We're traders. We're following implied volatility, but we're not necessarily going in and buying something just because it's going to the S&P 500 or even the NASDAQ. I'm sorry. So I'll be very curious to see and see what our research team has to say about this.
And
TTD.
like Lulu, did you know Lulu was getting dropped?
No, but once again, it's not something like that I ever even pay attention to. Now, we do look when they're being added. Remember when Robinhood got the nod, got knocked out, got the nod, got knocked out, got knocked out. So it was something that was in the news, but it doesn't necessarily, I'll be very curious to see what happens or what the last other two companies that were already knocked out did.
Yeah, I don't think TTD is that trade desk. I don't know that that's like super liquid or we trade it that often, but Lulu we do follow. So we'll have to make a mental note and see if it does tend to trend down next year.
Yeah, we'll keep an eye on it. And we've got Kai coming in, so hopefully he can ask that and we'll bring it back up again.
Yeah. All right, we're going to take a quick break and bring in Kai, so stay tuned.
Stay tuned.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Step into the futures arena with Tasty Trade's Active Trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
It's option. Jive.
Hello, everybody. We are back, and we have brought on, don't tell the others, but our favorite researcher, Kai.
Hey,
Hi,
happy Monday.
Happy Monday. Happy December. Welcome back.
Yeah, happy snowing day.
Yeah, I know.
Are you guys in Illinois? I heard a lot of people stuck in the airport from yesterday, the day before.
Yeah, my son was stuck there for hours and hours yesterday.
Oh, wow. Yeah.
Okay.
Did you go out of town, Kai, for the holiday?
No, well, we were just staying at home. We didn't even know the snow was that big. But my kids were having good time in the yard and the neighborhood.
We have in my backyard, we have a big sledding hill, and so the entire neighborhood comes to my my house when it snows. So we had so many people in and out. I'm gonna tell you, I love the kids in and out. My dog, not so much. He gets very angry.
Oh, really?
Yeah. It was fun.
My daughter spent literally 3 to 4 hours on the slope yesterday. I didn't even know how did she get so much energy from it. But when I asked her to do the homework, it's like, oh, I'm tired.
It's not often we get snow and like 20 to 30 degree weather. The last couple of years when we've had snow, it's been so freezing. It's too cold for them to stay out for long. But like this is the first time we've had big snow and warm enough weather for them to be out sledding.
Yeah, and it was sunny. The weather was beautiful yesterday.
Yeah. I had the big kids out there too. Annabelle and her friends also went, and JD went out there the day before. Like, it's fun. It's fun that they get back out there and in the snow. But you're right. I don't know where the energy comes from. I'd be done after one run.
Kai, what have you got for us today?
All right. So last week was a kind of quiet week. If we go to the first slide, let's go to the first slide. Nothing too much happened, like events or news. So in general, it was a quiet week with a very strong upside momentum, and trading volume was relatively lower than what we saw in the past couple of weeks because we have that huge down move in the past 2 weeks. And the second interesting thing is the rate cut probability actually bounced back to nearly 90% yesterday after we saw a quick reversal from 96% down to 55 or something, 50-ish percent. Then in three days, in three trading sessions, it bounced back to 87%.
All right. Yeah, that was a pretty quick turnaround.
Yeah. The main reason behind it is just try to keep it simple is all the economic macro news coming out. It was not bad. It was not good. It was just in line with the market expectation. So in that kind of situation, people expect the rate cut probably is going to increase.
But it's like bonds are down today. Bonds are down to 116 again.
Oh, everything is down. Did you see Bitcoin? Down 5%.
I know. Everything's down. Bitcoin's down 5%.
Oh.
Everything's down. Bonds down, market down. The only thing up is the metals. Kai, silver.
And currency.
And currencies, that's true.
Yeah.
Metals are strong, currencies are strong, everything else is down.
Finally, the yen, that's got to be helping people.
Yeah. The one trade that everyone is stuck with Tom. And this upcoming week, next slide, not too many things happening, but we have some economic index numbers coming out. PCE, core PCE on Friday. This is probably the most important one. Wednesday we have ADP, PMI, and other data coming out. We're gonna have the full data this weekend and the following week.
Are these still old though? Are these numbers from before, or are they new numbers?
I didn't check one by one. I think the full numbers started coming out.
Okay.
Yeah, this month.
This is it.
Fridays.
The jobs number probably not yet, but it will coming out the full number this month.
And is the interest rate announcement next week?
The 18th, isn't it?
No,
or the
19th. Yeah, 18th, 19th, right?
So
I want to say the 19th. I could be wrong.
Yeah, okay. So we've got not next week, but the following.
We have 2 weeks, yeah.
Okay.
I mean, 18th or 19th. I'll look into it, but I'll look into that and get back to you, Jenny. But I think it's 18th or the 19th.
Okay, so talking about indices, we had a really, really strong week. All four indices were in green, and can we go to the next slide? S&P 500 was up 3.7% in 4 trading days because the equity market closed on Thursday, including the Friday before, the total 5 trading days, the S&P 500 was up 4.7%.
Yeah.
Yeah, it was a big week last week.
It's technically only 3.5. I know it's 4, but it was a half day on Friday.
Oh my gosh.
Yeah.
Friday, it was killing me, Kai. I was Black Friday shopping and got home, I think it was like 2:00, logged into my platform, and I had forgotten that everything closed at noon.
Oh.
Rookie mistake.
Yeah, that's why everyone should tune into the research corner, because I put the trading hours for Wednesday, Thursday, and Friday in the last week's research corner.
Well, Jenny, you should have tuned into research corner.
You know what? Luckily nowadays we have that 24-hour trading. So Friday I missed things and I had some positions that were in the money, so I was assigned on quite a bit after Friday because I missed that noon close. But then last night at 7 p.m. during the 24-hour trading, I was able to close the stock positions I didn't want anymore.
That's good. That's good. So the Russell actually was leading the whole market, has a 5.6% to the upside, which is pretty big for Russell.
And I think Russell's down the most today.
Russell is down the most. Russell's down a full percentage point right now, and the rest of it's only, SPOOs are only down 0.5%.
Yeah.
So next slide, talking about the expected range, definitely is outside of the expected range. The expected move for SPX at the beginning of last week was 134 points because the VIX was still elevated from the move the week before. So at 23. Now it dropped to 16. This morning, I haven't checked in the past 15 minutes. It's probably 17-ish.
From now till the end of the week?
What do you mean? This is the VIX from yesterday.
Oh,
yeah, I'll check for you.
I've got my platform up. So VIX right now is trading 1796.
Oh, okay. So up to almost 2 points, 1.5 points.
But is that so? That's
and
where
the expected move is still 83.
Yeah, expected move 83.
No, 1796. Yeah, that's right now. It's 1797. So it's moving.
Almost 18.
Yeah.
Yeah. So probably the expected move after market open is going to be less than 1.5% with the 18 VIX reading. So this is much lower than what we saw in the past 2 weeks. 83 to 100 points in SPX. It happening any day, right? It can happen in 3 hours.
That's nothing these days.
And it looks like by Friday, by December 5th, end of the day, we've got an expected move of 83.
Yeah.
I think this number will change after market opens.
Well, when the market opens, it will change.
I see. Yeah, that's what
if the VIX change.
So like the SPOOs, which are open right now, have an 89. So I think the number will go up once SPX opens.
Yeah. But you're right. We see those kind of moves in a day.
Yeah.
Talking about the IVR last week, definitely majority of the assets we've seen the decreasing implied volatility. So euro, gold, I wouldn't say they changed that much. Pretty much the same.
Yeah, they're down. Everything's down.
Yeah, if you sold puts, last week was the best week ever.
Yeah.
Okay, next slide. One thing I want to emphasize for what happened last week is definitely the overall market. SPX rallied 3.7%. That's actually top 5 percentile a weekly move. This was the largest move since the April rally, and then the before is years ago. So they're only less than 5% of the days or weeks we saw this more than 3.5%, 3.7% rally.
It didn't feel like it.
Because not too much trading volumes or activities, right?
Yeah. Well, it felt like it was only certain products. It wasn't like everything across the board. It was certain products were up and some weren't. I don't know. It just seemed like a selective group of products up so much. I don't know if it was across the board. When you look at what was up, did you see certain sectors up more than others, Kai?
I didn't check sector by sector, but AI only rallied a little bit, not too much.
Mm-hmm.
Definitely not near the high yet.
Yeah, right.
Right. Kai, we were asking, Liz and I were talking about this, wondering if you can get this for us. A list of all the IPOs from 2025 and then what they did from their IPO day till the end of the year.
Oh, we haven't done anything similar to this, but we definitely can look into that.
That'd be awesome. Thanks, Kai.
Yeah.
See, we asked you live on air, so you can't say no.
Of course, yeah. Sure.
Sure. Okay,
Yeah.
next slide.
Next slide, the top 5 and bottom 5 performance from S&P 500 in the last week. Definitely, we see more greens than the red, especially the numbers are much larger. Intel leading S&P 500 up 13%, Hood 12%, CMG 11, Dollar Tree 11. We're gonna have Dollar Tree earnings on Tuesday. STX up 9%. And then look at the downside. Almost nothing was going down.
You're right. Except NVIDIA,
down
but-
3%. That's the largest one.
And that was last week. So like with the S&P up 5% and NVIDIA is such a big part of it, and NVIDIA was still down.
Right. And if you read this table every single week, normally we see this like a 18% or 15%, but this one's the largest move is only negative 3%, which is
that's nothing. And I mean, you have something on the list that's like a 0.1%. It's not even.
Right. HPQ is 0.1%.
Yeah. Interesting.
Yeah. So the last couple of slides, we're going to talk about the earnings. Earnings last week was also in green too. Zoom. I just put some double-digit movement in the last week. Zoom was up 10%. ANF was up 38%. The next day.
Wow. Yeah, it's rising like a phoenix from the ashes. They said it was its Hollister brand that is making ANF go up.
Crazy. Well, I think this week, do we have American Eagle this week? I wonder if that'll follow.
Yes, we have.
Yeah, I wonder if that'll be similar. So it's 38%.
Well, all the retailers were up last week. Like any retailer was up. So you can see Urban Outfitters. I think Kohl's was even up too. So like most of the retailers went up.
But this is probably the biggest post-earnings rally I've seen for months. I haven't seen anything rally like more than 40% recently.
Yeah.
30 is huge.
Yeah.
And Urban Outfitter, it's another retail one is up 14%.
Yeah, that's kind of crazy.
The rest are kind of in between 2% to 5%. It's kind of within the expect range. If you sell any Iron Condor or Strangle, it should be good.
Yeah.
And what do we have coming up this week?
I have that in the last slide.
Okay, let's go to the next slide.
Yeah, next slide is from the long-term view for this season, earning the third quarter. So far, we have 3,300 companies roughly announced the earnings. So there's 100 more additional to the week before. Pretty much the stats didn't change at all because we only have 100 companies announce the earnings.
You know what's crazy is looking at the numbers. Like you said, there's 53% were losers, but the losers were so low.
Yeah, it's only negative 0.3%. But I've been doing this for the past 4 years. If this number is higher or lower than 0.5%, that's actually considered big in the past 4 years.
Okay.
Yeah, for the quarter. So 0.1, 0.2 is probably the most what we saw in the past couple of years. 0.5 is a really big number. But on average, you're going to see very close number to 50-50 or 49-51. That's the most commonly seen.
Yeah, for sure. 49.51.
Yeah, so this coming week, the earnings, we actually have some interesting earnings coming up this week. As you said, we have the American Eagle tomorrow after market close. Marvell is Tony's favorite, right? One of Tony's favorites. CrowdStrike, which caused a lot of problem, which is definitely one of the most traded for Tuesday. Okta, I don't know if you traded or not.
Yeah, we've traded OKTA.
Oh, okay. Retail Macy's, we have Dollar Tree, Tom Hayes, Salesforce. We have Snowflake, that's a popular one too. AI, Dollar General, DocuSign, Ulta, Tony's favorite again.
I'm glad you read Snowflake. My eyes cannot even see that.
So what did NSA today is a competitor of Snowflake or something similar?
Oh, that was that deck, something deck that was going to be that they just raised.
Yeah.
Something that they raised, I don't know, $340 billion or something.
Triple deck or something like that.
Triple decker or something.
Yeah, that's it.
I mean, these are decent earnings, and you do have a lot of the retailers on there, which should be fun to watch.
Mm-hmm.
So, Hi, thank you very much. On a side note, we had a confirm and send question. We don't need to bring it up, John, but we had a confirm and send question that was asking, and we're gonna ask you this of the research team as well because it's live on air.
No matter what you said, I would say yes.
Good job. Okay, but so the question was asking what happens to stocks after they get pulled. So the Nasdaq 100 gets rebalanced. What happens to those stocks when they get pulled? Do stocks
do they tend to go down after they get pulled?
No, we haven't done a study. I believe we had a conversation or we have a short piece talking about when you add it into the Nasdaq or 500, but we didn't do anything that's if you got to pull out from the S&P 500 or Nasdaq.
Yeah, no. And they were saying Lulu and what was it?
Trade desk were being pulled.
Oh, trade desk, yeah.
But when from your old piece, when something gets added, do you find?
I don't remember. I didn't do that one. I'm not even sure that one was launched or we just in discussion.
Okay.
Yeah.
So the answer.
Well, maybe we can do something like that for December. People looking forward to what happens after the rebalancing, stocks that get added, stocks that get pulled.
Yeah, when we meet this week, we can talk about it.
Sounds good. Thank you very much, Kai. We appreciate you coming on. We are gonna maybe take a short break before opening bell.
All right. Yeah, thanks so much, Kai. Have a good day.
Peace trading.
Global markets never sleep. Explore them with forex, now available on tastytrade. Get in on over 80 forex pairs, 24 hours a day, 5 days a week, with the forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look at this, Jenny. We are coming in, sliding. We've got this like 3 minutes in live show is an eternity before the opening bell.
Oh, yeah, we've got 8:27 and the bell rings in 3 minutes. But let's hop into the platform and see what we've got going on, see what the market's doing.
So, I mean, we were talking about this all. I was actually going into our positions, but we can take a look at this. SPOOs are still down 45. NASDAQ's down 220. The percentages, and I think you brought this up, the Russell is leading the pack to the downside, which was the exact opposite of what was happening last time. Russell's down a full point over a percentage. Everything else, it's bonds down, it's oil up, metals up. That's it. Everything else is down.
Is oil? Oh yeah, oil's up, metal's up, and then Bitcoin, which you can see down there. It's weird. It says it's up, but we know it's not. I know yesterday earlier it was 91, and then now it's 86. So even though it says it's up it's maybe up from the point that it resets, but it's not up from Friday's close. That's for sure.
It definitely is not. And that's just it. It's crypto. And I only have I have the commercial in my head. Crypto never sleeps, right? So this is the product that never goes to bed. We just don't know when it resets, but it for sure. That's why when I look at my account, I'm not trusting the fact that it's up. Like to your point, it was 91 yesterday. So this is definitely down.
Yeah, crypto, you just need to know the numbers. Like I feel like I know the crypto numbers more than anything else because that's the one that you have to, like you said, it doesn't reset in the morning. It doesn't reset in the morning. Or I would say to Liz, like, oh, did you see crypto's up today?
Because it's not. This is true. It's not. So yeah, I mean, this is it's pretty interesting. So this is all down. I don't necessarily know. We've been staying in this range. I saw the SPOOs rally. I use loosely, but to only to be down as little as about 35. That's the highest point they made during our morning show.
Now, on a down day is when I'm more likely in SPX and those 0 DTEs. I have been taking a page out of Liz's book and doing more of like the 50 delta, $10 wide. But on a down day, I'm more likely to go and sell a put spread, maybe 30 delta or 25 delta, go a little bit further.
And there's the opening bell. I'm very excited. Okay, so let's see. I kind of agree with you there, but we're not going to do our SPX trades until about 9 o'clock because give or take 9 o'clock.
No, but I'd like to look. I'd like to look in 30 delta, $10 wide price now and compare that to now and 9 o'clock.
So that's also our market measures, by the way. It's the 20 delta, $30 wide.
Okay. So like if you go to the trade page 0 day and just look at 30 delta, $10 wide.
Do you know what I'm kind of shocked by? Oh, we're in 0 DT. Never mind. I just wanted to look at something real quick because it's top of my mind. So it was 83 with the volatility with the VIX up and peaking its wings up. Now it's about an 84. That's the expected move for the week. So I just wanted to compare apples to apples. Now we'll go into your 0 DTE, close these, and go to the 0. You wanted a 30 delta?
Yeah, 30 delta. And for me, I'm more of a baby. I might make it $15 wide. And I don't like to make them too wide. So then I guess that's just $1. What is the $10 wide? So yeah, I don't think that's worth it.
That's nothing. That's nothing.
I don't like.
No, I don't think it's worth it either. Actually, I like bringing them up a little bit. I want to see what the VIX is doing. VIX is up 10%-ish, just under 10%, but it's still not 18. We got pretty high last week, Jenny. That was 2 weeks ago. Last week, the market was just inching up, so the vol was inching down. We're, nothing there. Oh, you know what I wanted to do real quick? Only because it's been a topic of conversation. Let's take off our yen position.
Oh, yeah. Yeah. Good idea. Good idea, Liz. If you go to the, okay, so we'll take this off.
Did you want me to do it real quick?
No, I was going to say, go to the chart and you can see the move that yen has been having. It's not just today. It's been like last week. We've got this little bounce. I also wouldn't mind taking a look at our TastyFX because we put in a USD JPY position there and we didn't put in a GTC. We said we were just going to leave it. So that might be able to come off.
Okay, so that's there. I'll go to TastyFX. Let's take a look.
Just our USD JPY. I don't think any of the other ones have come in at all, but USD JPY, yeah, see, it's up $76. We put that on last Thursday with Glenn.
How do I close it?
Can you click on it?
I don't know. I can't.
Yeah. Kind of got to drag it a little bit to there you go.
There we go.
So Glenn will be happy to hear we made $77 on that.
Yes, and so those are the rest of our positions. This $1 if we want to close it, we can. We'll hold on to this with Glenn. So we got out of one profitable position, and I'm glad we didn't put a closing order in for that.
Right, because go to the trade page just to see the move. The move in the like in the FX. If in the USD, you could see in our little position the USD JPY
watch list.
Yeah, you got to go to watch list, click USD JPY, and then trade page to see when Glenn was on last Thursday.
Here.
Geez, it hasn't really.
It hasn't been, it's not much of a move. That's what I was going to say. And you can see it in the 6J as well. That's, I mean, they're all.
I mean, the 6J is with, 6J is against the USD. So you can see it's not that much of a move. I'm surprised we made $77 on that, actually.
But I think we put it on about here.
Yeah.
So it's not, we made a little bit of money on it. We didn't risk too much, but we did make some money. So SPOs are only down 39. It's not bad. We're doing, I mean, honestly, it's getting a little bit of a rally. All right. What do you think is going to happen today, Jenny? I'm going to look at our positions while you're in here, while you're telling me.
Well, the fact that the VIX is up, when the VIX is up, and now again, SPO's down 40, we'd expect VIX to be up. I guess we're only trading 1776, so that's nothing crazy. But to your point, I think I'll wait till like 9, a little after 9 for things to shake out before I put in my SPX trade.
So I wanted to show you too, just because last week, anything that got 7 days ago, all symbols. I guess CMG, our GTC hit, and that was about it. I pushed everything out that was done. Was that possible 7 days ago? Let me go 14 days ago. Because I know we had our GTC, our bonds hit. Some of our other GTCs have hit. I didn't really do much trading last week because I was, I had, guests on for everybody, and I was on the morning show on Monday. So this account got monitored in the fact that I was keeping an eye on anything that needed to be done, but nothing new. We kind of talked about natural gas today with Vanetta as well. So we need natural gas to 5 in the next 25 days, which is looking good.
Yeah, hopefully it doesn't blow through 5. It's not, what did she say is coming?
A polar vortex is what she called it, something else. Snowmageddon. It's not Snowmageddon, but it's about to get real cold real quick.
Is it really?
That's what she says. I mean, and if Vanetta says it, it's gospel. It's got to be true.
No, I don't like to hear that. I really don't. But I don't know. I don't know what to say. I really don't like to hear that. I don't like cold weather. But I just pushed out our closing trade for the euro.
No, and this is what I was talking about. So we got assigned on
our yen trade.
So we are just long IBIT. We're going to have to address, we can address that now if we want to, but this is what I was talking about with the position limits. This is what is being, the position limits that are being, they're asking for 4 times. They want 1 million position limit. And that's pretty crazy when you're looking at this. Now,
I don't know. Is it 1 million, 1 strike, 1 cycle, or is it 1 million total position in IBIT?
Jenny, you got to keep in mind, when I did this, number 1, IBIT wasn't around. Number 2, there was no cryptocurrency.
Yeah.
And we only had 4 sets of strikes. So I don't know. So is 1 million a lot now for position limits? It's just something that caught my attention when it was a news line that went across, because it was something that I used to do where I was like, 1 million seems excessive, but that's how much volume is happening. So take a look at this. IBIT just opened. We have 9 million shares. I'm going to go to SPY. So, and once again, position limit doesn't have to do with,
by 3 million shares, a third of IBIT.
That's how many eyes are on IBIT, which is insane.
I'm anxious to get Ryan on today because, I didn't expect this. Did you expect crypto to fall right back down, to lose everything it gained last week?
No. Now while we've got this, because we have about 30 seconds left. Look at this. It's dropped completely. We spent the whole week trying to churn it up, only to have it come down. And to be honest with you, what I love about Ryan is I want to know why. Why, Ryan? Why? That's all we're going to ask. One simple question. Why?
No, it is the first of the month. I don't know if there was any kind of roll happening, but let's get rid of our stock because that does use a lot of buying power. You could see the fact that it says trade price 52 means we were assigned on a short 52 put. I think we had a short put spread, 52 something else, and one was in the money, one was out of the money, which is why we came in long 100 shares of stock.
So we always spread it off for sure, but I think this was a Jade Lizard type position. The call spread we didn't need to worry about, but we did actually, I'm sure we bought some things. You got to figure we collected about $1 on it. So we got strike 52, but we probably are in at 51. So we're down about $200 here. But
and what's so annoying? Take a look at where IBIT closed on Friday. This might have just barely, where did it close on Friday?
So on Friday, the close was
51.55. And so at some point on Friday, this was out of the money. You could see the high on Friday, 52.85, the open 52.80. So that was all out of the money on Friday morning. And it was just barely in the money for us to end up taking those shares.
Correct. And I'm not gonna lie to you, I didn't look at it Friday.
No, I'm not saying shame on you. You should have looked at it.
Sounds like you're shaming me. Shame.
Shame. Listen, you got to close this.
But we are going to close this now. We're going to take this stock and we are going to close this position. Now, do we want to get back into IBIT? I actually think yes.
Yeah. Close this. And this stock holds a lot of buying power.
Look at this. It's pennies wide too. So, there we go. So we got filled at 49.11. Now, I'm going to go, let's see. What we have been doing is kind of going backwards with the Jade Lizard. Now, this is in the 2 days, so it's going to be very, 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 very close. But it's fine. Like, we're down lower in strike price. Let's just do something like this. This is selling premium. It's got a 62 rank. I have to tell you something tomorrow too when we're at the CBOE. It's nothing, but with Kai's study, do you know how we're like, when we look at those, and we see the percentage of the IV rank up or down?
Yeah.
It's not, the percentage goes up or down that much.
Wait, what?
I'll show you tomorrow. I was going to do it with Kai on, but I was like, I just got to wait until tomorrow. So I'm sending this. Hopefully we can get filled on that as well. Jade Lizard-esque type position. The other thing that we are kind of struggling with right now is our ETH position. Do you want to get in? I know we got to wait for Dr. Jim in a minute. Do you want to get back into bonds too? Because bonds are, let me see.
Yes. Yeah. If there's an 80, go up, they're like 116. If there's an 87% chance they're going to lower rates, are you surprised everything's taking this hit? Let's take a look. So bonds at 116.10, we've got a 9.9% implied volatility. And then what about notes? What's the N? So like in TP's world, he would be selling put spreads and notes just because it's whatever's higher. Like if you take that 5.2 and double it, you're going to get 10.4 in that 25 day and then what is it in ZB? If it's less than 10.4.
It's 10.1. I think it's dealer's choice.
Yeah, you could do either. You could do.
And I kind of like sticking in ZB. I don't know why. It just makes me feel a little bit better. But let's
fine. Right, just keep it at the 116 handle.
I'm gonna go 116, 115. We're collecting $390, $608. Yeah. I don't mind.
No, ship that. I'd ship that. Our last ZB put spread that came off our GTC got hit.
Yes. So that I'm not saying I want to make sure we get filled, but I'm going to take it down to 24.
Yeah, we're getting $375.
And we're filled. Okay. Very good.
And I'll get that pushed out too.
Okay. Then we are, like I said, I want to just look at ETH. We're kind of taking a little bit of heat on that. We've got a larger position in there. That's got 18 days. So we don't necessarily need to worry about that. Other things that I wanted to take a look at, SBET, same thing. It's a... SBET.
I closed all my SBET and just said...
Take a look at this. We got assigned an SBET.
Oh, I got rid of my SBET.
I don't disagree with doing that. We'll close that.
Let's ask Ryan about SBET.
Yeah. That's a great idea. We're gonna shake Ryan down.
So Ryan, what is about SBET? We'll ask him.
Now the down market is picking up a little bit of steam and everything else. Russell seems to be staying down about only 1%, but we're down, almost 0.6%.
NASDAQ almost 1%.
Mm-hmm. Yeah. So,
where's Microsoft? Will you do me a favor? So I was assigned on Microsoft calls, and I sold out my stock last night at 7 p.m. when the 24-hour trading started, and I was just curious to see where it is now. Okay, so I sold it last night at like 488.
It's right there. It's not too crazy.
Yeah, it's nothing like crazy.
All right, Jenny. So let's take a very, very, very short break, and when we come back, we get to invite Dr. Jim in the house. Are you ready for him?
All right. Yeah, I am ready for Dr. Jim. Stay tuned, everybody.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
Hello, everybody, and we are back with Dr. Jim Schultz. Hello, Dr. Jim.
Hi, Jim.
What's going on? Good morning. I mean, what an uptick. It's like, when you come on to a Monday morning, when I come on to a Monday morning, I'm expecting Tony, I'm expecting Nick, right? And so it's like, man, like I'm just expecting the market to be down pretty big. But then when I come on and it's you two, it's like, we just had a reversal. Like now we're slightly green.
Look at that. We're up. Now we're only down 35. I'm sensing a rally.
Not bad. Not bad.
Rally, get your stock.
Yeah, Jim, do you know the rally song? There's a rally in the alley, get your stocks.
No. Where did that come from?
I'm pretty sure we made it up. There's a rally in the alley. There's a rally in the alley. There's a rally in the alley. Get your stock.
Oh, that's great. That's great. Yeah, no, I like that.
We would sing that on the trading floor.
That's so funny. Oh my gosh.
All right, before we talk about anything, we're gonna give a huge happy birthday shout out to your dad, Dave Schultz.
How old is he today?
So my dad, Dave, is 85 today. My dad is 85. I talk to him almost every single week. And obviously I'll be giving him a call today, and the kids are super excited to call him and wish Papa a happy birthday because he's the oldest person they know. Like when they read about they had just assumed like when he was a kid he had like a pet dinosaur. Like they just assume that like he goes that far back, and so it's really funny to like talk about all that and stuff. And so it's great. I love it.
That's really cute. Well, happy birthday to your dad. That's he's 85 years young. That's a good compliment.
Yes, 85.
Will you go to Detroit over the holidays at all?
Probably not. Just because I mean that's such a major trip for us. We're gonna try to. Plus, why would I? I mean, Jenny, you know, it's paradise right now. Like, why would I leave paradise? That doesn't make any sense, right? But next summer is when we're gonna try to go, maybe June or July.
Dr. Jim, I don't know if you know this or not, but in the morning with Vanetta, Jenny has threatened to come to your Options Crash Course Live to get out of this weather. It's this Sunday to come to Paris.
What an amazing segue. Yes, it is this Sunday. It is this Sunday. Thank you, John, for the art card there. This Sunday. Like you can still sign up. I mean, we've got lots of people registered. It's going to be absolutely amazing. I can't wait. It's the final event of the year, and it's going to be awesome. Like if you're a brand new trader, this is for you. But even if you're a seasoned veteran, you've been trading for a while, my hope is that we can still drop a few breadcrumbs on the trail that you can pick up that can help you. So it's going to be awesome.
Have you been to this theater before?
No, I have not. But Errol has. Errol's been there before because he used to live right by there.
Oh, no way.
And so he said it's pretty solid. So I'm excited.
Jim, I've said this before. You, as far as all the shows, all the speakers, in my mind, you're the best. You're the best speaker that Tasty has. So if you don't have tickets yet to go see Jim, sign up and get your free tickets because he's amazing on stage. Amazing.
Wow. Thank you so much.
Extraordinarily engaging on stage. So I don't think that people realize that. So you can bring, that's what I was going to say, is bring friends, bring loved ones, bring people, because you keep the level of attention up.
Well, I appreciate you, man. I appreciate you guys so much. Can we have you guys on every Monday?
Yeah.
Like, John, can you put that in the calendar somehow? Like, I think we found our new rotation for Monday morning. I mean, this is amazing. Look at you guys.
But I have tried to tell the Einstein story to my family. I must be missing parts of it because it doesn't go.
He's the world's worst joke teller.
Oh my gosh, yes. Oh yeah, the Einstein story is a classic, absolute classic. It's actually an inside joke between me and my wife. So like whenever I like if I have to like speak in any type of capacity in some environment like at church or something like that to where I've never done it before, I always joke with my wife. I'm like, well, I'm just gonna lead with the Einstein story and then just kind of go from there. And she's like, don't lead with the Einstein story because she's heard it so many times, just like you guys have. But it's a classic. It's an absolute classic.
My favorite, which we use all the time, is, I know you don't know, but if you did know.
Well, yes. I may bring that back. I'm not going to bring that back this Sunday, but maybe next year because it's been a long time. And so, yes, that was, yeah.
Oh, and the window sales. The window sales. I love that one.
Yeah, I mean, man, that's the way back. I was 18 years old.
Is the window sales? I know you don't know, but if you did know.
Yes.
It's the same story.
Yes. And I still remember that. I still remember it working. I still remember it not working. And it was it's crazy. It was a crazy time in my life. And so that was a lot of fun. But are you guys ready to do some finance this morning?
I mean, I guess if we have to.
If we have to. But I think John's making us. He tried to start the segment a couple minutes ago, but then he couldn't
try.
do it.
I saw.
Did you see that?
I know.
That's so funny. It's like, no, John, we're not ready yet. Okay, so here we go. We're going to go kind of theoretical this morning, and I'm going to be very curious to see what you guys think about this. And you guys are going to be tested here in a couple of minutes, so I hope you're ready.
Great, but I'm going to tell you, I'm going to heavily rely on you guys because option pricing models, I believe everything's fairly and efficiently priced. So if it's up there, I believe it to be priced right.
Okay.
Now, Jim, you're the finance professor. Tell me if this is accurate. My son was talking about like, oh, my friend at school, he's so smart. He's like studying theoretical math. And I said, oh, like the Black-Scholes model. And I looked at me like I had two heads. He's like, no, Mom. But isn't Black-Scholes kind of theoretical math?
Oh, absolutely. It absolutely is. It absolutely is. But you have to differentiate between take me and then take like Jacob, right? Jacob is like theoretical math. I'm theoretical finance. And so there's a very big difference between finance and math. Okay. And so it can be a little territorial too. And so that might be what the feeling that you were getting there, where kind of the math guys kind of think they're kind of a rung above us, which I don't necessarily disagree with that.
The math guys think they're above theoretical finance. So theoretical math.
If I had to guess, and you can ask Jacob, I mean, maybe he would have a different take on this, but yeah.
Where do we put Julia?
Oh man, I don't know. She's kind of like the all-star quarterback. She's kind of like the rogue.
I think she's both, right?
Yeah, because I can't remember what her MS is in. I'm not sure if it's in math. I think it was in physics. Wasn't it in physics?
Yeah, I think she's.
Yeah, she's a whole different deal. Like I think she's several rungs above both of us. Yeah. And so yeah. But yeah, theoretical math and theoretical finance are not the same thing. There's a lot of overlap, but they're not the same thing.
Just to set the hierarchy before this segment, and then we can get to it, John. So like Dr. Jim, theoretical finance, Jacob, theoretical math, Julia, theoretical physics, traders.
Well, not really. I see. That's funny, but I would actually, of course, flip that completely on its head because we're the ones that sit around and just argue and talk about like how to actually do it and why it might work. You guys are actually doing it. Like you guys are actually out there, like actually doing the thing.
But
We're
we
just
always say
theorizing
we
about
don't
the
need to
thing.
know how the sausage is made. Is it an efficient market? Then we trust it.
Well,
So
here we
it's
go.
really fun.
That's why this segment is perfectly timed for this morning. It's absolutely perfect. All right, John. So we might be ready now. I don't know. We'll give it another shot. I mean, who knows? So let's go to the intro slide. So are option pricing models realistic? Okay, well, let's talk about that. All right, John, go ahead and kick us off here on the first slide. So every research model developed in any field has to make certain assumptions that allow the model a certain degree of applicability to reality. Real life, and especially the financial markets, is a highly complex structure that is living and breathing and downright messy. So let's look at the grand poobah of all option pricing models and gauge just how realistic it is or isn't. Do you guys think it's fair to say that the financial markets are messy?
Yeah.
Yeah. Sure.
I think it's fair to say they're messy. I mean, you know why I think that's fair to say they're messy? Because I always say they're like a toddler. You never know what you're going to get. Like you really, truly don't. Like you could say you're going to wake up this morning and you're going to put your nice clothes on and you're going to go to church. Then all of a sudden you turn around and they've rolled in the mud and they've got a jelly donut in their hand. Like that's exactly what the markets are.
I think you're describing my house every Sunday morning, actually. Yes, that's 100%. Like, why are your feet so dirty? A million every single time. I mean, Jenny, yeah, we all remember with our kids.
Yeah.
I mean, 100%.
Yeah.
And so, okay. So, yeah, I think it's a fair way to put it, even with the efficiency and all those things, which obviously we're going to talk about that in a few minutes. It's a living and breathing thing, man. It's a living and breathing thing. And it's like, here's another good example. You have this relationship that we can all appreciate between market prices and market volatility, right? We know that 95% of the time or more, they're going to be inversely related. That's very reliable. We know that. But does that mean that has to happen every single day? Not at all. Because they are their own entities at the end of the day. You will have days where the market is up and volatility is up. You will also have days, they're not as common, but you'll have days where market is down and volatility is down.
Yeah.
And so even though we have this reliable relationship, because they're living and breathing, it's not necessarily 100% going to be accurate every single day.
I agree.
Okay, so John, hit us on the next slide. So let's take a look at the Black-Scholes option pricing model. And this will help you guys, right? This will help you guys as traders. You guys are doing the thing. I'm going to help you guys. So just in case you're at like a holiday party later this month and you find yourself in a conversation at the Punch Bowl about option pricing models, you're going to be able to break it down very, very simply. So here you go. The Black-Scholes option pricing model is actually, it's very complex.
I'm going to have this folded up and in my back pocket just in case this comes up.
That's all you got to do. This is post-it note stuff. This is this is icebreaker stuff, right? The Black-Scholes option pricing model, very complicated, very complex. But if you break it down, all it's really doing, the two terms in the equation, I mean, there's probability density functions, there's D1, there's D2, there's all kinds of crazy stuff going on. But all it's doing is it's measuring a probability weighted value for the stock and a probability weighted value for the strike. And it's just looking at the difference between those two elements. That's all it's doing for calls or for puts. This is the equation for calls. Puts would obviously look a little bit different, but that's the basic idea behind what the model's trying to figure out. That's how you get intrinsic value. That's how you get extrinsic value. It's just looking at probability weighted values, stock price and strike price. It's really that simple at a very base level.
I like it.
So this is what we're talking about when we're talking about the Black-Scholes model. Okay. All right. I'm ready now. Let's go. You guys are now going to be tested. Okay.
All right.
Here we go. So here are the six main assumptions of the Black-Scholes option pricing model. And I have the answers on the next slide, but I want to see how my traders are going to do this morning. So I'm going to keep score. I got my pencil here. So here's what I want to know. You guys have to tell me, is that assumption of the model realistic or not? Based on, you guys have what? Decades of experience now, right? Decades of trading experience. So you guys should get 6 out of 6. There's no reason why you shouldn't get 6 out of 6.
Can I ask one question before we go forward?
Sure.
What does GBM stand for?
That's what
I'm
I was
gonna
going to ask. That's what
I'm going to get to that. Don't worry about that. You guys are putting the cart before the horse. You guys need to focus all your energies on question number 1. So
Okay,
question number 1.
Wait,
The
no,
first
hold
assumption-
on. I also need a definition of what realistic means.
Is this what we actually see in the markets?
Oh, okay.
Like, do you think this actually represents what happens in the live markets that we trade every single day? That's what I'm
so
looking for.
theoretically realistic. Okay.
No, practically realistic.
Okay.
Again, this is like, is it me, Jacob, and Julia in an ivory tower theorizing about what could be? That's not what I'm talking about. I want to know, is this actually what happens in the markets that we trade every single day?
Okay, I'll say the log normal distribution, realistic.
Yes, I'll go with realistic.
Okay, so the first one you say yes. The first one is
Yes.
realistic. Okay, all right, beautiful. Okay, European style options. Now let me be clear about this.
I was going to say I refuse to answer on the grounds that might incriminate me.
Let me be clear. Let me be clear. The Black-Scholes options pricing model, the Black-Scholes option pricing model assumes all options are European style.
European style,
So
right?
cash
So
settled.
yeah, I'm gonna say yes.
So cash settled. They assume that it's going to whatever price it ends at, right?
Correct, but they assume that there's no possible assignment before expiration.
Correct. Okay. Yes. Then I do think that you have to pick one or the other. So yes, I'm gonna go with yes.
I'm gonna go, Liz. I'm gonna let you in on something. I think I'm going realistic across the board. But
I want to help you guys out. Let me help you guys out because you're floundering here. We're only on question number 2. Remember.
I'm gonna go with yes. No, you have to.
Wait. Hold up. Remember. We're talking about all options.
Yes.
We're talking about all options.
Well, it's very rare that you get early exercise, so I'm going with yes.
It doesn't matter if it's rare.
Oh,
it
then
just
I guess
has to be a possibility.
Well, okay.
Then not realistic. There is a possibility that you will get assigned.
Yeah, sure. All right, then we got to go with no.
Yeah. That's why I asked what the definition of realistic was. There is a possibility that,
this is why I'm here. I'm here.
Then I retract number 1 because there's a possibility to get outside the log normal distribution.
Well. Okay. No, this is great. John, put them down on the calendar every Monday moving forward. This is amazing. I don't want Tony and Nick back. Tony and Nick are gone.
So if there's a possibility of anything, I'm taking
No, you're misrepresenting the position. It's not about what's possible. It's about what is the practical living and breathing thing that we trade every day. Because it's possible that the NASDAQ goes down 1,200 points today, but is that practically going to happen? Oh, again, it's possible, and not really, right? And again, I'm not to say it's not going to happen, but you guys know what I mean. So again, the log normal distribution, let me help you guys out. You guys got that one right. So don't go back and retract that.
Okay.
Stock prices are log normally distributed. Like you can't even argue that. Like that's kind of a statistical fact. Right? Okay.
Well, good thing we didn't get that one wrong, Liz.
Okay, European style. I had to coax you and help you a little bit. Okay, but okay, so you've changed your answer to no. Okay, great. Okay, number 3. Now there's no more help from this point forward.
Okay.
Number 3. Financial assets follow a geometric Brownian motion sequence.
Sure. That's realistic. We all love the Brownian motion.
We love a good geometric.
Not just any Brownian motion. It's a geometric Brownian motion.
And for sure, yes.
Oh my gosh, can I tell you guys? So since we're totally off the rails this morning, let's stay off the rails. Let me tell you guys a super funny story. Oh my gosh, this is so funny. So this was back in 2016. I had just joined the Tasty Network. And so I was super excited. I mean, just like I am still today, but everything was new, whatever. I did a segment within the first couple of months, and it was about Brownian motion. Right?
Oh, yeah, we remember.
And I went home and I went back to Detroit because I was in Chicago at the time, of course. I went back to Detroit and my mom was asking me how things were going. And I was like, oh my gosh, it's amazing. My coworkers are amazing. I love going to work every day, blah, 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 blah. And she's like, well, what is one of the segments that you did recently? And I was like, Mom, I did a segment recently about Brownian motion. And I was like, do you want to watch it? She's like, I can't wait to watch it. And I couldn't believe it because my mom, right? She's 70 years old. She doesn't give a rip about stats or math. I'm like, why would she want to learn about Brownian motion? We watched that whole segment. And then my mom said to me after the segment, she said, Jimmy, she said, I didn't think it was going to be about that at all. She thought it was something totally different. Brownie in motion. She thought I was doing like a cooking thing or like something crazy because she knew on the network we did all kinds of fun stuff.
And
so she thought it was something fun.
It's called Tasty Trade. She thought you were doing something. Yeah.
Correct. Now that's not as good as your Tasty Girl story, but it's up there. It's up there.
I have always wanted my daughter to go to school for Halloween as a brownie in a brownie uniform, an old brownie uniform, and like be running all day.
It's perfect. It's amazing. It's amazing. Okay. All right. Geometric Brownian motion. You guys say it is realistic. Okay. Beautiful. Okay. Number 4. The markets are frictionless, which means there are no transaction costs.
False.
Okay. So you say no. All right. The risk-free rate in the market is constant. It never changes.
That's false.
Okay. You say no. And then lastly, volatility is constant. Volatility never changes.
False. Good thing I didn't go realistic across the board. I would have been way off.
Okay. All right. So what you've said is yes, no, no. Okay. Here are the results.
Yes.
Look at you guys. 100%. Look at you guys.
What's with the orange on the left?
I'm gonna get to that. I'm gonna get to that in a second. You guys are some overachievers. Tony and Nick, I gotta shake them midway through the segment to make sure they're still awake. Like, you guys are looking ahead. Like, you guys are figuring out.
Aren't we more fun to do the show with? Yeah,
that's what I'm saying, John. Every Monday, this is it. This is the new rotation.
Team.
It's yes, no, no. And for all the reasons we've talked about, right?
Yeah.
And geometric Brownian motion, that actually is the best way to model asset prices in terms of shocks and drifts, things I've talked about before. I'm not going to go down that road because I want to stay focused on this. But that actually is the best way to model asset prices. And of course, frictionless, that doesn't make any sense because we all pay transaction costs. Risk-free rates, they may not change that often, but they certainly change. Mm-hmm. And then lastly, the volatility part, I've talked about this a lot on this segment with like arts modeling and volatility clustering and all kinds of things. The reason why that's in orange is because I just wanted to draw attention to the simple fact that this is the one thing that we do, right? Like, if you had to like summarize our whole network into like one little snippet, it would be we're trading volatility. Specifically, we're selling volatility when it spikes, but also when volatility is low, we tend to, maybe I'm buying more spreads, maybe I'm buying more long volatility plays, whatever. But so the constant volatility of the Black-Scholes model, in my opinion, that's the thing that it falls short on the most. That's where it really misses the mark the most. So that's why it's in orange.
That's the thing that we know, we inherently know. Honestly, when I look through all this stuff, the one that I knew is the constant volatility, because on the trading floor, and Jenny will be like, we were behind us. We're so old that at some point when you're modeling your options, we literally had to go in there and be like this, tick, 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 to the volatility.
And it would be a crazy swing. It could have a crazy swing on your deltas as you're changing all the volatility. Your deltas could have a huge swing as the volatility is going up. And so when you're looking at your overall position and as a market maker, you're trying to be pretty neutral and hedge all your deltas. It was nuts when you went in and made those manual adjustments to volatility and then printed your new sheets. You were like, whoa, didn't think my deltas would change that much.
Yeah, exactly. And so you guys were like manually overriding the shortcomings of the option pricing models, like in the pits.
I'm not gonna lie to you. I was guessing on the Brownian motion. I'm glad I got led into the right answer.
But Jim, back in the day, there were printers on the trading floor, and the traders would manually make changes into their, volatility in their positions, and then they would like go reprint my what my papers or what did we call it? I don't know.
Your sheets.
Yeah, our sheets, like reprint my sheets. And then you would see, okay, now this is my delta. Now this is now these are my Greeks. So you would have to update everything and reprint it. And then you would have to then try to make some adjustments. So
it's so crazy because now it's all done for us. Like now, like inside of Tasty Trade, it's like click a click and you see it all.
Yeah,
isn't that crazy?
And it's constantly repricing as it's moving. It's repricing everything. You'll see it. You're seeing everything being repriced.
Right. Yeah. It truly is a Brownian motion. Yes, that's it. Okay. So here's my question to you guys. So you look at that scorecard, it doesn't look that promising, right? It's like, man, this thing is really missing the mark quite a bit. So my question to you guys is it useful still? Like, does it still serve a purpose, or is it really just kind of theoretical bunk that doesn't really map into reality that closely?
So wait, I do have a Discord. I do have to say something here about this, because especially the European style right there. So in any type of research, you have to put, or any type of theoretical thing, you have to put parameters in there. You have to. Otherwise, it's just kind of open-ended. So I do think it still has its time and its place, but everything has to pick something in order to put it in there.
And here's another question, like Natenberg, the option pricing was the Bible for option traders back then. Now, Julia in Anton's book, are they still hanging their hat on the Black-Scholes model in their book?
Yeah. I mean, as far as I understand
it. Model, though. It is the pricing model for options.
Yeah. It was in the 70s, I think, when it came out, or 70. Man, I don't even know. I'm trying to think. Capital asset pricing model was like 50s, 60s. Black-Scholes, I think, was 70s, if I'm not mistaken.
Well,
and so, it's crazy to think it's been 50 years and it hasn't really been updated too much. But
Dr. Jim, here's your chance. Dr. Jim Schultz, you could create the new
man,
pricing
I don't know. Yeah, I really enjoy the practitioner side of things a bit more, I think, than the theoretical side of things. And so, but I want to go back to what Liz just said a second ago, though. Liz, you are 100% correct. And I know this from, I mean, before I joined Tasty, I was in academia. I was doing research. I had to get published. I had to do all these things. And so the reality is this, and I mean, the Tasty research team does this every single day too. Whenever you build any research model in any field, you have to make concessions. You can never capture every aspect of real life perfectly. You have to set parameters, you have to make concessions. And so that's why I wanted to lay this out here, because these are the 6 primary parameters that are set in the Black-Scholes model. And this is the scorecard in terms of how it maps to reality. And so, Liz, you said you still think it kind of has a time and a place. Jenny, what do you think?
Well, it definitely does until something better comes along. That's what we have to, is the best we have to use.
Well, and it's hard when you have moving parts. And the Black-Scholes, it was derived in the early 70s, in 1973, the publication. And it also got, in 1997, the Nobel Prize in Economics. So it started in the 70s, but in 1997, it won the Nobel Prize in Economics.
Yeah, exactly.
And that's when we came onto the trading floor, 97.
Yeah, we gave it the prize and walked onto the trading floor.
There you go. There you go. All right, so let's go through the verdict. In my opinion, here's how I think about this. I think there's 2 aspects to this. So number 1, if you're attempting to trade apparent mispricings in the market, like if you're an arbitrage trader, you're just trying to arb different mispricings in the market, then, you know, the opportunities that you might go for, they're only going to exist for fractions of a second, fractions of a millisecond. So these shortcomings are going to matter a lot. The fact that they're disconnected from reality, you're going to have to improve on these models a lot. And now there are things that do improve on the Black-Scholes model, which I referenced earlier with like arch modeling and Garch modeling. And I mean, heteroskedasticity and things I've talked about on the network all the time. But there's a lot of improvements that have been made to the original Black-Scholes model that have kind of started to kind of plug some of the leaks. But in my opinion, so now in the black box, as retail traders, number 1, we don't have the resources to compete on that level. We can't go for mispricings. We can't go for, you know, you see something that looks off. Before you even register what actually happened, it's already gone. It's gone because the algorithms are already, they've all been written, they've all been trained to look for that specific thing. And they're all competing against each other. And the competition is so fierce. I don't know if you guys probably know this, just given obviously what you've done for so long. I remember in my PhD program, we were looking at all these things, and I was actually in the trades and the quotes, and I was looking for, like, you know, timestamps and mispricings and whatever. And what we saw, this was back in like 2007. So 2007, 2008, what we learned was that the competition was so fierce inside of a millisecond that the different traders and the liquidity providers and kind of the, you know, the professional traders, they would actually physically move their operations closer to the exchange so that there was less physical bandwidth that they would have to go through so they can have an advantage over the next guy.
That's 100%.
Is that not crazy?
That's 100% correct. And it's pretty interesting too, because arbitrage used to be a real thing, and it given the efficiency of everything that's happening right now, to your point, it's still there, but it's so fast that no normal human can take advantage of it.
That's exactly right. That's exactly right. But that brings me to my main point. So is it still useful for us as retail traders? Yes, I think it's still incredibly useful, because at the end of the day, what the theoretical models do is they essentially ensure that we are going to have very efficient markets and fair pricing. Because again, you've got all of these arb traders that are all around the edges trying to pick up, you know, half a penny or a quarter of a penny or whatever. Which, by the way, did you guys hear the pennies out of production? There's another quick little side stand. It's crazy.
I know. Do you think we should save some pennies? I have a giant jug.
Why would you not? Why would you not? You don't have anything to lose other than you're lugging around a jar of pennies for 30 or 40 years. And then, so maybe that is a pretty big gotcha. I don't know. But I think as a retail trader, the efficiency and the fair pricing, that's what we're hanging our hat on. We're hanging our head on the fact that they give us this theoretical foundation to then start to do the things that we think really matter with the strategic maneuvers that we make with volatility and implied volatility rank and contractions, expansions, all those kinds of things.
Well, Jim, I've got to say, this was a lot of fun. I felt like I was in a game show. And, it was so nice to see you on a Monday morning.
Yeah, it was great to see you guys too. Really, really awesome. And so let me get him a few takeaways, and then John, let's cement this down on the schedule for the next at least 8 Mondays in a row. Even the best research models always include some layer of assumptions that allow the model to operate, which is what you just said a few minutes ago, Liz. But sometimes all those assumptions pull the model too far away from the reality that we all live. And even though the Black-Scholes model might appear to do exactly this, it still serves as a reliable foundation for theoretical pricing for us as retail traders.
I like it. This was a
Love it. Love it.
Dr. Jim,
Brought me back to the the good old times when we used to study for our option classes before we made it to a badge.
Yeah, that's right, man. You're going into the Wayback Machine. Yeah. I mean, you guys took me back to academia. We're taking you guys back to the floor. Man, that's good stuff.
Yeah, Jenny was my teacher. All right, Dr. Jim, thank you very much. We'll see you next Monday.
Sounds good.
Bye. We're going to take a quick.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Hello, everybody, and welcome back. I'm kind of excited for this one. The research team is an amazing organism, and they are putting together zero DTE's strategies on Mondays as well. So we're gonna it's a zero DTE SPX option trading.
I know. So I know we're like a little behind schedule. So if we don't get to cover this, give this like everything it deserves, we can go over it again tomorrow when we're sitting in the pit at the SIBO.
If you don't give it all you got, we're going to do it again.
If we don't give this 100% right now, you're going to see this again tomorrow.
All right, so let's jump into it. So zero DTE breakdown. And this is springboarding, and I think what Kai was talking about is that they're going to keep, having these build on top of each other, which is kind of fun.
Okay, so last week was a strong holiday week with all 4 trading days moving higher despite light volume. SPX gained 3.7% for the week and 4.7% over the last 5 sessions, while VIX fell more than 10 points from recent highs. So it was, not that long ago when we were shocked at how high VIX had actually gotten, almost 30.
Yeah, it was high. I'm actually just trying to see the bottom. So the VIX one day is the yellow. I mean, you really can't tell that it's yellow. So the VIX one day got above the VIX only on that huge down day in SPX. Can you see that?
Yes.
There, that's the only day that the VIX one day got above the VIX. So that's pretty interesting.
And is that a tell? Is that a tell that might could be the high of the VIX?
Sure.
I don't know. I don't know if there was ever a piece of like if the VIX one day is higher or no, because it probably is a lot. It probably is
But look at this. Look at this. Since 10/21, the VIX one day never got above until that big massive down day.
Yeah.
Which is pretty interesting. Okay.
These things are calming down. Like today, I know we're down, but it doesn't feel scary. It feels calm-ish. Yeah.
It does feel calm. So like the SPOOs are only down 27 right now. I'm going to go to the VIX right now because we were almost down 10%. VIX is up only 5% right now.
So where is it? 17?
So it's 17.25. It was just under 18.
Okay, so that's not bad. Not bad.
All right, let's go to slide 2. The past 2 weeks generally matched long-term SPX intraday behavior, except for one larger than normal downside move, which we saw. Last week, however, showed steady and strong upside action. Okay, so this is the
past 2 weeks, up days, down days, up days, return, down days, return. So there was one.
The one big down day where the VIX one day was above that thing. So I was actually pretty surprised by these results. So let's go to number 3.
All right, next slide, please, John. Yeah, iron condors were able to reach the 25% profit target 100% of the time, despite an otherwise choppy and two-sided market. Honestly, that surprises me that it was able to reach a 25% profit target 100% of the time.
Even on that crazy move. Now, I was talking a little bit with TP about this as well, and he texted me. He's like, I thank God I got out of it at a low percentage because right after that is when it fell out of bed. So,
yeah.
Do you remember that crazy down day too?
Yeah.
Like we got out of all of our SPX and then it went crazy.
And then it was down. But now that's a 25% profit target. And is that putting, and I don't know if this is putting them on the open.
Now this doesn't go, I don't know. It doesn't say. I'm pretty sure with these, they're putting them on the open because that's what the research team usually does. I know we've kind of taken a different path with Jacob where we've gone through, decided that the 9 o'clock hour is better for us. And 9 o'clock is the time for us to put them on because of the other research we've done with Jacob. I think this one is starting over.
No, it does say entry 8:30. See on the bottom?
This one is starting over. So they're starting at 8:30. And this is a 20 delta, $20 wide iron condor with a 25% max profit. Stop loss, none.
They all got out in the last 2 weeks. But honestly, if you put it on, I don't know, if you put it on at 9 a.m. with this, I don't know if it would have gotten out. I think these got out by the skin of their teeth on that one wild day.
And that one wild day. Okay, but let's go to slide 4 because this is interesting. Increasing the profit target to 50% did not improve performance. A single large-sided one move was enough to overwhelm the strategy.
Yeah, because if you take full loss on one of them, it's not good.
Yeah.
Because this is just covering a short period of time.
And I do think that one day, now this is a 2-week study. I don't want to say that this is, 2.5 years of data like we have been doing with Jacob. This was 2 weeks, maybe a little bit more, maybe 3 weeks. So this is 3 weeks of studies. And there was one really weird day in there. And I haven't seen a day like that in a long time. That was when we went from up 125 to down 125. That's a weird day in the markets.
It was a crazy day in the market. And I think a lot of people got hurt that day, people who might have been rolling up, because we've seen people manage these where they're rolling up puts and then we have that huge down move and then they're rolling down calls and they're just got their position into a mess.
Yeah, you do. You can trade yourself into a pickle here. And I don't have a tendency, and I know we were on the road with the last show we were at where you put on the 0 DTs and they were really rolling and, kind of actively managing this. I don't do that. Do you?
No, but also we've decided to go with strategies that have a lower risk. Like if I'm selling a $10 wide and collecting almost $4, my risk is 600 on one, 1200 on two, 1800 on three. It's not that big versus if you're selling a $30 wide or 20 delta. We just looked at that one 30 delta, $10 or $15 wide. You're only getting 80 cents or a dollar. So your risk is much more.
Yep.
So I think you don't have to manage it so aggressively if your risk is a little bit less.
Agreed. That is true. And I do think I'm bad at over management. I can trade myself into a pickle. So the management doesn't make much sense for my style of trading. All right, let's see number 5. Okay, from long-term perspective, raising the profit target to 50% significantly increases the loss rate, which I was surprised by.
Okay.
Higher profit targets only work if you use a stop loss. Okay, so what do we have here?
There's a very fine line. There's a very fine line between what should your profit target be? Because if your profit target's not big enough, your wins, you need so many wins to recoup one loss. Whereas if your profit target's larger, then you need fewer wins to recoup that loss. So that's always, I think, the real question. Like, what should my profit target be?
But I mean, are you surprised by this? Take a look at the 50% profit target. You have a 20% loser versus an 11% loser. That's insane.
But I do, again, this is only over a very short period of time.
This is 2 weeks. You're right. That's an excellent point.
Yeah.
And one loss can wipe out quite a bit, especially when you're using the 20 delta, $20 wide. They're decent losses.
Okay, next slide, please. All right, 1120 and 1125 were the two toughest days for iron condor sellers due to unusually large directional moves. However, SPX still spent 30% and 45% of the session, respectively, inside the strikes, providing enough time for active profit taking before a breach. I mean, I think the basis of this study is shoot for a lower profit target, but maybe that's in this environment. Maybe it's not always. And I do think the market changes and our strategies adjust based on the market changing. So I know consistency in trading is important, but sometimes the market's different. Like, we've had wild moves in the market. So maybe I am taking my trades off quicker now, less percentage now, than when we're just kind of sitting there doing nothing for a long period of time.
And we've had wild moves in the markets. You and I are adjusting our trading. I don't want to do both sides because of the wild moves. I just want to do one side, because then if you get the move in that direction, or if you're getting the reversal, you can get out.
Right.
Yeah.
So, okay, last slide, please.
I do like taking advantage of one side. The past 2 weeks leaned more towards call side testing. There we go. But that seems to be like consistent with history, consistent with the strong market rally.
All right.
Okay, so if you take a look at this, outside call side, outside put side, yeah, it's 11%. Call put ratio, inside. Okay, this makes sense. It has been the calls that have been tested both times. There's only been 2 tests, but it's been the calls that have been tested both sides.
But we had that big day where,
but your calls were tested and your puts were tested on the big.
Yeah, we had that big day where they were both tested. Last week was a big up move, so we had a much greater than normal move to the upside last week. But the week before we had some big down moves. So
yeah.
But again, this is just taking a very small period of time, and we're in a whippy market. So my takeaway is, when we're in a pretty volatile market, go for less of a profit target.
Less of a profit target. And like I said, I'm a one-sided trader, but that's where I've made my bet. I do look at these like a menu. I think there's nothing wrong with people that are doing both sides. We have lots of people that have been very, very profitable, but I'm just more comfortable with less of a drawdown on one side.
Yeah. All right. Perfect.
Yeah, we did it. We got through it, Jenny.
I know. That was good. And I appreciate the research team. They work really hard. They put together these amazing pieces. And it was great having Quinton today and having Dr. Jim on. And we've got some really great guests coming up. We have Ryan Grace from our crypto team coming up, and Quinton from the trade desk.
Yeah, so we're going to take a quick 90-second break and come back for our final half hour, Jenny.
Stay tuned.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as explore traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we look to get out of a trade that might not be going our way.
My biggest piece of advice to beginners is to jump in but stay small.
Putting it out there and doing it in small increments, you will learn more than ever reading anything in any book.
So stay small, but jump in.
Top kid.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Hi, my name is Liz Deerking. The beautiful brunette next to me is...
What an intro. Jenny Andrews, and we are about to play a very exciting game. No, hold on.
No, you're wrong.
Hold on.
She's wrong, I'm right.
High school party, high school condo.
Yeah, because it wasn't high school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college, I went to a different college, but we both ended up at the CBOE together.
Yep.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Hello, everybody, and welcome back. This is live from the trade desk, and I think we're going to bring on one of the hardest working men at Tasty. What do you think, Jenny?
I know. Let's bring him on and let him go quickly because he is a busy man. I almost needed to make a call to the trade desk today.
I know. I'm making it. I already got my place in line.
Well, it's been a wild market. It's been a wild market, and so people have questions.
or people, they may have eaten too much turkey and forgot to close some options positions. All right, let's bring in our favorite Quinton. Oh yeah, I forgot. That's why he wasn't showing himself. We need to make the sound effects.
Hello, Quinton. Hello.
Ladies, how's it going?
Good.
We've been told by our super producer John that we are under strict orders to get you in and get you out because there's calls waiting for you.
Yes, it is a busy day today.
I have a couple.
Yeah.
I have a couple questions that maybe some of the viewers have. Maybe it'll eliminate some phone calls. Just because the market's been a little crazy. Friday, we had that short day. I was assigned on a bunch of positions on Friday because I was out Black Friday shopping, forgot the market closed at noon. And if you're assigned, let's say you're assigned, and I kept trying to see, like, what's my new buying power? What's my new buying power? What's my new buying power? Does that not refresh until like Monday?
So it should refresh right away once you get assigned. So it should show on Saturday what your new buying power is. And then you could potentially get a margin call if you're like doing a spread or something like that, because the requirement for the shares is a lot greater than the requirement for the option spread. But then if you still have that long option on, all you have to do is you can close the shares as well as sell the long option that you have. And then that'll bring back all the buying power from the trade. And if you don't have the long option, because, it expired like in between your strikes on Friday, if the long option was also expiring that Friday, then you can just close out the shares that you have.
And I was assigned on some Microsoft calls, which Microsoft is pretty expensive, and I didn't want to be carrying all that stock. So like last night at 7 p.m. in the 24-hour trading, I sold my shares of Microsoft.
Yeah.
So then if you do that, then do you still have the settlement? Do you still have that settlement of your how many days for the stock to settle?
Yeah, so it'll still take the amount of like settlement, but if you get assigned on Friday, the trade doesn't actually get settled until Monday, so you don't have the weekend margin interest. That's only if you get assigned like on Thursday.
Okay.
Oh.
So
yeah,
it didn't
that's
really
new
matter.
with the T+1 settlements. That's a nice thing about that because it used to be Wednesday.
you?
Now it's Thursday though. Yeah.
So get assigned on Friday, close the stock at the 7 p.m. on Sunday. It's like it never happened.
Yeah, only 1 day of margin. If that did happen in the account, if it brought the cash negative, only 1 day of margin.
That's not bad.
No, not bad.
Yeah.
Not
All
bad.
right. Yeah. And I talk about like the assignment stuff all the time. I've got some videos on my LinkedIn as well, going over like what the process is for assignment. Like some of the clips that are from this show, I post a lot on LinkedIn as well. And then
I see that we're friends on LinkedIn.
Yes, of course. Yeah. And then let's get to some business here. Top 20 symbols going through the system and their IVRs at number 1, NVIDIA 14, Tesla 9, GLD 49, IBIT 62, SLV 80, AMD 29, Amazon 15, Meta 8, MSTR 41, Google 25, SoFi 19, Robinhood 19, TLT 10, Intel 30, PLTR 7, TQQQ 25, Avgo 39, Oracle 87, Apple 7, and ETHA 73.
Yeah, I mean, honestly, I was on last Monday with Tony. I think that's pretty. There's nothing surprising about that list. Is there anything? If you do this on a daily basis, has anything been added or taken away that you're just like, oh?
Well, I think Intel is newer.
Yeah.
No, Intel was on there last week.
Yeah, there will be some companies that like have earnings that'll like pop into the top 20 symbols because of the earnings and things like that. Or like if there's like a big company announcement or like the metals are getting traded heavily and then there's like some certain like minor stocks or something like that. But yeah, I mean, typically it's the same 20 to 30 symbols that just like replace each other sort of.
Yeah, they do. TQQQ throws me off every time.
That's always on there.
I know it's always on
Yeah,
there.
a lot of
Who's
people
trading?
like that. Yeah, a lot of people like it for sort of like day trading, maybe to like few swing trades, things like that. It's a good alternative to futures.
Because it's only $53. Is that why it's kind of on there?
Yeah, it's a
Because
low price stock and it's
trading against
leveraged. And then you don't have to, it's not as scary as the futures can be if you have to have a massive position. Even if you're using the micros, it could still be big for your small account. But if you're using TQQQ, you can size it based on how many shares you want. And there's not just like a one contract size that's sort of like is supposed to fit all like it is with the futures.
Yeah.
Just
I
a
get that.
different product. You don't get nearly as much leverage as you would in the futures. So that's one of the upsides of futures. But one of the downsides with the futures is that you can't size into it appropriately depending on the account size. Like with TQQQ, you could buy one shares, it's $50. Whereas for like the MNQ, the margin requirement is a lot higher and the notional value is much higher than that.
Even QQQ is much higher. Yeah, because the QQQ is a $650 static. So get the T in there and you're good.
Well, and then even with like the futures, the notional value of the futures is a lot greater than the TQQQ, but also a sort of like leveraged asset.
Yeah.
Mm-hmm.
All right. Well, thank you, ladies,
IBIT
very
and
much.
EBIT, we see those on there, and we were looking at the volume today. It was crazy. The volume in IBIT was 3 times that of SPY. So that's
yeah.
I'll be curious to ask Ryan if if people are trading those more than actually Bitcoin and Ethereum themselves.
Yeah, that's interesting. And then those also have like the options as well, which is cool. The ETFs have the options, whereas like the actual like coin of Bitcoin and Ethereum, things like that, they don't have the options.
Okay, so that being said, we know you have to go to go.
Thank you very much. Thank you.
And I would like to say for the record that the chat is very, very proud of you, that you are eager to get back to work and answer those calls.
Bye, Quinton. Good luck on the trade desk today.
All right. Bye, guys.
Good luck. All right. You know what we've been waiting for. And our question is, what's my question, Jenny? Why? There's a man.
Why?
There's a man, a myth, and a legend sitting across from Quinton right now who's going to explain to us why Bitcoin is down so much today. And let's please bring in your friend and mine, Ryan Grace. Hello. How's it going?
Hello, ladies. How are you? Happy post-Thanksgiving. Happy December 1st.
Yeah, I can't believe it's December 1st. So wait, it was supposed to be October, and then it was supposed to be something about moving November. Is there a December?
It was the McRib after October.
Yes,
Then it was the McRib.
Is there a December saying about crypto?
I don't know. December death cross is what it looks like right now. It's ugly out there. It's bearish here. Certainly when you look at the short-term price action, slammed lower overnight. If anybody was paying attention, I'm sure they are now. If you're looking for an explanation, I mean, if I look at week over week, not much has changed. As we go over the expected moves, you'll see that they're basically the same ranges that they were, I think, when I talked with you and Tony this time last week. But I think the most recent catalyst, aside from the fact that we're in an environment here, at least short term, which seems to be one where you're seeing a slowdown in inflation, possibly a slowdown in growth. It's certainly not a good environment for a lot of long duration tech stocks, definitely not a good environment for Bitcoin. So I think when I look outside of Bitcoin as well, you do see some weakness in a handful of those Mag 7 names, with probably the exception being Google, Apple. They've traded a little bit better. But the most recent catalyst, if you need a headline for this, is now there are fears or just a repricing of what the Bank of Japan is going to do with interest rates. 80% probability that they're going to hike rates. For everybody that's been in the markets for a long time, they know that interest rates in Japan have basically been zero for forever. Starting to see that shift. That has an impact on the yen, obviously. And as a macro asset, there's kind of this fear that you could see more volatility as a result, a bit of an unwind of that yen carry trade. And so you see some weakness in crypto here, see some weakness in tech and in the markets. That said, I think the kind of bigger macroeconomic picture here in the U.S. is largely driving this, at least short term. And you have a correction that's underway. If we go back to, let's see, I think it was a Saturday or Sunday, November 22nd, we bottomed, at least locally, at about 80,500. You're at about 84, 85 right here.
You're talking Bitcoin?
Bitcoin, yeah. When I look at Bitcoin, ETH, a little bit weaker as well, maybe closer to 25 for a second. But I think that this weakness persists until you see some signals in the market and this environment changes. And I think a couple of things that you want to see, right? You need to see a reversal in rates. You need to see that trend continue to move lower. We've got a pop in rates here today. You need to see a weaker dollar. We have seen some of that dollar strength come off, and I think it explains some of the strength that you've seen in gold and even the rise from, we traded. If you go back even just a couple of weeks, we traded 80 to 91 in Bitcoin. We're pulling back to kind of mid 80s here. So I don't think this is anything that's uncharacteristic. It's just simply driven by what we're seeing in the kind of broader markets. But if you need that all clear signal, I'd want to see a VIX that's probably closer to 16. I'd want to see a dollar that is starting to break down in terms of trend, and I'd want to see, let's see what happens out of the Fed, but I want to see lower rates.
The Bitcoin is very sensitive to the Fed, right? So the Bitcoin and the technology companies are kind of expected.
Absolutely, it has been. I think in terms of just longer duration assets, and certainly on the margin, Bitcoin trading based on liquidity, perception of liquidity, what's coming next. It's definitely been driven by that. But if you go back and you look at, all of the catalysts that we were looking forward to that generally were viewed as potentially pretty bullish, you got the opposite outcome in almost every single scenario. We had the tariff scare, blew up about $20 billion of leveraged positions. I think to some extent you're seeing a recovery still in crypto from that event going back to October 10th. You had a repricing of what the Fed was going to do here in December. Now we're back to 87% if you look at the CME Fed Watch. But for a while, it was looking as if maybe we weren't going to get a hike. I mean, Jerome Powell is certainly on the fence. Clearly, you're going to get a new Fed chair at some point in the future, but that's probably not until, obviously into the middle of 2026 here. So kind of bouncing all over the place. But we had the big meeting between Xi Jinping and President Trump. Pretty much a nothing burger. People were hoping you were going to get a tariff, grand deal, more of just a truce, and not quite sure how long that will hold up either. And so I think, a lot of those catalysts, government reopening, just haven't really materialized as bullish in the short term here. Any sort of regulatory developments in the U.S. have been kicked into 2026, so we don't have anything yet around the Clarity Act. But that's all coming. So I'm not bearish by any means long term. I think you have to respect the price action here. Sell calls against IPIT positions or ETH positions or any other ETFs that you have. Sell futures. You can sell rips, I think, for now, any pop, and that's worked. Obviously, 91 back down to the mid 80s. But those signals that I mentioned earlier are really what I'd want to see for me to get kind of more constructive here in the very short term. Long term, I'm bullish. I think you have a lot of catalysts. Liquidity is coming. We have the end of quantitative tightening as of this month, so that's going to bring more liquidity into the market. But right now, it's been pretty bearish, and it remains that way to start the week.
You are right, though. This is almost exactly where the expected move for the week was when I was on with you last Monday.
Yeah, we were maybe a little bit higher on the downside in that Bitcoin range, closer to 81 maybe. But basically 79.5, 80 to 92 here. $6,000 move, looking for about a $300 move in ETH. And it's traded within these ranges. You've seen volatility come in as well. So if we do catch a bid, you have a little bit of a tighter range where you have a higher low in terms of how that's being priced in, at least for now. So I think that's like on the margin, somewhat, I wouldn't say bullish, but makes you feel a little bit better versus the bottom dropping out in there. But kind of the same thing that we're seeing from where we were a week ago.
So you had such a good day, like Friday morning was such a rally for cryptos. And now then that was the last day of November trading, and now it's December. Is there anything to do with a roll from month to month? I know once Dan was on our show and mentioned a roll. Does that affect the pricing at all?
I don't think so. Not in terms of like a futures roll, if that's what you're referring to in terms of the contracts rolling over. Most of cryptocurrencies are traded, in terms of where most of the volume is, I should say, is outside the United States. It's on big exchanges like Binance, where you have these large perpetual futures positions. So they have a funding rate, but they don't have a month-to-month or quarter-to-quarter expiration or roll in that sense. I think, the market was really on one side here. You couldn't find anybody that was bearish. There was a view that you're going to have a lot of these positive catalysts. That didn't materialize. You have a seasonal component to this as well at times. So October has been positive for the last 6 years in a row. November, Q4 really, it tends to be a pretty positive period for crypto markets in their short-lived history, but not happening this time. So
Did you And Vanetta this morning had a story about, I think it was Coinbase that is pulling a bunch of ETFs that were scheduled to go. So there was like a Dogecoin ETF that went, and then they pulled a bunch of like other ETFs that they were thinking about putting together. Does that have anything to do with it? That there's so much saturation in this market now?
I don't think so in terms of the ETFs, kind of in those assets. I think a lot of the price action, as we talked about last week, has been driven by institutional buyers that when you have more volatility in the space, obviously you're going to step away and trim some of those positions. And so when you see the ETF outflows, you see some of these large digital asset treasury companies, Strategy or MicroStrategy being the primary example there. When that buying starts to slow down, it's definitely going to impact the price here. But I don't think... And Coinbase acts as a custodian for a lot of the Bitcoin ETFs. I'm not quite sure where the SEC is on some of these other ETFs. So I don't know what the details of that are, but I don't think that's what's driving this here. I think what you saw was, in relatively thin volume, this price traded higher. You had some dollar weakness over the last few days, and then boom, within an hour, we corrected 5% into the U.S. equity session here. You're down 84, so you're down probably closer to 7-8% in some of this stuff. And I think it's just largely just the macro trade here.
What does a crypto typically do? So we are in December, we're wrapping up the end of the year. Is there anything that crypto, and we're not going to I'm going to hold you to this, so your word is gospel right now. But what about the end of the year for crypto? Are there positions that need to be changed or closed, or is there any ruling in that way? Like you'll see, the Santa Claus rally because everybody's repositioning and putting their capital back into things, and that's just for like the equity market. But is there anything, December or year-end wrap up in the crypto space?
Nothing specifically. I mean, I suppose there's some kind of year-end window dressing, as there is in most markets with positions or fund managers. Seasonally, historically, this has been, an asset that performs or has performed pretty well in the fourth quarter. Here to start December and for the last couple of months, it's been, pretty poor performer, down 30-35% at the lows. Now, those tend to be the sorts of corrections that you experience without the structure really breaking down. So I think long term, nothing has changed in terms of the thesis, the view. On one end, you have just recently had a headline where they're increasing the maximum contract size for option positions for 1 million contracts in IBIT.
Yes.
Right.
That's what I was saying. The position limit's going to 1 million. That's insane.
Yeah, this is big. This is institutionalized. You have Fidelity, you have BlackRock. I mean, they make a ton of money off of these things. I'm not worried about this going away. I've been in crypto since 2014, 2015 or so. You have a boom bust cycle. This is a correction. It's a lot more violent and just the speed of it. I think, we saw this all unwind within a month and a half, but it goes up really fast as well. It's a really, really, really small asset, right? When you even just compare it to, say, gold's probably got a market cap right now of, I don't know, it's called 25 trillion, probably closer to 30 trillion at the new 4,000 plus price. We're talking about a $3 trillion asset, the whole space. So it goes up 20% in a week or a month. No one's like, why did it go up? No, it's just really, really small. It's very illiquid. I think it's still relatively early in terms of adoption. And so there isn't anything that you can point to that would happen just because it's the end of the calendar year. I think it does benefit at times from that seasonal component, the Santa Claus rally, whatever you want to call it, that you tend to see at times, or you have seen in assets across the board. And it still very well could do that, right? You could go right back to 100 from 80 because all of a sudden the Fed has given you some guidance as to what the path forward with interest rates look like. You've got some weakness in the dollar, and all of a sudden everybody is bullish again. I think the market has a very short-term memory when it comes to crypto, as well as many other assets here. If we look at the correlations on the next slide, it is still pretty positively correlated to risk assets, equities specifically. I would expect that to continue, certainly as it matures and you get bigger institutional buyers in this space. Short term, we've seen a bit of a pretty strong positive correlation over the last few weeks with gold as well, and you saw that over the last week. But I just think it's something where this is an asset that because it moves so quickly, people are so greedy, myself included. Now you want to see 150,000 and think that once you break above 100, you're never going to get back to those lows again. At least that's kind of how we talk about it or how we feel at times. It's somewhat emotional, but you got to play the long game in here as well. This is something that I want to hold for the next 5+ years. I think it's going to continue to do well. And I think it's largely a hedge to currency debasement is probably the way that I look at Bitcoin, at least. And that's been a pretty good trade. We didn't just start talking about this in the last 6 months or last year here on this network. We've been pretty bullish. I've been pretty bullish since, I'd say, March of 2023, as of recently. And so I think you've got to take a little bit of a long-term perspective in this.
So Ryan, is like here in the US, if we have to pick something of all the crypto, you say probably Bitcoin. That's like the Mac Daddy. But what about other countries? What do you think that if they want to get into crypto, is that what they're getting into, or are they getting into something else?
Yeah, absolutely. Bitcoin right now is close to 60% of the entire market when you look at market cap. Bitcoin does well, and then you tend to see capital rotation into some of the other assets that people call altcoins. So that starts with Ethereum and then moves into Solana and other layer 1 blockchain networks. But in terms of, how I think many other countries or central banks or institutions globally think about this, it's really a currency debasement hedge. It's a digital gold. That is less relevant to us in the United States, even though purchasing power has obviously eroded over time. It's less relevant here than it is probably someplace like Venezuela, for example, Brazil to an extent, other more, I guess you could call them emerging market currencies where they tend to be a little bit more manipulated than what we see with the dollar manipulation. But I think that just continues regardless of where you are. And so as the world moves more and more into a digital space, these assets are attractive to some investors, right? I mean, given the volatility short term, kind of it is what it is, but the adoption of this asset class and kind of the positioning within portfolios, it's up and to the right. And I think I would expect that to continue. So I almost, I see this as an opportunity.
It's in its infancy too, right? That wasn't this year. You can correct me if I'm wrong, because sometimes my memory is a little bit short term, but wasn't it this year that it is now allowed to be in some of your retirement things and things of that nature where it can start going more into portfolios, more accessible in portfolios?
Yeah, absolutely. I mean, and I think that's a great point. Structurally, there are so many slow moving pieces here that support that bullish outlook if you have, a multi-year kind of investment time horizon. If it's week to week, then if you're trading this, I would be short right now. Short bounces, see if this trades to 75, see if we can break 80. I mean, it's super weak. If you have a 5-year perspective, you might be looking at this as a huge opportunity. So I suppose it all depends on your time frame. But to your point, yes, you've had, over the last couple of years, right, you had the ETF approval, started with Bitcoin, ETH followed. Now you're getting ETH staking rewards in the form of a dividend. You have some additional assets that have an ETF wrapper around them. I don't think that crypto needs ETF wrappers necessarily, but it makes it a lot easier for capital to flow into the space, which is ultimately what you want to see. And so, those have been positive coming out of, say, 2024. Here this year, you have a pro-crypto government. There's no argument about it. You have, the stablecoin legislation, which passed. You've seen the, adoption of stablecoins is still in its infancy. You've got the Clarity Act, which is coming. This is going to determine what's a security, what's a commodity, what does the SEC do, what does the CFTC do, who oversees this. That's all going to be positive. It's going to bring more capital into the space. And you've recently, as you mentioned, you had, the decision around allowing these assets or alternative assets, which you could argue is, private equity as well, but primarily is going to relate to cryptocurrency or digital assets, are now permissible in 401ks. So when you think about the impact of that over time, you got these massive conduits that have been connected for this capital flow. you have passive market participation in market cap weighted vehicles that just see a perpetual bid. And I'm not saying that that's concentrated in Bitcoin, but it's one of the reasons why you have that drift in equities, right? I mean, you can short equities in the short term, obviously, but on a multi-decade period, they're probably going to continue to go higher. Your purchasing power might be a lot less, but I think you want to be long. And so you have those same dynamics that are kind of coming into this space. And it's just really, really early, in my opinion. I feel like sometimes I have to come on the show and like defend the price action at times. Not with you guys, but
here. I was like, why? We need him on for a why.
Before you go, because we're almost out of time, I just have one other question. So, you've got a supply and demand. More buyers push up the price. Well, we were just looking. There's so much volume in IBIT. It's on the top movers every day. The volume in IBIT today was 3 times that of the volume in SPY. If IBIT is just based on Bitcoin's price, but everyone's, we've got all these people buying IBIT instead of going and directly buying Bitcoin, then how does that drive up the price of Bitcoin?
So IBIT is Bitcoin. It's not redeemable on a one-to-one basis. But it's the same as GLD. So I can't redeem. Well, maybe I'm incorrect.
Physical Bitcoin.
Yeah, it's paper. So I don't believe there's in-kind redemptions, but that maybe has changed. But yeah, it's exposure to Bitcoin. So they have to BlackRock or whoever is the fund administrator is going to go out. They're going to buy that cryptocurrency. That cryptocurrency is going to sit in custody with a qualified custodian. Coinbase is the qualified custodian for a handful, I would say 80% or so of the Bitcoin ETFs. So it's absolutely Bitcoin. It's just Bitcoin with an ETF wrapper where you don't have to worry about the custody of it, the security of it. In that sense, if you're a RIA, it's a lot easier to just own the ETFs. But massive volumes in those ETFs. It's a super popular product, right? As you mentioned, in terms of the volumes that you see, it's been one of the most successful ETF launches in history. It's not so much now given the price of gold going up as much as it has, but rivals or at times has rivaled the size of GLD at its start.
Yeah. And that was glaringly obvious this morning when they asked for the position limit to be raised to 1 million.
Yeah. And when I look at, just our data internally here at tastytrade, it's a very popular product. Maybe no surprise given we're focused on options. You see a lot more trading activity in IBIT and IBIT options and crypto-related securities or crypto-related instruments versus some of the spot cryptocurrencies at times.
I agree.
Ryan, thanks so much. Liz, 7 to 10 flew by.
Fastest 3 hours of the day, done and dusted. All right, Ryan, thank you so much for all of your knowledge and input. We appreciate you and everything that you do for us at Tasty. Now get back to work.
Thanks for having me.
All right, Ryan, so much. Thank you. Liz, have a good day. Everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the morning show with Liz and Jenny. We'll see you tomorrow from the trading floor.
It's options. Jive.
Hello, everybody. We are back and we have brought on, don't tell the others, but our favorite researcher, Kai.
Hey.
Hi,
Happy Monday.
Happy Monday. Happy December. Welcome back.
Yeah, happy snowing day.
Yeah, I know.
Are you guys in Illinois? I heard a lot of people stuck in the airport from yesterday, the day before.
Yeah, my son was stuck there for hours and hours yesterday.
Oh, wow. Yeah.
Okay.
Did you go out of town, Kai, for the holiday?
No, we were just staying at home. We didn't even know the snow was that big. But my kids were having good time in the yard and the neighborhood.
We have in my backyard, we have a big sledding hill, and so the entire neighborhood comes to my house when it snows. So we had so many people in and out. I gotta tell you, I love the kids in and out. My dog, not so much. He gets very angry.
Oh, really?
Yeah. It was fun.
My daughter spent literally 3 to 4 hours on the slope yesterday. I didn't even know how did she get so much energy from me? But when I asked her to do the homework, it's like, oh, I'm tired.
It's not often we get snow and like 20 to 30 degree weather. The last couple of years when we've had snow, it's been so freezing. It's too cold for them to stay out for long. But like this is the first time we've had big snow and warm enough weather for them to be out sledding.
Yeah, and it was sunny. The weather was beautiful yesterday.
Yeah. I had the big kids out there too. Annabelle and her friends also went, and JD went out there the day before. Like, it's fun. It's fun that they get back out there and in the snow. But you're right. I don't know where the energy comes from. I'd be done after one run.
Kai, what have you got for us today?
All right. So last week was a kind of quiet week. If we go to the first slide, let's go to first slide. Nothing too much happened, like events or news. So in general, it was a quiet week with a very strong upside momentum, and trading volume was relatively lower than what we saw in the past couple of weeks because we have that huge down move in the past 2 weeks. And the second interesting thing is the rate cut probability actually bounced back to nearly 90% yesterday after we saw a quick reversal from 96% down to 55 or something, 50-ish percent. Then in three days, in three trading sessions, it bounced back to 87%.
All right.
Yeah, that was a pretty quick turnaround.
Yeah. The main reason behind it is just try to keep it simple is all the economic macro news coming out. It was not bad. It was not good. It was just in line with the market expectation. So in that kind of situation, people expect the rate cut probably is going to increase.
But it's like bonds are down today. Bonds are down to 116 again.
Oh, everything is down. Did you see Bitcoin? Down 5%.
I know. Everything's down. Bitcoin's down 5%.
Oh.
Everything's down. Bonds down, market down. The only thing up is the metals. Kai, silver.
And currency.
And currencies. That's true.
Yeah.
Metals are strong. Currencies are strong. Everything else is down.
Finally, the yen. That's got to be helping people.
Yeah. The one trade that everyone's stuck with Tom. And this upcoming week, next slide, not too many things happening, but we have some economic index numbers coming out. PCE, core PCE on Friday. This is probably the most important one. Wednesday, we have ADP, PMI, and other data coming out. We're going to have the full data this weekend and the following week.
Are these still old though? Are these numbers from before, or are they new numbers?
I didn't check one by one. I think the full numbers started coming out.
Okay.
Yeah, this month.
This is it.
Fridays.
The jobs number probably not yet, but it will coming out the full number this month.
And is the interest rate announcement next week?
The 18th, isn't it?
No,
or the
19th. Yeah, 18th, 19th, right?
I want to say 19th. I could be wrong.
Yeah, okay. So we've got not next week, but the following.
We have 2 weeks, yeah.
Okay.
I mean, 18th or 19th. I'll look into it, but I'll look into that and get back to you, Jenny. But
Okay, so talking about indices, we had a really, really strong week. All four indices were in green, and can we go to the next slide? S&P 500 was up 3.7% in 4 trading days because the equity market closed on Thursday, including the Friday before the total 5 trading days. The S&P 500 was up 4.7%.
Yeah.
Yeah, it was a big week last week.
Technically only 3.5. I know it's 4, but it was a half day on Friday.
Oh my gosh.
Yeah.
Friday, it was killing me, Kai. I was Black Friday shopping and got home, I think it was like 2:00, logged into my platform, and I had forgotten that everything closed at noon.
Oh.
Mm-hmm.
Rookie mistake.
Yeah, that's why everyone should tune into the Research Corner, because I put the trading hours for Wednesday, Thursday, and Friday in the last week's Research Corner.
Well, Jenny, you should have tuned into Research Corner.
You know what? Luckily nowadays we have that 24-hour trading. So Friday I missed things and I had some positions that were in the money. So I was assigned on quite a bit after Friday because I missed that noon close. But then last night at 7 p.m. during the 24-hour trading, I was able to close the stock positions I didn't want anymore.
That's good. That's good. So the Russell actually was leading the whole market, has a 5.6% to the upside, which is pretty big for Russell.
And I think Russell's down the most today.
Russell is down the most. Russell's down a full percentage point right now, and the rest of it's only, I mean, SPOOs are only down 0.5%.
Yeah.
So next slide, talking about the expected range, definitely is outside of the expected range. The expected move for SPX at the beginning of last week was 134 points because the VIX was still elevated from the move the week before. So
yeah,
at 23. Now it dropped to 16. This morning, I haven't checked in the past 15 minutes. It's probably 17-ish.
From now till the end of the week?
What do you mean? This is the VIX from yesterday.
Oh,
here, I'll check for you.
I've got my platform up. So VIX right now is trading, 1796.
Oh, okay. So up to almost 2 points, 1.5 points.
But is that so? That's
and
where
the expected move is still 83.
Yeah, expected move 83.
No, 1796. Yeah, that's right now. It's 1797. So it's moving.
Almost 18.
Yeah.
Yeah. So probably the expected move after market open is going to be less than 1.5% with the 18 VIX reading. So this is much lower than what we saw in the past 2 weeks. 83 to 100 points in SPX. It happening any day, right? It can happen in 3 hours.
I mean, that's nothing these days.
And it looks like by Friday, by December 5th, end of the day, we've got expected move of 83.
Yeah.
I think this number will change after market opens.
Well, when the market opens,
I see. Yeah, that's what
if the VIX change.
So like the SPOOs, which are open right now, have an 89. So I think the number will go up once SPX opens.
Yeah.
But you're right. We see those kind of moves in a day.
Yeah.
Mm-hmm. Talking about the IVR last week, definitely majority of the assets we've seen the decreasing implied volatility. So euro, gold, I wouldn't say they changed that much. Pretty much the same.
Yeah, they're down. I mean, everything's down.
Yeah, if you sold puts, last week was the best week ever.
Yeah.
Okay, next slide. One thing I want to emphasize for what happened last week is definitely the overall market. SPX rallied 3.7%. That's actually top 5 percentile a weekly move. This was the largest move since the April rally, and then the before is years ago. So they're only less than 5% of the days or weeks we saw this more than 3.5%, 3.7% rally.
It didn't feel like it.
Because not too much trading volumes or activities, right?
Yeah. Well, it felt like it was only certain products. It wasn't like everything across the board. It was certain products were up and some weren't. I don't know. It just seemed like a selective group of products up so much. I don't know if it was across the board. When you look at what was up, did you see certain sectors up more than others, Kai?
I didn't check sector by sector, but AI only rallied a little bit, not too much.
Mm-hmm.
Definitely not near the high yet.
Yeah, right.
Kai, we were asking, Liz and I were talking about this, wondering if you can get this for us. A list of all the IPOs from 2025 and then what they did from their IPO day till the end of the year.
Oh, we haven't done anything similar to this, but we definitely can look into that.
That'd be awesome. Thanks, Kai.
Yeah.
See, we asked you live on air, so you can't say no.
Of course, yeah. Sure.
Okay,
Yeah.
next slide.
Next slide, the top 5 and bottom 5 performance from S&P 500 in the last week. Definitely, we see more greens than the red, especially the numbers are much larger. Intel leading S&P 500 up 13%, Hood 12%, CMG 11%, Dollar Tree 11%. We're gonna have Dollar Tree earnings on Tuesday. STX up 9%. And then look at the downside. Almost nothing was going down. Nvidia was down 3%. That's the largest one.
And that was last week. So like with the S&P up 5% and Nvidia is such a big part of it, and Nvidia was still down.
Right, and if you read this table every single week, normally we see this like a 18% or 15%, but this one's the largest move is only negative 3%, which is
that That's nothing. And I mean, you have something on the list that's like a 0.1%. It's not even.
Right. HPQ is 0.1%.
Yeah. Interesting.
Yeah. So the last couple of slides, we're going to talk about the earnings. Earnings last week was also in green too. Zoom. I just put some double-digit movement in the last week. Zoom was up 10%. ANF was up 38%. The next day.
Wow. Yeah, it's rising like a phoenix from the ashes. They said it was its Hollister brand that is making ANF go up.
Crazy. Well, I think this week, do we have American Eagle this week? I wonder if that'll follow.
Yes, we have.
Yeah, I wonder if that'll be similar. So it's 38%.
Well, all the retailers were up last week. Like any retailer was up. So you can see Urban Outfitters. I think Kohl's was even up too. So like most of the retailers went up.
But this is probably the biggest post-earnings rally I've seen for months. I haven't seen anything rally like more than 40% recently.
Yeah.
30 is huge.
Yeah.
And Urban Outfitter, it's another retail one is up 14%.
Yeah, that's kind of crazy.
The rest are kind of in between 2% to 5%. It's kind of within the expected range. If you sell any Iron Condor or Strangle, it should be good.
Yeah.
So what do we have coming up this week?
I have that in the last slide.
Okay, let's go to the next slide.
Yeah, next slide is from the long-term view for this season, earning the third quarter. So far, we have 3,300 companies roughly announced the earnings. So there's 100 more additional to the week before. Pretty much the stats didn't change at all because we only have 100 companies announce the earnings.
You know what's crazy is looking at the numbers. Like you said, there's 53% were losers, but the losers were so low.
Yeah, it's only negative 0.3%. But I've been doing this for the past 4 years. If this number is higher or lower than 0.5%, that's actually considered big in the past 4 years.
Okay.
Yeah, for the quarter. So 0.1, 0.2 is probably the most what we saw in the past couple of years. 0.5 is a really big number. But on average, you're going to see very close number to 50-50 or 49-51. That's most common to see.
Yeah, for sure. 49.51.
Yeah, so this coming week, the earnings, we actually have some interesting earnings coming up this week. As you said, we have the American Eagle tomorrow after market close. Marvell is Tony's favorite, right? One of Tony's favorites. CrowdStrike, which caused a lot of problem, which is definitely one of the most traded for Tuesday. Okta, I don't know if you traded or not.
Yeah, we've traded OKTA.
Oh, okay. Retail Macy's, we have Dollar Tree, Tom Hayes, Salesforce. We have Snowflake, that's a popular one too. AI, Dollar General, DocuSign, Ulta, Tony's favorite again.
I'm glad you read Snowflake. My eyes cannot even see that.
So what did Vanetta say today is a competitor of Snowflake or something similar?
Oh, that was that deck, something deck that was going to be that they just raised.
Yeah.
Something that they raised, I don't know, $340 billion or something.
Triple deck or something like that.
Triple decker or something.
Yeah, that's it.
I mean, these are decent earnings, and you do have a lot of the retailers on there, which should be fun to watch. So, Kai, thank you very much. On a side note, we had a confirm and send question. We don't need to bring it up, John, but we had a confirm and send question that was asking, and we're gonna ask you this of the research team as well because it's live on air.
No matter what you said, I would say yes.
Good job. Okay, but so the question was asking what happens to stocks after they get pulled. So the Nasdaq 100 gets rebalanced. What happens to those stocks when they get pulled? Do stocks?
Do they tend to go down after they get pulled?
No, we haven't done a study. I believe we had a conversation or we have a short piece talking about when you add it into the Nasdaq or 500, but we didn't do anything that's if you got to pull out from the S&P 500 or Nasdaq.
Yeah, no. So they were saying Lulu and what was it?
Trade Desk were being pulled.
Oh, Trade Desk, yeah.
But when from your old piece, when something gets added, do you find?
I don't remember. I didn't do that one. I'm not even sure that one was launched or we just in discussion.
Okay.
Yeah.
So the answer.
Well, maybe we can do something like that for December. People looking forward to what happens after the rebalancing, stocks that get added, stocks that get pulled.
Yeah, when we meet this week, we can talk about it.
Sounds good. Thank you very much, Kai. We appreciate you coming on. We are going to maybe take a short break before opening bell.
All right.
Yeah,
Thanks so
thank
much,
you.
Kai. Have a good day.
Peace trading.
Hello, everybody, and we are back with Dr. Jim Schultz. Hello, Dr. Jim.
Hi, Jim.
What's going on? Good morning. I mean, what an uptick. It's like, when you come on to a Monday morning, when I come on to a Monday morning, I'm expecting Tony, I'm expecting Nick, right? And so it's like, man, like I'm just expecting the market to be down pretty big. But then when I come on and it's you two, it's like, we just had a reversal. Like now we're slightly green.
Look at that. We're up. Now we're only down 35. I'm sensing a rally.
Not bad. Not bad.
Rally, get your stock.
Yeah, Jim, do you know the rally song? There's a rally in the alley. Get your stocks.
No. Where did that come from?
I'm pretty sure we made it up. There's a rally in the alley. There's a rally in the alley. There's a rally in the alley. Get your stock.
Oh, that's great. That's great. Yeah, no, I like that.
We would sing that on the trading floor.
That's so funny. Oh my gosh.
All right, before we talk about anything, we're going to give a huge happy birthday shout out to your dad,
Dave Schultz. How old is he today?
So my dad, Dave, is 85 today. My dad is 85. I talk to him almost every single week. And obviously I'll be giving him a call today. And the kids are super excited to call him and wish Papa a happy birthday because he's the oldest person they know. Like when they read about they had just assumed like when he was a kid, he had like a pet dinosaur. Like they just assume that like he goes that far back. And so it's really funny to like talk about all that and stuff. And so it's great. I love it.
That's really cute. Well, happy birthday to your dad. That's he's 85 years young. That's a good compliment.
Yes, 85.
Will you go to Detroit over the holidays at all?
Probably not. Just because I mean that's such a major trip for us. We're gonna try to. Plus, why would I? I mean, Jenny, you know, it's paradise right now. Like, why would I leave paradise? That doesn't make any sense, right? But next summer is when we're gonna try to go. Maybe June or July.
Dr. Jim, I don't know if you know this or not, but in the morning with Vanetta, Jenny has threatened to come to your options crash course live to get out of this weather. It's this Sunday to come to.
What an amazing segue! Yes, it is this Sunday. It is this Sunday. Thank you, John, for the art card there. This Sunday, like you can still sign up. I mean, we've got lots of people registered. It's going to be absolutely amazing. I can't wait. It's the final event of the year, and it's going to be awesome. Like if you're a brand new trader, this is for you. But even if you're a seasoned veteran, you've been trading for a while, my hope is that we can still drop a few breadcrumbs on the trail that you can pick up that can help you. So it's going to be awesome.
Have you been to this theater before?
No, I have not.
Okay.
But Errol has. Errol's been there before because he used to live right by there.
Oh, no way.
And so he said it's pretty solid. So I'm excited.
Jim, I've said this before. You, as far as all the shows, all the speakers, in my mind, you're the best. You're the best speaker that Tasty has. So if you don't have tickets yet to go see Jim, sign up and get your free tickets because he's amazing on stage. Amazing.
Wow. Thank you so much.
You are extraordinarily engaging on stage. So I don't think that people realize that. So you can that's what I was going to say is bring friends, bring loved ones, bring people because you keep the level of attention up.
Well, I appreciate you, man. I appreciate you guys so much. Can we have you guys on every Monday?
Yeah.
Like, John, can you put that in the calendar somehow? Like, I think we found our new rotation for Monday morning. I mean, this is amazing. Look at you guys.
But I just tried to tell the Einstein story to my family. I must be missing parts of it because it doesn't go.
Jenny is the world's worst joke teller.
Oh my gosh, yes, the Einstein story is a classic, absolute classic. It's actually an inside joke between me and my wife. So like whenever I like if I have to like speak in any type of capacity in some environment like at church or something like that to where I've never done it before, I always joke with my wife. I'm like, well, I'm just gonna lead with the Einstein story and then just kind of go from there. And she's like, don't lead with the Einstein story because she's heard it so many times, just like you guys have. But it's a classic. It's an absolute classic.
My favorite, which we use all the time, is I know you don't know, but if you did know.
Well, yes. I may bring that back. I'm not going to bring that back this Sunday, but maybe next year because it's been a long time. And so yes, that was yeah.
Oh, and the window sales. The window sales. I love that one.
Yeah, I mean, that's the way back. I was 18 years old.
Is the window sales? I know you don't know, but if you did know,
yes.
It's the same story.
Yes. And I still remember that. I still remember it working. I still remember it not working, and it's crazy. It was a crazy time in my life, and so that was a lot of fun. But are you guys ready to do some finance this morning?
I mean, I guess if we have to.
If we have to, right? I think John's making us. He tried to start the segment a couple minutes ago, but then he couldn't.
Try. I saw.
I know. Did you see that?
I know.
That's so funny. It's like, no, John, we're not ready yet. We're not ready yet. Okay, so here we go. We're going to go kind of theoretical this morning, and I'm going to be very curious to see what you guys think about this. And you guys are going to be tested here in a couple of minutes. So I hope you're ready.
Great, but I'm going to tell you, I'm going to heavily rely on you guys because option pricing models, I believe everything's fairly and efficiently priced. So if it's up there, I believe it to be priced right.
Okay.
Now, Jim, you're the finance professor. Tell me if this is accurate. My son was talking about like, oh, my friend at school, you know, he's so smart. He's like studying theoretical math. And I said, oh, like the Black-Scholes model. And I looked at me like I had two heads. He's like, no, Mom. But isn't Black-Scholes kind of theoretical math?
Oh, absolutely. It absolutely is. It absolutely is. But you have to differentiate between like, I mean, take me and then take like Jacob, right? Like, I mean, Jacob is like theoretical math. I'm theoretical finance. And so there's a very big difference between finance and math.
Okay.
And so it can be a little territorial too. And so that might be what the feeling that you were getting there, where kind of the math guys kind of think they're kind of a rung above us, which I don't necessarily disagree with that.
The math guys think they're above theoretical finance. So theoretical math.
If I had to guess, and you can ask Jacob. I mean, maybe he would have a different take on this, but yeah.
Where do we put Julia?
Oh man, I don't know. She's kind of like the all-star quarterback. She's kind of like the rogue.
I think she's both, right?
Yeah, I mean, yeah, because I can't remember what her MS is in. I'm not sure if it's in math. I think it was in physics.
I think
wasn't it in physics?
Yeah, I think she's.
Yeah, she's a whole different deal. Like I think she's several rungs above both of us.
Yeah.
And so yeah. But yeah, theoretical math and theoretical finance are not the same thing. There's a lot of overlap, but they're not the same thing.
Just to set the hierarchy before this segment, and then we can get to it, John. So like Dr. Jim, theoretical finance, Jacob, theoretical math, Julia, theoretical physics, traders.
Well, not really. I see. That's funny, but I would actually, of course, flip that completely on its head because we're the ones that sit around and just argue and talk about like how to actually do it and why it might work. You guys are actually doing it. Like you guys are actually out there, like actually doing the thing.
But
we're just theorizing about
we don't need to know how the sausage is made. Is it an efficient market? Then we trust it.
Well, here we go. That's why this segment is perfectly timed for this morning. It's absolutely perfect. All right, John. So we might be ready now. I don't know. We'll give it another shot. I mean, who knows? So let's go to the intro slide. So are option pricing models realistic? Okay, well, let's talk about that. All right, John, go ahead and kick us off here on the first slide. So every research model developed in any field has to make certain assumptions that allow the model a certain degree of applicability to reality. Real life, and especially the financial markets, is a highly complex structure that is living and breathing and downright messy. So let's look at the grand poobah of all option pricing models and gauge just how realistic it is or isn't. Do you guys think it's fair to say that the financial markets are messy?
Yeah.
Yeah. Sure.
I think it's fair to say they're messy. I mean, you know why I think that's fair to say they're messy? Because I always say they're like a toddler. You never know what you're going to get. Like you really, truly don't. Like you could say you're going to wake up this morning and you're going to put your nice clothes on and you're going to go to church. Then all of a sudden you turn around and they've rolled in the mud and they've got a jelly donut in their hand. Like that's exactly what the markets are.
I think you're describing my house every Sunday morning, actually. Yes, that's 100%. Like, why are your feet so dirty? A million every single time. I mean, Jenny, yeah, we all remember with our kids.
Yeah.
I mean, 100%.
Yeah.
And so, okay. So, yeah, I think it's a fair way to put it, even with the efficiency and all those things, which obviously we're going to talk about that in a few minutes. It's a living and breathing thing, man. It's a living and breathing thing. And it's like, here's another good example. You have this relationship that we can all appreciate between market prices and market volatility, right? We know that 95% of the time or more, they're going to be inversely related. That's very reliable. We know that. But does that mean that has to happen every single day? Not at all. Because they are their own entities at the end of the day. You will have days where the market is up and volatility is up. You will also have days, they're not as common, but you'll have days where market is down and volatility is down. Yeah. And so even though we have this reliable relationship, because they're living and breathing, it's not necessarily 100% going to be accurate every single day.
I agree.
Okay, so John, hit us on the next slide. So let's take a look at the Black-Scholes option pricing model. And this will help you guys, right? This will help you guys as traders. You guys are doing the thing. I'm going to help you guys. So just in case you're at like a holiday party later this month and you find yourself in a conversation at the Punch Bowl about option pricing models, you're going to be able to break it down very, very simply. So here you go. The Black-Scholes option pricing model is actually, it's very complex.
I'm going to have this folded up and in my back pocket just in case this comes up.
That's all you got to do. This is post-it note stuff. This is this is icebreaker stuff, right? The Black-Scholes option pricing model, very complicated, very complex. But if you break it down, all it's really doing, the two terms in the equation, I mean, there's probability density functions, there's D1, there's D2, there's all kinds of crazy stuff going on. But all it's doing is it's measuring a probability weighted value for the stock and a probability weighted value for the strike. And it's just looking at the difference between those two elements. That's all it's doing for calls or for puts. This is the equation for calls. Puts would obviously look a little bit different, but that's the basic idea behind what the model's trying to figure out. That's how you get intrinsic value. That's how you get extrinsic value. It's just looking at probability weighted values, stock price and strike price. It's really that simple at a very base level.
I like it.
So this is what we're talking about when we're talking about the Black-Scholes model. Okay. All right. I'm ready now. Let's go. You guys are now going to be tested. Okay. All right. Here we go. So here are the six main assumptions of the Black-Scholes option pricing model. And I have the answers on the next slide, but I want to see how my traders are going to do this morning. So I'm going to keep score. I got my pencil here. So here's what I want to know. You guys have to tell me, is that assumption of the model realistic or not? Based on, you guys have what? Decades of experience now, right? Decades of trading experience. So you guys should get 6 out of 6. There's no reason why you shouldn't get 6 out of 6.
Can I ask one question before we go forward?
Sure.
What does GBM stand for?
That's what I was going to ask. That's what
I'm going to get to that. Don't worry about that. You guys are putting the cart before the horse. You guys need to focus all your energies on question number 1. So question number 1.
Hold on. I also need a definition of what realistic means.
Is this what we actually see in the markets?
Oh, okay.
Like, do you think this actually represents what happens in the live markets that we trade every single day? That's what I'm looking for.
Theoretically realistic. Okay.
No, practically realistic.
Okay.
Again, this is like, is it me, Jacob, and Julia in an ivory tower theorizing about what could be? That's not what I'm talking about. I want to know, is this actually what happens in the markets that we trade every single day?
Okay, I'll say the log normal distribution, realistic.
Yes, I'll go with realistic.
Okay, so the first one you say yes. The first one is realistic. Okay, all right, beautiful. Okay, European style options. Now, let me be clear about this.
I was going to say I refuse to answer on the grounds that might incriminate me.
let me be clear. The Black-Scholes options pricing model, the Black-Scholes option pricing model assumes all options are European style.
European style, right? So yeah, I'm going to say yes.
So cash settled. They assume that it's going to whatever price it ends at, right?
Correct, but they assume that there's no possible assignment before expiration.
Correct. Okay. Yes. Then I do think that you have to pick one or the other. So yes, I'm gonna go with yes.
I'm going to go, Liz. I'm going to let you in on something. I think I'm going realistic across the board. But
I want to help you guys out. Let me help you guys out because you're floundering here. We're only on question number 2. Remember.
I'm gonna go yes. No, you have to.
Wait. Hold up. Remember. We're talking about all options.
Yes.
We're talking about all options.
Well, it's very rare that you get early exercise, so I'm going with yes.
It doesn't matter if it's rare.
Oh,
it
then
just has to be a possibility.
Well, okay.
Then not realistic. There is a possibility that you will get assigned.
Yeah, sure. All right, then we got to go with no.
Yeah. That's why I asked what the definition of realistic was. There is a possibility that,
this is why I'm here. I'm here.
Then I retract number 1 because there's a possibility to get outside the log normal distribution.
Well, okay. No, this is great. John, put them down on the calendar every Monday moving forward. This is amazing. I don't want Tony and Nick back. Tony and Nick are gone.
So if there's a possibility of anything, I'm taking
No, you're misrepresenting the position. It's not about what's possible. It's about what is the practical living and breathing thing that we trade every day. Because it's possible that the NASDAQ goes down 1,200 points today, but is that practically going to happen? Oh, again, it's possible, and not really, right? And again, I'm not to say it's not going to happen, but you guys know what I mean. So again, the log normal distribution, let me help you guys out. You guys got that one right. So don't go back and retract that.
Okay.
Stock prices are log normally distributed. Like, you can't even argue that. Like, that's kind of a statistical fact. Right? Okay.
Well, good thing you didn't get that one wrong, Liz.
Okay, European style. I had to coax you and help you a little bit. Okay, but okay, so you've changed your answer to no. Okay, great. Okay, number 3. Now there's no more help from this point forward.
Okay.
Number 3. Financial assets follow a geometric Brownian motion sequence.
Sure. That's realistic. We all love the Brownian motion.
We love a good geometric.
Not just any Brownian motion. It's a geometric Brownian motion.
And for sure, yes.
You know,
oh my gosh, can I tell you guys? So since we're totally off the rails this morning, let's stay off the rails. Let me tell you guys a super funny story. Oh my gosh, this is so funny. So this was back in 2016. I had just joined the Tasty Network. And so I was super excited. I mean, just like I am still today, but everything was new, whatever. I did a segment within the first couple of months, and it was about Brownie in motion.
Oh,
right?
yeah, we remember.
And I went home, and I went back to Detroit because I was in Chicago at the time, of course. I went back to Detroit, and my mom was asking me how things were going. And I was like, oh, my gosh, it's amazing. My coworkers are amazing. I love going to work every day, blah, 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 blah. And she's like, well, what is one of the segments that you did recently? And I was like, Mom, I did a segment recently about Brownie in motion. And I was like, do you want to watch it? She's like, I can't wait to watch it. And I couldn't believe it because my mom, right? She's 70 years old. She doesn't give a rip about stats or math. I'm like, why would she want to learn about Brownie in motion? We watched that whole segment. And then my mom said to me after the segment, she said, Jimmy, she said, I didn't think it was going to be about that at all. She thought it was something totally different. Brownie in motion. She thought I was doing like a cooking thing or like something crazy because she knew on the network we did all kinds of fun stuff. And she thought it was something fun.
It's called Tasty Trade. She thought you were doing something. Yeah.
Correct. Now that's not as good as your Tasty Girl story, but it's up there. It's up there.
I have always wanted my daughter to go to school for Halloween as a brownie in a brownie uniform, an Earl Brownie uniform, and like be running all day.
It's perfect. It's amazing. It's amazing. Okay. All right. Geometric Brownie motion. You guys say it is realistic. Okay. Beautiful. Okay. Number 4. The markets are frictionless, which means there are no transaction costs.
False.
Okay. So you say no. All right. The risk-free rate in the market is constant. It never changes.
That's false.
Okay. You say no. And then lastly, volatility is constant. Volatility never changes.
False. Good thing I didn't go realistic across the board. I would have been way off.
Okay. All right. So what you've said is yes, no, yes, no, no, no. Okay. Here are the results.
Yes.
Look at you guys. 100%. Look at you guys.
What's with the orange on the left?
I'm gonna get to that. I'm gonna get to that in a second. You guys are some overachievers. Tony and Nick, I gotta shake them midway through the segment to make sure they're still awake. Like, you guys are looking ahead. Like, you guys are figuring out.
Aren't we more fun to do the show with? Yeah,
that's what I'm saying, John. Every Monday, this is it. This is the new rotation.
Team.
It's yes, no, no. And for all the reasons we've talked about, right?
Yeah.
And I mean, geometric Brownian motion, that actually is the best way to model asset prices in terms of shocks and drifts. Things I've talked about before. I'm not going to go down that road because I want to stay focused on this. But that actually is the best way to model asset prices. And of course, frictionless, that doesn't make any sense because we all pay transaction costs. Risk-free rates, they may not change that often, but they certainly change. Mm-hmm. And then lastly, the volatility part, I've talked about this a lot on this segment with like arch modeling and volatility clustering and all kinds of things. The reason why that's in orange is because I just wanted to draw attention to the simple fact that this is the one thing that we do, right? Like, if you had to like summarize our whole network into like one little snippet, it would be we're trading volatility. Specifically, we're selling volatility when it spikes, but also when volatility is low, we tend to, maybe I'm buying more spreads, maybe I'm buying more long volatility plays, whatever. But so the constant volatility of the Black-Scholes model, in my opinion, that's the thing that it falls short on the most. That's where it really misses the mark the most. So that's why it's in orange.
That's the thing that we know, we inherently know. Honestly, when I look through all this stuff, the one that I knew is the constant volatility, because on the trading floor, and Jenny will be like, we were behind us. We're so old that at some point when you're modeling your options, we literally had to go in there and be like this, tick, 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 tick to the volatility.
And it would be a crazy swing. It could have a crazy swing on your deltas as you're changing all the volatility. Your deltas could have a huge swing as the volatility is going up. And so when you're looking at your overall position and as a market maker, you're trying to be pretty neutral and hedge all your deltas. It was nuts when you went in and made those manual adjustments to volatility and then printed your new sheets. You were like, whoa, didn't think my deltas would change that much.
Yeah, exactly. And so you guys were like manually overriding the shortcomings of the option pricing models, like in the pits.
I'm not gonna lie to you. I was guessing on the Brownian motion. I'm glad I got led into the right answer.
But Jim, back in the day, there were printers on the trading floor, and the traders would manually make changes into their, volatility in their positions, and then they would like go reprint my my papers or what did we call it? I don't know.
The sheets, your sheets.
Yeah, our sheets, like reprint my sheets. And then you would see, okay, now this is my delta. Now this is now these are my Greeks. So you would have to update everything and reprint it. And then you would have to then try to make some adjustments. So
it's so crazy because now it's all done for us. Like now, like inside of Tasty Trade, it's like click a click and you see it all.
Yeah,
isn't that crazy?
And it's constantly repricing as it's moving. It's repricing everything. You'll see it. You're seeing everything being repriced.
Right.
Yeah.
It truly is a Brownian motion. Yes, that's it. Okay. So here's my question to you guys. So you look at that scorecard, it doesn't look that promising, right? It's like, man, this thing is really missing the mark quite a bit. So my question to you guys is, is it useful still? Like, does it still serve a purpose, or is it really just kind of theoretical bunk that doesn't really map into reality that closely?
So wait, I do have a discourse. I do have to say something here about this, because especially the European style right there. So in any type of research, you have to put, or any type of theoretical thing, you have to put parameters in there. You have to. Otherwise, it's just kind of open-ended. So I do think it still has its time and its place, but everything has to pick something in order to put it in there.
And here's another question. Like Natenberg, the option pricing was the Bible for option traders back then. Now, Julia and Anton's book, are they still hanging their hat on the Black-Scholes model in their book?
Yeah. I mean, as far as I understand it.
Pricing model, though. It is the pricing model for options.
Yeah. It was in the 70s, I think, when it came out, or 70. Man, I don't even know. I'm trying to think. Capital asset pricing model was like 50s, 60s. Black-Scholes, I think, was 70s, if I'm not mistaken. Well, and so, it's crazy to think it's been 50 years and it hasn't really been updated too much. But
Dr. Jim, here's your chance. Dr. Jim Schultz, you could create the new
man,
pricing
I don't
model.
know. Yeah, I really enjoy the practitioner side of things a bit more, I think, than the theoretical side of things. And so, but I want to go back to what Liz just said a second ago, though. Liz, you are 100% correct. And I know this before I joined Tasty, I was in academia. I was doing research. I had to get published. I had to do all these things. And so the reality is this, and the Tasty research team does this every single day too. Whenever you build any research model in any field, you have to make concessions. You can never capture every aspect of real life perfectly. You have to set parameters. You have to make concessions. And so that's why I wanted to lay this out here, because these are the 6 primary parameters that are set in the Black-Scholes model. And this is the scorecard in terms of how it maps to reality. And so, Liz, you said you still think it kind of has a time and a place. Jenny, what do you think?
Well, it definitely does until something better comes along. That's what we have to, is the best we have to use.
Well, and it's hard when you have moving parts. And it was derived in the early 70s in 1973, the publication. And it also got in 1997, the Nobel Prize in Economics. So it started in the 70s, but in 1997, it won the Nobel Prize in Economics.
Yeah, exactly.
And that's when we came onto the trading floor, 97.
Yeah, we gave it the prize and walked onto the trading floor.
There you go. There you go. All right, so let's go through the verdict. In my opinion, here's how I think about this. I think there's 2 aspects to this. So number 1, if you're attempting to trade apparent mispricings in the market, Like if you're an arbitrage trader, you're just trying to arb different mispricings in the market, then, the opportunities that you might go for, they're only going to exist for fractions of a second, fractions of a millisecond. So these shortcomings are going to matter a lot. The fact that they're disconnected from reality, you're going to have to improve on these models a lot. Now, there are things that do improve on the Black-Scholes model, which I referenced earlier with like arch modeling and Garch modeling. And heteroskedasticity and things I've talked about on the network all the time. But there's a lot of improvements that have been made to the original Black-Scholes model that have kind of started to kind of plug some of the leaks. But in my opinion, so now in the black box, as retail traders, number one, we don't have the resources to compete on that level. We can't go for mispricings. We can't go for, you see something that looks off. Before you even register what actually happened, it's already gone. It's gone because the algorithms are already, they've all been written, they've all been trained to look for that specific thing. And they're all competing against each other. And the competition is so fierce. I don't know if you guys probably know this, just given obviously what you've done for so long. I remember in my PhD program, we were looking at all these things, and I was actually in the trades and the quotes, and I was looking for timestamps and mispricings and whatever. And what we saw, this was back in 2007. So 2007, 2008, what we learned was that the competition was so fierce inside of a millisecond that the different traders and the liquidity providers and kind of the professional traders, they would actually physically move their operations closer to the exchange so that there was less physical bandwidth that they would have to go through so they could have an advantage over the next guy.
That's 100%.
Is that not crazy?
That's 100% correct. And it's pretty interesting too, because arbitrage used to be a real thing, and it given the efficiency of everything that's happening right now, to your point, it's still there, but it's so fast that no normal human can take advantage of it.
That's exactly right. That's exactly right. But that brings me to my main point. So is it still useful for us as retail traders? Yes, I think it's still incredibly useful, because at the end of the day, what the theoretical models do is they essentially ensure that we are going to have very efficient markets and fair pricing. Because again, you've got all of these arb traders that are all around the edges trying to pick up, half a penny or a quarter of a penny or whatever. Which, by the way, did you guys hear the pennies out of production? There's another quick little side stand. That's crazy.
I know. Do you think we should save some pennies? I have a giant jug.
Why would you not? Why would you not? You don't have anything to lose other than you're lugging around a jar of pennies for 30 or 40 years. And then, so maybe that is a pretty big gotcha. I don't know. But I think as a retail trader, the efficiency and the fair pricing, that's what we're hanging our hat on. We're hanging our head on the fact that they give us this theoretical foundation to then start to do the things that we think really matter with the strategic maneuvers that we make with volatility and implied volatility rank and contractions, expansions, all those kinds of things.
Well, Jim, I've got to say, this was a lot of fun. I felt like I was on a game show. And it was so nice to see you on a Monday morning.
Yeah, it was great to see you guys too. Really, really awesome. And so let me get them a few takeaways, and then John, let's cement this down on the schedule for the next at least 8 Mondays in a row. Even the best research models always include some layer of assumptions that allow the model to operate, which is what you just said a few minutes ago, Liz. But sometimes all those assumptions pull the model too far away from the reality that we all live. And even though the Black-Scholes model might appear to do exactly this, it still serves as a reliable foundation for theoretical pricing for us as retail traders.
I like it. This was
Love it. Dr. Jim, brought me back to the the good old times when we used to study for our option classes before we made it to a badge.
Yeah, that's right, man. You're going into the Wayback Machine. Yeah. You guys took me back to academia. We're taking you guys back to the floor, man. That's good stuff.
Yeah, Jenny was my teacher. All right, Dr. Jim, thank you very much. We'll see you next Monday.
Sounds good.
Bye. We're going to take a quick Hello, everybody, and welcome back. I'm kind of excited for this one. The research team is an amazing organism, and they are putting together zero DTE's strategies on Mondays as well. So we're gonna it's a zero DTE SPX option trading.
I know. So I know we're like a little behind schedule. So if we don't get to cover this, give this like everything it deserves, we can go over it again tomorrow when we're sitting in the pit at the SIBO.
If you don't give it all you got, we're going to do it again.
We don't give this 100% right now. You're going to see this again tomorrow.
All right, so let's jump into it. So 0 DTE breakdown. And this is springboarding, and I think what Kai was talking about is that they're going to keep, having these build on top of each other, which is kind of fun.
Okay, so last week was a strong holiday week with all 4 trading days moving higher despite light volume. SPX gained 3.7% for the week and 4.7% over the last 5 sessions, while VIX fell more than 10 points from recent highs. So it was, not that long ago when we were shocked at how high VIX had actually gotten, almost 30.
Yeah, it was high. I'm actually just trying to see the bottom. So the VIX one day is the yellow. I mean, you really can't tell that it's yellow. So the VIX one day got above the VIX only on that huge down day in SPX. Can you see that?
Yes.
That's the only day that the VIX one day got above the VIX. So that's pretty interesting.
And is that a tell? Is that a tell that might could be the high of the VIX?
Sure.
I don't know. I don't know if there was ever a piece of like if the VIX one day is higher or no, because it probably is a lot. It probably is.
But look at this. Look at this. Since 1021, the VIX one day never got above until that big massive down day.
Yeah.
Which is pretty interesting. Okay.
These things are calming down. Like today, I know we're down, but it doesn't feel scary. It feels calm-ish. Like. Yeah.
It does feel calm. So like the SPOOs are only down 27 right now. I'm going to go to the VIX right now because we were almost down 10%. VIX is up only 5% right now.
So where is it? 17?
So it's 17.25. It was just under 18.
Okay, so that's not bad. That's not bad.
Not bad. All right, let's go to slide 2. The past 2 weeks generally matched long-term SPX intraday behavior, except for one larger than normal downside move, which we saw. Last week, however, showed steady and strong upside action. Okay, so this is the past 2
weeks. Up days, down days, up days return, down days return. So there was one.
There's the one big down day where the VIX one day was above that thing. So I was actually pretty surprised by these results. So let's go to number 3.
All right, next slide, please, John. Yeah, iron condors were able to reach the 25% profit target 100% of the time, despite an otherwise choppy and two-sided market. Honestly, that surprises me that it was able to reach a 25% profit target 100% of the time.
Even on that crazy move. Now, I was talking a little bit with TP about this as well, and he texted me. He's like, I thank God I got out of it at a low percentage because right after that is when it fell out of bed. So,
yeah.
Do you remember that crazy down day too?
Yeah.
Like we got out of all of our SPX and then it went crazy.
And then it was down. But now that's a 25% profit target. And is that putting, and I don't know if this is putting them on the open.
No, this doesn't go, I don't know. It doesn't say. I'm pretty sure with these, they're putting them on the open because that's what the research team usually does. I know we've kind of taken a different path with Jacob where we've gone through, decided that the 9 o'clock hour is better for us. And 9 o'clock is the time for us to put them on because of the other research we've done with Jacob. I think this one is starting over.
No, it does say entry 8:30. See on the bottom?
This one is starting over. So they're starting at 8:30. And this is a 20 delta, $20 wide iron condor with a 25% max profit. Stop loss, none.
They all got out in the last 2 weeks. But honestly, if you put it on, I don't know, if you put it on at 9 a.m. with this, I don't know if it would have gotten out. I think these got out by the skin of their teeth on that one wild day.
And that one wild day. Okay, but let's go to slide 4 because this is interesting. Increasing the profit target to 50% did not improve performance. A single large-sided one move was enough to overwhelm the strategy.
Yeah, because if you take full loss on one of them, it's not good.
Yeah,
because this is just covering a short period of time.
And I do think that one day, now this is a 2-week study. I don't want to say that this is, 2.5 years of data like we have been doing with Jacob. This was 2 weeks, maybe a little bit more, maybe 3 weeks. So this is 3 weeks of studies. And there was one really weird day in there. And I haven't seen a day like that in a long time. That was when we went from up 125 to down 125. That's a weird day in the markets.
It was a crazy day in the market. And I think a lot of people got hurt that day, of people who might have been rolling up, because we've seen people manage these where they're rolling up puts and then we have that huge down move and then they're rolling down calls and they're just got their position into a mess.
Yeah, you do. You can trade yourself into a pickle here. And I don't have a tendency, and I know we were on the road with the last show we were at, where you put on the 0 DTs and they were really rolling and kind of actively managing this. I don't do that. Do you?
No, but also we've decided to go with strategies that have a lower risk. Like if I'm selling a $10 wide and collecting almost $4, my risk is 600 on one, 1200 on two, 1800 on three. If it's not that big versus if you're selling a $30 wide or 20 delta. We just looked at that one 30 delta, $10 or $15 wide, you're only getting 80 cents or $1. So your risk is much more.
Yeah.
So I think you don't have to manage it so aggressively if your risk is a little bit less.
Agreed. That is true. And I do think I'm bad at over management. I can trade myself into a pickle. So the management doesn't make much sense for my style of trading. All right, let's see number 5. Okay, from long-term perspective, raising the profit target to 50% significantly increases the loss rate, which I was surprised by.
Okay.
Higher profit targets only work if you use a stop loss. Okay, so what do we have here?
There's a very fine line. There's a very fine line between what should your profit target be? Because if your profit target's not big enough, your wins, you need so many wins to recoup one loss. Whereas if your profit target's larger, then you need fewer wins to recoup that loss. So that's always, I think, the real question. Like, what should my profit target be?
But I mean, are you surprised by this? Take a look at the 50% profit target. You have a 20% loser versus an 11% loser. That's insane.
But I do, again, this is only over a very short period of time.
This is 2 weeks. You're right. That's an excellent point.
Yeah.
And one loss can wipe out quite a bit, especially when you're using the 20 delta, $20 wide. They're decent losses.
Okay, next slide, please. All right, 1120 and 1125 were the 2 toughest days for iron condor sellers due to unusually large directional moves. However, SPX still spent 30% and 45% of the session, respectively, inside the strikes, providing enough time for active profit taking before a breach. I mean, I think the basis of this study is shoot for a lower profit target, but maybe that's in this environment. Maybe it's not always. And I do think the market changes and our strategies adjust based on the market changing. So I know consistency in trading is important, but sometimes the market's different. Like we've had wild moves in the market. So maybe I am taking my trades off quicker now, less percentage now than when we're just kind of sitting there doing nothing for a long period of time.
And we've had wild moves in the markets. You and I are adjusting our trading. I don't want to do both sides because of the wild moves. I just want to do one side because then if you get the move in that direction or if you're getting the reversal, you can get out.
Right.
Yeah.
So, okay, last slide, please.
I do like taking advantage of one side. The past 2 weeks leaned more towards call side testing. There we go. But that seems to be like consistent with history, consistent with the strong market rally.
All right.
Okay, so if you take a look at this outside call side, outside put side, yeah, it's 11%. Call put ratio. Inside. Okay, this makes sense. It has been the calls that have been tested both times. There's only been 2 tests, but it's been the calls that have been tested both sides.
But we had that big day where,
but your calls were tested. Your calls were tested, and your puts were tested on the big.
Yeah, we had that big day where they were both tested. Last week was a big up move, so we had a much greater than normal move to the upside last week. But the week before, we had some big down moves. So
yeah.
But again, this is just taking a very small period of time, and we're in a whippy market. So my takeaway is when we're in a pretty volatile market, go for less of a profit target.
Yeah, less of a profit target. And like I said, I'm a one-sided trader, but that's where I've made my bet. I do look at these like a menu. I think there's nothing wrong with people that are doing both sides. We have lots of people that have been very, very profitable, but I'm just more comfortable with less of a drawdown on one side.
Yeah. All right.
Perfect. Yeah, we did it. We got through it, Jenny.
I know. That was good. And I appreciate the research team. They work really hard. They put together these amazing pieces. And it was great having Quinton today and having Dr. Jim on. And we've got some really great guests coming up. We have Ryan Grace from our crypto team coming up and Quinton from the Trade Desk.
Yeah, so we're going to take a quick 90-second break and come back for our final half hour, Jenny.
Stay tuned.
The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this Tasty Live site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Tasty Trade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
What color of jeans? They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before, and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's
Oh,
game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat.
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancelleri. Bam!
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Hey, what's going on, everybody? Welcome to Option Trading Concepts Live, the Cyber Monday edition. I'm your host, Jamal Chandler. I'm here with Ryan Grace. Ryan, how was Thanksgiving, man?
It was great. Yeah. Thanks for asking. Yeah, I had some family in town and had a great meal. Snowed in on Saturday, unfortunately, but we had some good football to watch. So
yeah, we got hit. We got hit pretty well. But you know what? I like if it's gonna snow heavy, do it exactly the way that it was done. It basically came Saturday, Sunday. We were able to clear it out so that we're able to move around on Monday. I mean, that's the best way. Like, if we get that type of snow on like a Monday or Tuesday, it's way harder to deal with. So, yeah, I went to Wisconsin, hung out with the in-laws. We usually don't do that. We typically go to Champaign.
Okay.
Where my brother-in-law is, but they had something else going on, so we went to visit my father-in-law, and it was great. It was great hanging out with them. I mean, look, there's always these turkey trots, right, like that people do. I never do that. I mean, I never get up. I actually got up to do it, but dude, it was freezing that morning there in Wisconsin. I mean, the wind was blowing. It was super cold. And but it ended up being fun. Nice little. I walked it first of all. I don't run.
Okay. All right. Hey, at least you're out there.
No, I work out. I do HIIT workouts, but I don't do runs. That's not my thing. It was nice to walk. We walked 2 miles. It was great.
I was going to ask, what is the turkey trot length?
It was 2 miles. Yeah. They had a 5 miler if you wanted to do that, but there was the 2 miler. And you know, some are smaller than that. Like, I feel like the other ones, like the other one that when we're typically in Champaign. My wife and crew goes every year, and it's only like a mile. Like, it's like quick, you know. Like, but this one was like serious, dude, and to the point where people were warming up ahead of time. You saw people like running around, especially on a day like it was, because it was freezing there. I mean, I can't accentuate it enough. It was really cold that day. We had to layer up too. My toes were actually still cold. It was crazy, man. But no, it was good, man. It was a good time, and then we hung out there. I mean, they're family, so that part is actually good. I mean, that was fun to hang with them. I'm setting up, obviously, the worst part was having to sit there and watch the Green Bay Packer game with the family, which, again, it was great being with family. It was great being with family, but, you know, and it was funny because my stepmom, her mom was there. She's like 90. She's so sweet. Great lady. But she had no idea that I was a Bears fan, nor my youngest son. Okay. So she turns to my youngest son. She goes, "So are you like?" Because she just assumed, since my wife's a huge Packers fan. She assumed we all were. She turns to him. He's 13. She goes, "Are you the only like Packer backer at your school?" And he's like, "No, I'm not a Packers fan at all. I'm a Bears fan." This old lady, she was like, she couldn't believe it. She couldn't believe it. And then she turned to me. Are you also a Bears fan? Yes, I am. Yes.
Surrounded by Bears fans.
That's right. Yeah, that's right. Thank you for the applause. Thank you. Yeah, I see you, Mikos. They are. You know what? Everybody's saying NFC leading. I get it, but I mean, we're tied with the Rams, so we'll take it.
Looking good though.
They're looking good. They are looking good. It's true. I mean, I would say if they weren't, that's a huge win to beat Philadelphia. I know, again, you don't apologize for a win in this league, Ryan. I mean, whoever you beat is whoever you beat.
Yeah.
You guys had an interesting game yesterday.
Yeah, well, like we've seen, any given Sunday, as they say, right, it's hard to explain some of the upsets that you see at times. And then, again, with the Bills here, good win against the Steelers. But, yeah, Bears over the Eagles. I think you got to be proud of that.
How about them yelling "Fire Tomlin" chants in Pittsburgh?
It's crazy, man. It's like the crypto markets. Nobody has any patience.
I know, right? It really is. It really is. As I'm being upfront and honest,
I can't believe that. Like, what?
I know. A guy who has shepherded you through a lot of different things. It's the world we live in. It's a trip. I mean, it's and again, I mean, the fact that their fans are yelling it at home. I think you can honestly say, though, it's probably there's more to blame than just Aaron Rodgers. But that being said, I think Aaron Rodgers. I think it's over. I think you're watching the end of it. I mean, the last 3 years, what doesn't matter to the team. It's more like he can't stay healthy, and he's like 40-something, and it's over. It's a wrap.
Yeah.
While I'm being transparent here, I gotta say I did lose in our fantasy playoffs in the Tasty League. Producer John beat me.
Oh, he's good though. He's good.
He's laughing because I know he's out there laughing his ass off. It's fine. It's cool. He got me. He even suckered me into a $20 bet. He did. Yeah. But I paid up. Look, I gloated when I won, and I took his $20 before. I'm going to give him his props. Now he beat me, and he's moving on. I'm out of the playoffs. I think I did have the most points in our league this year, though, so I will take that for sure. Anyway, moving on. There's lots to discuss. I mean, there's I would say on the equity front, things are pretty quiet, as I would expect after a week that we had. I know one stat that I saw, and I'm not surprised by this stat that I saw, but it's fairly true. Usually when you have a week where the week before Thanksgiving where every day we're positive, typically coming in that Monday, we're going to be red. And that really shouldn't shock anybody. We'll see if we end the day red. But, after such a bullish week, you would imagine there's going to be a little bit of give back.
Nice recovery from where we were when we did the show, this time a week ago.
Yeah.
The VIX has come in, volatility's come down a bit. I think we're feeling a little bit better about equities here. Kind of seeing a reversal in the trend, at least very short term. Back to bullish.
Yeah, and I mean, honestly, the wall of worry probably lost one brick last week, which was essentially the brick that was related to whether or not the Fed was going to cut rates. We saw big changes in that week before. But last week, I think they kind of came to their senses on that. There still is a worry about AI valuations. That is obviously still something that is out there. But even bigger than that, which is great to have you here today, there's obviously a lot of worry, more and more, about Bitcoin. Like you said, I think a lot of people don't have patience. All of a sudden, it cracks me up. And Tony and I were talking about this last Friday when I was on the morning show. It cracks me up when it's 120 and everybody's tripping over themselves to buy it, but when it's down to 85, people get nervous. It's kind of how it goes. And I think these are great areas to start to sort of pick in a little bit if you haven't. But lots to talk about here. I know you got some slides, so we can just jump straight into it because there's a lot going on with this whole space.
Yeah, I guess let's take a look at performance here. To start off, we'll go through our expected moves for the week, which really haven't changed week over week. Obviously, this has been a poor performer for the last couple of months. We saw the blow up going back to the beginning of October. Really haven't had much of a recovery. Saw some weakness in the dollar over the last few days, over the Thanksgiving holiday. Saw gold up, and gold still near all-time highs. Bitcoin traded back to 91 and then slammed lower within an hour last night. Some people pointing to the Bank of Japan and a likely interest rate hike here that's coming, and that's causing some positions to be unwound and some volatility to enter the market. But I think that this is just a continuation of the environment that we've been in. Crypto's been weak for one reason or another. I think you could probably see lower prices, but I'm with you, Jamal, where it's definitely getting a bit more interesting if you have a longer term perspective. Short term, I think you sell any rally in here until you see some signals change. We got 91 and you're back to 84 in a quick second. you could probably see 75. And that was where we bottomed out back in April. So I think some of that weakness continues again until you get some signals that change. We can talk about that in just a second. But a couple things to point out here that do speak to that weakness. Solana and Litecoin now going into neutral territory when we look at those exponential moving averages on the monthly time frame, which keeps me away. We were bullish, now neutral, have been bearish on the daily and weekly time frames for a bit now. But
what do you mean by that, neutral?
So when I look at this, I just look at three different moving averages, exponential moving averages on a daily and weekly and monthly time horizon. And so when you have a couple of them cross over, or if you're bullish and a couple of them cross over, you're now neutral. And then once you get that third one that crosses the other two, you go into that bearish momentum.
Okay, gotcha.
So we've moved from bullish momentum to now neutral, kind of a breakdown of that trend over that time frame. And then the next stop is obviously bearish if we continue there. So that's just something that gives me pause. And the same thing that we've talked about before, where when you see that on the weekly, which is clearly going to precede the monthly, once that goes from neutral to bearish, I just tend to step away. It's not that I'm exiting my position. I'm long-term bullish in Bitcoin, hold a position from much lower prices. So, I'm fortunate in that sense. But this is not something where I'm excited to just jump in here and buy the dip when I see these signals. So momentum has been pretty bearish in here. You can see that when we look at price performance, down another 3% or so on the week for Bitcoin, but really in the midst of a correction over the last couple of months, down 20-some% when we look at Bitcoin, and then much, much worse when we look at the majority of other tokens. And I don't think you see an alt season or you see ETH recover until you get Bitcoin back into kind of bullish territory, and it would really take about 103,000 on the price for us to reclaim that bullish trend. So for now, I'm not really rushing in to buy the dip, but maybe you set some bids in there in the 70s, the low 80s. You buy a little bit if again you have a long-term perspective, but momentum has been pretty bearish.
Yeah, I personally haven't bought any. At some point, I'm honestly eyeing the idea of buying MBT futures. Probably if we go below 80, I'll probably get interested. Today, I just dipped in the micro ether, which again is a really small contract here, but just bought one of those today just because of the levels where we're at. We're getting fairly low. And again, I think you just sort of work your way in. You don't know. It's impossible to find bottoms. You don't know exactly when that's going to happen. So using such a small contract, I think, is fairly simple to do. That's what I decided to do. That's how I'm going to work my way in and just see if what happens here. We'll see if we can continue.
Yeah, I think that's the way to play it. The other potential opportunity in here, kind of short term, when you look at volatility, and it has come in a little bit from where we were about a week ago, but you could also look at possibly selling put options in ETH, in IBIT at much lower strikes, 20, 30 delta. You're not collecting a ton there, but it's a way to clearly play the dip here without going in there and getting those static deltas.
Yep.
But I think to your point, you want to keep it small and you want to wait and just let price kind of dictate what you do next. It's tough to fight these trends, whether you're trying to short something as it's moving up or you're trying to buy something as it's going down. I think you kind of just go with the flow here, and I'm in no rush to buy necessarily, but you could get to those levels where it's like, okay, this is an opportunity for me long term.
And correct me if I'm wrong. I mean, I continue to say this. There's not like an exchange that's gone belly up. There's not like this type of news that we would hear about typically 3, 4, 5 years ago in this space. There really hasn't been anything like that. It's just more of people selling.
Yeah, you've had the blow up in October that I think there was some balance sheet repair for market makers. You've seen some pretty persistent or consistent selling there. But a lot of that, I think, has worked its way through. You could maybe point to the macro environment. You're seeing a little bit of a slowdown in inflation data, some scare or concerns over growth. We'll kind of see where that data comes in. This is an asset that tends to do well in more of a stagflationary or reflationary environment where both growth and inflation are going up, or growth might be slowing but inflation's going up. And you're just not in that environment right now. And so that could be playing into this. But that said, I think, again, you just wait till you get that price signal. But to your point, it's kind of odd that we can't point to something directly to explain it. But I think it's just largely the macro environment, small asset class in terms of the market cap. And you're seeing price action that's not uncharacteristic of what it's done historically. This goes up 20%. We're not like, why did it go up? What do we have to point to?
Right.
I think you're seeing a pretty large correction in here, and then the path of least resistance has been lower. You probably see the 70s before it's all over.
I mean, I think that's a good thing, honestly, that there's not one story or one thing that people can point to and say, this is the reason why. Personally, that's just how I feel.
Yeah, I think, it kind of feeds on itself when you get this spike in volatility and you get a degrossing and kind of, these positions get taken down. I think that's what you're continuing to see.
And I think it's for that reason where you just got to find little ways, right? Little ways managing your portfolio well, but little ways to sort of dip your toe in, because when it happens both the directions, honestly, when it happens, it happens fast and you don't necessarily have time to recover. So that's why, like I said, I chose today, okay, see Ether kind of hitting some lows here. I'm dipping my toe in. I'm using the micro Ether contract. I think that's one of the easy ways to do it.
Well, if we jump to the next slide and we look at our expected moves, we're pretty much in the same territory that we were last week. As I mentioned, volatility has come in a little bit here. You'll see that if you look at your IV ranks in the tastytrade platform as well, at least for the ETFs, IBIT and ETH that I like to track. But expected move for Bitcoin right around 6,000. That's pretty much the same week over week, about $300 for ETH, $15 for Solana. The range in here is right around 80,000 to 92. We were at 91 as of, I believe, yesterday, back down to 84 right now. ETH, same thing. We flirted with 3,000 for a second, slammed right back down to 2,700. So it moves quick, obviously, but no real change in volatility, which I do think is a signal you want to pay attention to. If we saw a massive spike in vol, as we said, saw this selling pressure here, I would be a little bit more concerned that there's a larger move coming, but you're not really seeing that. You're seeing volatility come in a little bit and trading back down to the bottom of that range. So I would expect that we kind of chop around here, but again, I think path of least resistance for now is lower until that changes. And personally, while I have positions in a lot of other tokens, I'm not in a rush to buy anything until you see an improvement in ETH. I really don't see any sort of alt season unless you were to get a new all-time high maybe in ETH, and that's definitely not happening today.
So are you looking more for strength? I know there's an obvious answer, but I'm just curious. Are you looking for more for strength where you really want to buy, or would you get interested if you do see like a spike to the downside along with an increased implied volatility?
Oh, if you got a smash lower to a level where everybody's just losing their mind, and I don't even know how many people are paying attention. This seems to be a cycle where retail hasn't participated to the extent that institutions have. And I think you do have a different profile of investor here where they have more called diamond hands. They're not likely to sell. So you could see a bit more of a muted downturn here versus what we've seen previously. But if you do get that spike lower where people are starting to freak out, I don't know what that is. Let's just pick a big number, 55, 60, somewhere there. We have seen historically pullbacks to the prior high of the previous cycle, which I think would take you to kind of the high 60s or so. So if you lose that 75 level and you get there, I'm interested, but I think I'd probably speak for a lot of people that have been in crypto for a bit. I own it at a lot lower prices, so while it sucks to see that drawdown in your portfolio, I'm still comfortable holding the position, have a bullish thesis long term, so not in any rush to buy, the immediate dip, but absolutely, if you got to those levels where, and you look at the technical indicators too, let's just say RSI is well below 20, the fear and greed index that some of these different outlets have constructed is below 15, below 20 as well. That maybe gets interesting. But I really want to just add to positions in a bullish trend where we've seen that momentum come back in. We're probably back above 100,000. I think 103 on my indicators is where you'd need to get to for that to go bullish. And I'd also want to see from the macro perspective, we'd want some more clarity out of the Fed as to what's next with the path for interest rate cuts. I want to see a weaker dollar, and we've kind of seen a pretty strong dollar over the last couple of months. I'd need to see that first, and volatility kind of within the teens and holding there before I'm excited about buying any big dip.
Yeah, I mean, it's, and it could go either way right now. We could either see that spike down and we could see, a little bit of fear, which personally, I mean, that to me signals like, okay, this is some capitulation here, and then I get a little interested. That's why I'm trying to be patient here. This is a new thing for me, Ryan, the last couple of years, the idea of patience. I've tried to get better at it, right? Like right now you see this sharply down like 40K, basically, let's just call it. Yeah, it is about 40K. It was like 127 was the high, right?
Yeah.
Normally I'd be like, I'm pushing all of my chips in. And that's just not how you're supposed to trade. It really isn't. I've definitely done that type of thing in the past with other stuff. I'm not saying Bitcoin, but that's just kind of how I used to do. And now, I really do subscribe to that theory. Like, things can be irrational longer than you can be solvent. And again, I'm sure people will probably have an issue with me saying this is irrational. But again, I just speak to the idea, like, when it's 110, 120, people are tripping over themselves to buy it. Now that it's down here at a discount, nobody's interested. And that's just kind of how markets work. I've never really understood that. I really have never really understood that about markets. But it's interesting how people get nervous about narratives. And once again, there really is no consistent narrative around here as to why we're down. It's just some selling, which, again, that's entitled to happen in the markets that we occupy.
Yeah, I think you've got some fear around MicroStrategy, right? And we can speak to that in a second, but there's some fear, some concerns that if the price continues to go lower, they're going to have to sell Bitcoin. That's going to be reflexive in nature. They're going to have to sell their positions in order to fund their dividend, but they've raised some capital to maybe offset some of that for now. You've seen, and you can look at the digital asset treasury companies and the stock prices today, all down 10+% or so. You've seen that buying dry up, at least short term, versus where it was heading into that all-time high, which was just, again, at the beginning of October. And so I think as that ebbs and flows, everyone wants to point to one catalyst or another, but I don't think that the long-term thesis has changed for me. This is something that on the margin largely just trades based on Fed balance sheet expansion or the perception of more liquidity, which is coming for sure. We have the end of quantitative tightening today here in December, and you're going to get some more from the Fed in the next week or so as well. And maybe it all changes. Who knows? But that's the key thing here, is that this can move just so quickly. It's so small.
Yeah, it really can. End of slides? That's it?
I think we've got one or two more here, just to take a quick look at our relative performance, which, as everybody can probably guess, Bitcoin has been outperforming, even though it's been terrible. There's a lot that's much worse. So Bitcoin market cap dominance still right around 60%. So that's the market cap of Bitcoin versus the total crypto market cap. Bitcoin's market cap makes up about 60% of the whole crypto market. And then anything trading against Bitcoin has been relatively weak. ETH for now, up 0.5% over the last week, but you can look at the trend in there on a 1 month, 3 month basis. And same thing with momentum. It's been pretty poor. But that said, Jamal, even though this is a show where we focus on crypto on Mondays, this is not our entire portfolio.
It's not.
Not even close. And there are a lot of other areas of the market that you could be in. At the same time, I think you want to have that short rates position on. When you look at lower rates, that's been the trend. Rates have been bearish. Gold's been very bullish on the other side of that. The dollar's been strong. Equities, we had a bit of chop over the last couple of weeks, but seem to have retaken that bullish trend. So there's a lot of places that you can go in the meantime, even though there's been a lot of weakness in Bitcoin. It's not like everything's all moving together in one direction and the VIX is at 40.
Yeah, exactly. I mean, that's the positive thing about it. Speaking of, as we've seen VIX really change here, which we'll get to in a little bit, VIX has really come in now as far as contango goes. That Z contract is $18 bid versus The January contract, which is 1965 bids, so like a whole $1.65 difference. And that Z contract actually has been lower for a while. Even when we were looking at November, you would see this kind of bump in November. There was this dip in December, and then there was kind of a bump in January. So that December contract has been showing us for a while that we were expecting a little bit of volatility, or less volatility, for the month of the end of December and the beginning of January here. But I guess we'll see if that ends up being true. You talked about Bitcoin dominating as it usually does. If for some reason it wasn't, would that be weird to you, or?
No, I think that would be a sign that you are in, certainly a different environment than where we are right now, one in which liquidity is pumping, and you probably need to see something where there's some form of, whether they call it QE or not, but balance sheet expansion. We're maybe inching closer to that. Obviously, the Fed is cutting rates, though the picture's not perfectly clear as to what that path looks like. But I wouldn't be concerned about that. I think that's more reflective of, a kind of a cycle where you're closer to, what you've seen historically, where you get that alt season. And for one reason or another, maybe it's still coming. I have no idea. I think you can probably assign a pretty high probability to this cycle maybe being over. There have been these 4-year cycles, and then you get this big correction and you probably just come back into the market about a year later and buy. But if you were to see those alts outperforming, I think that's pretty bullish. Almost the opposite of what we were seeing today.
Yeah, I would think so too. Yeah, for sure. Option Trading Concepts live here. Jamal Chandler along with Ryan Grace. Mikey is out of the country. He's actually in Japan. So if you see him in Japan, say what's up. If you see him in Japan somehow and you're listening to this show, that's amazing. Just us here chopping it up on all things related to crypto, but we're going to move around in a bunch of stuff. So please, if you're watching the show, thanks for watching. You can watch us on the YouTube page. Just go to Tasty Live. You'll see us pop right up. Please ask questions in the chat here. We're looking at it. So ask stuff right away or give comments, any things you want to look at, things that you're seeing overall with the market. Today, honestly, I have been fairly quiet as far as trading goes, doing a little bit of risk managing here, but really haven't put on, did I put anything new on? I don't know if I did. Well, yeah, I put on the micro ETH contract. I actually took copper. I took that trade off. It was a calendar call spread around the 6 strike. And as you alluded to earlier, Ryan, the metals have been going. This probably continues to go. But, it's like one of those things where you got to weigh out your gains, right? And so I had a nice 40+% gain. It's time to move on.
Take it.
You got to take it and run. And even though it's like $250, as I say only, I sound like a schmuck saying that, but $250 is a nice gain. You never go broke taking a profit, especially on a calendar spread. And this one worked out pretty well. I was long the Jan 6, and I was short. Ooh, look at some contracts right in there, some volume in that area. And I was short the near-term D6 strike. So decided to take that off. What else have I done? Like I said, I bought the micro ETH contract. MicroStrategies is one of those things that this was not today, this was from Friday, but it was, look, I feel like this is one of the most interesting trades on the board. I know what I like is the fact that I didn't jump in and do something early. I like the fact that I'm doing it around here. I have come to like being a contrarian in areas where people are really, convicted about, something going to zero or something being, whatever it is. And so I feel like this is one of those areas. This is one of the bigger proxies that you can trade as far as stocks for Bitcoin. Obviously, Bitcoin is going through a rough patch right now. Why not put on something in here? And so I already had on a January, what we call those delta busters, essentially selling the put spread to finance a call spread. Short the 160, long the 150 put spread. Collected a credit on that, and I'm long the 230, 245 call spread. Collected $1.15, I think, for this one. No, $1 maybe for this one originally. And then I did another one on Friday. I'm like, I think this is one of the most interesting trades on the board, and I want to give myself some time. So I went in February, and I basically did the same trade. And if it keeps going down, That's fine. I know exactly what I'm risking. It's I'm risking the loss of the downside spread. Not to mention I collected a credit. So in this case, I collected $1.15. I collected $1 for the other one. Overall, $2.15 that I collected, $10 wide spreads. So essentially $17.85 I'm risking, $1,785 basically. Overall for these two spreads, let's go. I mean, let's see what happens. This is what I live for, Ryan. This is it.
I like it. Well, and to your point, you've got defined risk too. So
yeah, I got defined risk. Yeah, and I'm not asking for a whole lot. Essentially, I'm asking to see if this thing is going to get back to November prices, early November. Essentially, is where I'm doing it, and even more so if you look at some of the last times where it hit, these levels earlier this year. March through basically April, it was hitting around this 230 strike, and that's exactly why I chose 230. So if you just erase, essentially these last couple of weeks here, I'm looking to see if it'll bounce back to these levels. We'll see what happens.
Maybe, or just goes straight down forever, Jamal, and this is it. It's dead. Crypto's over.
Yeah, somehow I don't see it going that way. I really don't. I really don't. But I'm also not a doomsday type person, so I feel like this is one of the more interesting trades on the board. I haven't traded this again. I'm making my bet in MicroStrategy. I don't really need to make my bet in a bunch of different areas. We'll see how this thing plays out. Outside of that, I still have on, a decent amount of bullish plays here. Nvidia is one where it's a calendar call spread. A diagonal spread, 180, 190. And for me, a lot of my longs at this point, for the last couple of weeks, a lot of my longs have either been in January. I'm starting to push some of those out to February at this point. I had a nice GLD trade on that I closed on Friday. And we've talked about gold. We've seen the moves. Gold has been pretty strong here. I don't know if you're trading much of the metals, but
I've been buying dips in gold. Not in it right now. Waiting for any pullback closer to 4,000. I'm not going to chase it up here, but yeah, I think you stick with what's working, right? Gold's done well, silver's done well. Copper, as you mentioned earlier, the dollar has been relatively strong at the same time, and I think on the other side of that, you look for lower rates on the long end of the curve as well. So I came in and shorted the 10Y future earlier, so looking for lower 10-year yield there.
Yeah,
will add to that.
Big move today.
Yeah, kind of snapped right back there.
Yeah, that's a huge move, man. And there hasn't been. I mean, I'm pretty sure that the chances of a rate cut are still intact. I haven't looked at that today.
87% last I checked.
Yeah, 87.6%. That is next week already?
Yeah, 8 days or so.
I feel like we've been talking about it for like 3 months,
right?
But now it's finally actually going to happen soon, December 10th here. Yeah, that's a nice little play there, Ryan. This thing this is a big move, I would say, for yields as far as that goes. The metals have been really strong to the point where, again, silver, you see breaking out here strongly. As much as I want to get short this, I'm going to wait because metals are a little bit a different animal. This is what we talk about all the time. This is why metals have those upside bid as far as skew and their options, because these things crash up and you're looking at it happen right now. Little question for you, and I think we kind of touched on it, but again, what price are you looking to buy more ETH or Bitcoin? Is it more about price or is it more about action? In the whole space that'll kind of draw you in more?
Yeah, it's a good question. I mean, I think in terms of just price, you probably have to look at this from a percentage drawdown perspective. So previously, and I don't think that you're going to see the same process in terms of the bottoming here where Bitcoin has pulled back 70, 80%, maybe. But when you look at something that's down 40, 50%, if we get there and you still have that long-term bullish thesis, which I do, I'm looking at this, okay, where are we 2030 sort of thing, right? We'll trade Bitcoin at times, but I don't really, I'm not that active in terms of like buying and selling. I'll add to dips. But if you're down 50%, I think that's probably a good place to start. So when I look at ETH, you're maybe a little bit closer to that, not quite 5, almost 5,000 at the all-time high, pull back to 2,500, 50% off of that, probably is interesting. Could it go lower? Of course. But I think from a technology perspective, the adoption perspective, what's being built on these networks, I think you want to own this stuff long term, in my opinion. And so when something's 50% off of its all-time high, it's probably a good place to start. Or you just go and look at the historical cycles. Well, the drawdowns in Bitcoin in its early years have been 70, 80%. Yep. I don't think you're going to get there, but if you get down 50, 60%, sure. And it absolutely can do that because it's an asset that can go up 200, 300%. I still think this is going to go to 200,000, 300,000, whatever. I think you'll see a new all-time high. But does it matter as much, right? Is it 55,000? Is it 50? Is it 60,000 in terms of timing the bottom? I don't think so, given the long-term outlook.
Yeah, it does seem like it's a big area here. This is a 3-year chart looking at the weekly. And as you can see here, just from, again, going back to last year when we had the big move heading into the election here, this is basically what this is. Or this was the week of the election, I think, right? Or the week after, if you will, maybe.
Yep.
11/11. But yeah, I mean, this is, the lows here of 80K. That's something I think, you could possibly see. Does that happen during the regular trading hours? As far as future goes, could happen overnight, but you could see that. And this is kind of the area I think it's trying to cling to right now. So it looks like that to me.
Yeah, you could see, maybe as this structure is still pretty bullish when you look at it from this time frame, maybe you have a double bottom in here. I think the price we hit at the end of November was 80,500, somewhere around there. And you've seen that, this has had these kind of moves up, these sharp corrections, consolidation, move higher off of some catalyst. There could be a lot of catalysts out there that push crypto markets, Bitcoin prices, whatever, much, much higher here. You're just not getting them today on December 1st as we head into the end of the year.
Yeah, essentially. Looking around the landscape here, and I know somebody mentioned the meta spread. So one of the things that I don't know about you, but sometimes I get sort of, what's the word for it? I just get this affinity for certain trades.
Okay.
And certain strategies, if you will. Sometimes it's like, and I'll see a lot of things that fit that narrative and I want to do it. And so for me right now, it's been these sort of, like I said, these delta busters. Short the put spread to finance the long call spread. I've done that on a lot of these names, especially some of these tech names that have hit some recent lows here. I did it in Tesla in January, and I bring this up because somebody mentioned the Meta one. I did it in Meta as well. Did that in February. Sold the 600, 590 put spread to finance the 700, 720 call spread. Obviously, Meta's been beat down. This is still the 3-year weekly, but let's go to the year-to-date chart, and it's kind of bounced back some, so that's been the play there. I've been holding on to them just because they're January, and again, in the case of Meta is February, but I'm going to hold on to these for maybe a little bit longer. One of the things I did do is the opposite coming into today. Like I said, I saw a stat, and I felt like it's fairly true, too. Again, in my head, I mean, all the years that I've been doing this, I feel like there's been times where we'll see some weakness heading into before Thanksgiving week, and then coming into that week, sort of start to see some bullishness, lighter volume, sort of things drifting higher, and that's essentially what we saw last week. And once it did it every day, I was like, all right, we might pull back come Monday or maybe next week, meaning this week overall. And so I decided to take the opposite side in this situation. For the D5 expiration, I sold the call spread to buy the put spread, and did that around 6,800, which again, we're not too far from that right now. So where was the low today? Yeah, basically 6,800 was the low, 67.99, 94. Wow, sometimes they get a little close. So this is my play, one play for the downside. And look, I am totally fine losing on this thing if the market rips higher, because like I said, I got upside in Microsoft, I got upside in NVIDIA, I got upside in Meta, I got upside in Tesla. I also did them and the SPY and the Qs. I told you, Ryan, I get a little friendly for certain strategies sometimes. And so I got those long delta plays in a lot of those names. Even if it decides not to be the tech names, the Metas and the Microsofts and Teslas, at the very least, if we move to the upside, SPY and Qs are going to move to the upside. So that's why I decided doing those as well.
Yeah, I think that makes sense. And when I look at the portfolio that you have on the screen here, your time horizon obviously matters. Is it an investment? We like to talk about that from a longer term perspective. Is it a trade, short term perspective? But you're in the stuff that I think you want to be in. It's really what matters to the market. It's where the concentration is, right or wrong. So you're going to have that on the downside. But like when you look at investing in the U.S. over the next couple of years, we'll use that a little bit longer time frame. What else would you want to be in? Right? I mean, yes, these things could be overvalued and you're going to get corrections at times. You're going to have boom bust cycles, and that's necessary, I think, for some infrastructure to be built out, specifically with AI over time. But like, do people think it's going away? That's the thing I've never understood is why be, other than just short-term bearish for a correction, it's really hard to be structurally bearish on technology, given what it is, right? So
yeah,
I want to be in these same things.
Well, and this is a really good point. What I've seen more recently, and again, I think we always have talked to people about ignoring the noise, paying attention to vol and all those type of things. This is what we do here at Tasty. But I think for some people, it's probably getting hard for them to ignore some of the headlines that they're seeing. And to be honest with you, most of it is just crap. But, this guy, Michael Berry, who did a great job of foretelling what happened in the financial crisis, all of a sudden, now he's gotten, I don't even remember the damn story, but I think he got rid of his fund and now he has whatever family office or something like that. And so he's able to, and then whatever else he did, but he's taken this position of getting short a lot of things. Last I checked, that dude doesn't control the fortunes of Tesla or Nvidia or whatever else, but he has his opinion, and that's great. And again, he's a trader, so he's looking for an opportunity for these things to go. Does that mean they're going to zero? Hell, I don't know. Nobody knows. Not even he knows. He's just playing it a certain way. And again, I'm pretty sure whatever puts he has, he probably has some long stock against him too to try to profit in either way. But I bring that up because that's a lot of the sentiment that we're talking about right now. People like that, or people who are, for whatever different reason, hearing the other negative narratives. I'm not here to defend one way or the other, but my whole point is, like you said, why not be in the things that are moving? Why not be in the things that are, these are the big names, these are the names that have the most volume. That's all I'm trying to do. So the NVIDIAs of the world, I'm trying to play that. iBit is one that's had, a lot of volume and has some vol to it. And right now I've collected enough, I've sort of managed this position in an interesting way that I really don't do. This is where it's funny because this is not something I've always done, like, try to defend a position. I kind of just move on at times. Maybe Mikey is rubbing off on me, I think, because now I'm defending positions in ways that I really haven't done in the past. So this one is one where I was short the put, short the 55, and then eventually I sold this 55 call against it. And I think that's and honestly, it's one of the few times where I am fine being short this straddle, this upside straddle here in an ETF essentially, right? And again, if it jumps higher, blows higher, cool. If it goes lower, I'm fine too, because again, I know what that means overall, not only for this position, but my entire portfolio. And again, like I said, I know I have the MicroStrategy, but that's risk defined, right? So I wake up knowing exactly what's going to happen to any one of my positions, and I'm not fearful for any of it. I just want to see some activity. I want to see some action.
Absolutely. And you want to be in the liquid products.
Always.
Right? I think quite often as traders or investors, you want to try to get every single trade right. You get frustrated if you have 9 wins and even 1 loser, which is just extremely unrealistic, right? If you can get it right 51% of the time, 55% of the time, you're going to be making money. And to your point, you have on all these other positions that from a macro perspective, if you're wrong on this short, it means that you're right on the other 8 or 9 longs. It's not about being right, it's about making money, right? And that's where you're making money, even if you're losing on your iBit position or you're losing on your S&P short. You've got all these other trades that are making you money. If you can control the drawdowns and I think stay in the market and benefit from the bubbles at times, that's where you do make your money, the most money. That's how you compound those gains over time.
Yep. So I mentioned those names. I mentioned the iBits. I mentioned the MicroStrategy of the world because people have asked me, how are you playing these? Are you doing anything in these? Definitely. I find this an interesting play. Similar deal. People have asked me about, silver and the way that it's moving. I'll be honest with you. Look, the last time when silver did this, where was it? It was in this range. When it did this move, I wanted to be in the upside play. and I benefited from that, and I got out quickly, luckily. This time around, similar to what we said on the downside for Bitcoin with this silver, I want to see some craziness to the upside. I actually want to see it. I want to see it rip higher. I want to see it like rip over 60 with some conviction.
It looks like it's doing that.
Yeah, it looks like it's trying to do that. And again, it stopped out at 59,435 today. But if this thing rips higher with some conviction, I actually was already trying to eye up a short trade, but I'm not sure how I want to structure it. I mean, this silver is, first of all, if I wanted to do the same thing, I've been talking about these Delta Buster trades. If I wanted to do the same thing in silver to the downside, and I want to say sell a call spread to finance a put spread, which actually would be probably not that bad of an idea. Because again, when we do these trades to selling the put spread to finance a call spread with equities, what we're basically doing is taking advantage of skew, right? Selling downside to buy upside. So you could do the exact same thing on flip side in metals where, again, the skew is to the upside, so you could sell the juicier stuff to buy the chance of a downside move, but I just haven't been able to line up the right strikes, honestly. I guess that works. Selling the 60-70 call spread in SLV to buy the 45, but 45. We needed to go way below 45, and I don't necessarily know if it fades that hard.
Yeah, you would need a complete breakdown in the trend, which I think is in place, for real macro reasons in this environment.
See, that's why I want to see it explode a little bit higher. Maybe in the SLV, maybe to 55. Maybe this trade looks a lot more interesting because then I'm able to buy, instead of the 45, maybe I'm able to buy the 50-40 put spread, and I'm selling, maybe this 60-70 call spread to buy the 50-40 put spread. Maybe I can still get a credit on that. Again, when you do these, you got to be realistic. Like I said, I know silver, when it falls, if it from here, if it takes a big fall, I don't know how much lower it falls than 50 with conviction. And being long that 40 put spread, I just don't think that's enough. I think you need a little bit more. So again, patience, man. As I'm getting older, man, you know what I mean? Patience, dude. You're gonna learn patience. The more your kids get older and they don't listen to you, it breeds this situation where you just have to learn patience and learn how to deal with them. I'm telling you, it's how it goes. So
it's great advice.
I'm telling you, dude. You'll see. So as much as I like to structure this, again, this is a pop of 74%. Max profit of 1,000, risking, max loss is 972, but risking 700 to do it. But I just don't know if it has that complete breakdown. You know what I mean? And I don't like it yet, but this is what I'm eyeing up. I don't know. I don't see silver breaking down below 40. I don't see SLV breaking down below 45.
I don't either. I think it would mean that you have a completely different outlook in terms of the path for interest rates, path for growth, right? I think if we were in a hiking cycle, or that was what was on the horizon, that might be realistic. I just don't think that's the environment that you're in right now.
Yeah, I don't see it. So I'm still waiting. I want more. Keep going, silver and gold. Keep going. I want to see it. Somebody asked me about SPX. SPX, Iron Condor, 45 days to expiration. So that's Jan. Do the weekly. I guess well, it depends on, if you want. Personally, I like doing the weeklies. But in this case, the AM expiration wouldn't be the craziest thing. Again, this expires on the print, on the expiration, on the open of expiration, before the market really, essentially at the open. They're asking about 100-point wide, though, 65, 70. So they're looking at 6,500, 100-point wide, 7,100. Bam, 100-point wide. Ooh, solid. 55% pop. What do I think about this? Oh, geez. Structurally, it looks great. You got a 55% pop. I got to tell you, I don't love the risk to reward, but to each his own. the number one thing you want is a 65% pop. I mean, a 55% pop. That's the good thing. This IV rank is still a little bit low right here. We'll see what the market ends up doing. I mean, I think your 7,100 upside is not crazy, but who knows if this market decides to catch a bid and things get crazy again. That's what I think. I don't know if you got any opinions, but
no, I mean, I think you're probably far enough away with 45 days to expiration. It just depends, I suppose, on what your profit target is. If you're looking to sit into this until the very last day and time it perfectly and take in the entire credit, then probably not something I'm as interested in. But if you can sell it for 29 and buy it back for 20 or buy it back for 15, it's a pretty good trade.
Yeah, it's a pretty good trade.
And it's a bet on vol coming back down into like 15.
Basically, yeah, which we haven't seen a whole lot of in this past year. I mean, this has been an interesting year as far as I need to pull out my chart to look at the average VIX price for this year. But it's been probably a little on the elevated side because, again, you go back to you know, all the stuff that happened earlier this year with tariffs, et cetera. But look, structurally, this is a great trade. This is definitely a tasty style mechanics trade. Certainly put it on. I'm just telling you from the personal standpoint, I never loved the idea of how the max loss to profit looks, but because in this case, basically you're risking, you know, 2.5 or whatever to make one. But look, it's a good trade. I'm not going to tell you it's not.
The other thing I like to look at with these short premium trades, I think you do as well, Jamal, is what's realized vol? You know, like what's actually been happening. Now, just because it happened in the past is obviously not a predictor of the future. But if I look at, on a weekly basis, the S&P 500 in the last 21 weeks on average right now, and it's come off of its highs, but on average, it's moved about 173 points per week. You can do that same thing on a monthly basis. And maybe you want to shorten your time frame a little bit. But on a monthly basis, right now, we're on average, if you use an average true range, moving about 326 points a month. So is there enough premium in the trade? And then what is the realized vol against that is probably the best way to look at it. So that's how I kind of think about the strike selection is pay attention to what's actually been happening. It could come down, but it's relevant, in my opinion.
That's a really good point. Exactly. That's something really to pay attention to. And it brings me back to the point that I've mentioned over the last week or so about trading ranges. So just day to day, so far ours is pretty low, 41 points. You can see here on the day, 31 points. Obviously, go back to last week, a little, especially a little slower as a little smaller range as we were heading into the holiday and beyond. But 31 points on Friday. Wednesday was like 47 points, and obviously a couple of big ones as we were heading into the weekend. So things are seemingly slowing down. We'll see what the rest of this week brings, but right now only 41 points today. And you look at, I mean, again, there's been lighter volume this so far to start this week than it was almost all last week. 901,000 contracts so far today. Usually you expect to see about 1 million contracts, but I don't know what this week holds. Again, I think last week was a little, the week before was probably the most volatile week we had in a while. I guess we're going to start to get some data. I think, at least I see here on the list, Friday is core PCE supposed to be given, which again, we'll see what that actually means. I don't know what you can really make of some of these data that are about to come out. This jobs report, they're all a little delayed. We'll see what they actually mean for the market. I guess Powell is supposed to talk later today. I didn't know anything about that. I don't know how much, outside of the Fed meeting, I don't know how much his speeches have meant for the last half of this year. It feels like we haven't moved as much when he's talked.
No, we really haven't. I mean, you've had the FOMC meetings and the press conferences, but aside from that, I don't put too much weight on longer-term impact of a Fed governor or the chairman's speech here. You'll see things move around at times, right? What did we see recently? We had a repricing of Fed funds probabilities where, okay, maybe not, we'll get a cut. And then I don't remember exactly who it was, but they came out and kind of soothed that a little bit. So there's the kind of tactics to it at times. But yeah, I mean, what are you going to get that's all that different from what you got last time from Chair Powell?
Probably not a whole lot, right?
Market right now is pricing a 90% probability of a cut. So I would argue that, like, there's risk in that it just goes the other way here. I don't know how much upside there would be from Powell's speech today.
Yeah.
Oh, we'll see.
So just recapping here with show almost over. I mean, like I said, I still have a lot of bullish deltas, whether it's in Tesla, in SPY, Qs, and also have one of those delta busters in Palantir to the upside, Meta to the upside. Talked about the upside trades eventually that I that I have in MicroStrategies. Microsoft also upside play. The only real downside play I have here is an SPX for the end of this week. That could be something that maybe I carry over to next week as well. We'll see how the week ends here. But just to have something against a lot of these longs that I have. Outside of that, man, I haven't really added anything new. I mean, honestly, it's somewhat of a quiet Monday. Outside of Bitcoin being down, being a bigger mover, things are fairly quiet overall. When you talk about a lot of these tech names, besides AVGO, most of these tech names that we talked about, you talk about AI, fairly quiet today to start the week.
I think to your point, you've got to be patient, right? Wait for those pullbacks. Don't chase things here. And I think at the same time, you need to take profits when you're kind of at the top of the range. So no issue with taking profits in gold or silver or copper here and looking to buy those things back at kind of the bottom of the range is what I'm trying to do.
Yeah, I hear you. That's the same thing I did. Well, guys, that's our time. Thanks for watching the show. If you want to get a hold of us, you can always reach us on Twitter. I'm at Jamal Chandler. Mike is at Trader Mikey B. Ryan is at Ryan Fred Grace. And also give at Tasty Crypto a follow. All the good stuff that's coming up out of there. We will see you guys tomorrow, same time at 11 a.m. Central. Till then, peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click, from micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Howdy everybody, happy Monday and welcome back to Risk and Reward. I hope everybody had a very fulfilling holiday weekend. Hope everybody had safe travels, no delayed flights, no families asking you to give up that aisle seat that you paid for so they can sit together, all that good stuff. I'm very happy to be back here with you all and happy as always to be joined by my co-host Errol. Errol, what's going on? You had a good holiday weekend?
It was a good holiday weekend. It's gotten a little bit colder over here, but I'm really liking the snow. And like I was saying the other day, I was born and raised in Colorado, so seeing a lot of the snow again just brings me right back to my childhood. So it's been really cold, but it's been good. It's been a vibe so far. So how's your Thanksgiving and weekend with the fam?
It was good, yeah. Really enjoyable time. I went with Chase's family in Peoria. They were kind enough to accommodate me for the weekend, or just Thursday. They invited me to stay for the weekend, but I chose to not overstay my welcome, even though I was welcome, I suppose. But
was it tough to not overstay?
Had a wonderful time. No, it wasn't. It wasn't bad at all. The plan the whole time was to get out of there on the Thursday, and then like while I was there on Thursday, they were like, if you want to sleep here, we got guest bedrooms. You can do whatever you want. And I was like, man, I don't got contacts. I don't got a toothbrush. Like this is all a lot. But it was a lot of fun. Hope everybody at home had the same amount of fun. Yeah. The market giving us a little bit of fun to talk about here as well.
A little bit of a doozy.
Yeah, we got things moving left, right, and center. Also, sidebar. I'm always itching my nose on this stream, and today was like, why am I always itching my nose? And so I looked it up, and apparently there is a phenomenon where after you eat spicy foods, there is a non-allergic reaction that occurs. Your body reacts to capsaicin that way, such that your nose is super itchy. And I eat spicy food for lunch here almost every single day, so that's exactly what it is that I just had a spicy sandwich, and now I got an itchy nose. If anyone else is a fellow spicy food nose itcher, let me know in the chat. But that's a new thing I discovered about myself today. So now I get to say, I can scratch my nose on you all I want. It's a medical condition. What are you going to judge me for scratching my nose?
That's true. Hey, spicy sandwiches.
What's going on, everybody in chat?
Those little peppers do catch you off guard, though.
Oh yeah,
especially when you bite right into.
Yeah, that jardinera. Yeah, there's like some things in there. They really sneak up on you.
Oh yeah.
Why bother itch? That's your mustache's job. The mustache might contribute to the itching more than it contributes to the contrary.
It is the itch.
Happy to see everybody. Jeremy, big deal. E-media. Who else we got in here? Joe Pinko. Mustaches for dusting cookies. I hope that's real cookies you're talking about there at dessert. Spice makes my nose run. I need some Vol. Me too, Jared. Me too. Anyway, our topic for today, we're going to talk some shorts, specifically the Big Short.
Right when you said that's who popped in my mind when I hear the word short. It's synonymous with Michael Burry.
Yes, absolutely. Michael Burry has been making no shortage of headlines recently. Ever since he sunset Scion Asset Management, his hedge fund. He's began a newsletter. He's gotten a little bit more vocal on online forums, and he's been making headlines all over the place for some shorts. And after he made the third big one today, I decided it was finally time to talk about it. So we can dive straight in here.
Let's talk about it.
First thing, the broader situation, just for anybody who's not caught up. On November 10th, Scion Asset Management, which was Burry's hedge fund forever, formally shut down. He now has a newsletter, which has made the public much more aware of his thoughts and feelings surrounding the market. And he has recently spoken out and taken sizable short positions on NVIDIA, Palantir, and most recently, Tesla. Tesla either last night or this morning, kind of ambiguous. He's taking this stance. But the broad thing is that AI is a bubble, a conversation that we've had a lot here. And it's how he feels. What are your initial thoughts?
I do think that, initial thoughts, I like the play. I like the idea. I think it's pretty cool whenever somebody is putting money where their mouth is. There's so many opinions nowadays, so many opinions online especially. But whenever somebody's putting a lot of money behind that opinion, especially with a big name where you have a brand or a reputation to uphold, I think it's pretty cool.
Especially when it's contrarian opinion.
Exactly, as well. 1,000%. So I always value an opinion that has a position on in the market as they're putting it on. So a lot of respect, and it makes it a little bit more fun to watch these underlyings whenever someone is so vocal about a position, right?
Absolutely. And with anybody that has a voice, this loud and that this many people listen to, it always becomes this question of, are they toppling the stock themselves? Like, how much is it broader market, and how much does their, because, it's like we saw with UNH, like as soon as Warren Buffett and Berkshire Hathaway say they have a position, UNH obligatory rocket.
Do you think a little bit of like a self-fulfilling prophecy?
Yes. I think that it can get to that point. And I don't think, nobody make any mistake, I am not comparing Michael Burry to Warren Buffett right now. But when you have a voice that is that loud in the market that carries this kind of weight, often it can be a sort of a self-fulfilling prophecy situation.
I'd agree, and I know you're not measuring up, Warren Buffett and Michael Burry to each other, but Michael Burry definitely did his thing in 2008, made a name for himself. So whenever he's touting, these big shorts or these positions, can't help for people to refer back to what he's done in the past. Not to measure him up to Warren Buffett, but
yes. And people have wisely said in the chat before, Burry made a good trade. That doesn't mean that we know he's a good trader, and I think that that's an important distinction to draw. But he's also had a profitable asset management firm for a hedge fund for some time, so it's like clearly has a head on his shoulders, at the very least. Anyway, let's talk specifics here. NVIDIA is the first position that we're going to discuss. I see Rodrigo in chat already mentioned that appreciation case with NVIDIA and its customers sounds pretty convincing. I'm inclined to agree. So, Burry believes, as I said, the current AI frenzy mirrors the dot-com bubble in the late 1990s. In his words, quote, a lot more than investors realize, end quote. He believes markets are mistaking a supply boom for durable demand, similar, almost identical to what happened in the late 90s there with the dot-com bubble. Everybody was so hyped on the supply that nobody stopped to think, is there demand? He points to massive capital expenditure plans, extended depreciation schedules, and soaring valuations as his reasoning. And this quote at the end is a bar. This is what put it all together for me. I'm not claiming NVIDIA is Enron. It is clearly Cisco. And that was a huge light bulb moment for me when I read this quote, because I've been trying to quantify this entire time, NVIDIA, Palantir, especially Palantir, as we're about to get into in the next one. But these companies, they trade, what am I getting at here? You feel like it's a bubble, but it's not a bubble like a dot-com era bubble in a pets.com sort of situation where I think an NVIDIA or a Palantir could legitimately go to zero. Right. It's just that they are insanely overvalued right now, and especially in the case of Palantir, and it feels like they could have a terrible decade before they actually properly adjust and price things in. And I think that Cisco is the perfect example of that. Everyone in 1999 is so hyped up on Cisco. Fortune magazine includes Cisco as one of their 10 stocks you have to hold from 2000 through 2010. It's going to 10x in that time frame, and then it actually, in reality, moves down 83% from 2000 to 2010, at which point it stabilized, and now Cisco is obviously a very reputable company that is still around, and they were important the entire time. People were just way too early to try to act on that importance. And I feel that really translates into Palantir, into NVIDIA, where Palantir, as I've said numerous times, I think 15 years from now, Palantir could absolutely be an Apple caliber company that is gigantic, but they are not now, and so we should stop acting like they are now.
Yeah, I'd agree. And I was also going to say, too, right now, key point right now, keyword right now, because I was also going to say, kind of a hot take, I think a lot of these underlyings and a lot of these assets are actually undervalued. But, right now, maybe not in 10 years, 15 years, 20 years, I think this space has a lot to go. But in the short term, definitely overvalued. That's why we're getting these bubble topics thrown around left and right. So
yeah,
piggyback off of that.
Yes, absolutely. And I think that Palantir is the shining example of all of them, as does Burry. Burry rightfully notes that Palantir trades at a $400 billion market cap while making $4 billion in revenue. Not profit, people, revenue. $4 billion in revenue per year on a $400 billion market cap. Okay. He believes that Palantir is the pinnacle of the AI bubble, and before shutting down, Scion's final trade was 50,000 Palantir puts. And it is unclear whether that position is still open or if he's already exited, but we do know it was 50K puts. Alex Karp, the CEO of Palantir, said that Burry's shorts were, quote, batshit crazy, end quote, as shares of his company tanked 29% in November. Burry laughing to the bank on this one so far, whether he's still in it or not. Palantir has come down very far off the highs, 207, and I believe 207 is the high, and I think we're currently in the mid-150s, 168, so a little bit off the lows now, but 147 was the very low, so quite the slide there, and not an unjustified one.
Yeah, Jeremy made a comment over here, which I thought was really interesting. He said, Steve Jobs was a man because he was a marketing/sales nerd and also a tech nerd at the same time, and AI will produce many of those, and I can't agree more. It's like you think about like some of these other CEOs, Steve Jobs, and all these other big tech companies that are being built. It's like, why was Apple and Steve Jobs so successful? It really was the marketing and tech aspect, being able to see how to fit your product in the market, not only create the great tech at the same time. So that was a unique perspective there.
Yeah, I think that's a great perspective and a great point as well, in that Jobs was just such a visionary, and he was always thinking 10 steps ahead of everybody and thinking about the distant future. And that's why, and Wozniak was doing all the tech. Nobody ever talks about that. Wozniak was actually like the fundamental engineer of that company, especially in its early stages. And yeah, I think that you're going to have a lot of Steve Jobs-like characters. I think that that's, just an excellent point by Jeremy ultimately there, because I think you're going to have a lot of Steve Jobs-like characters. Take your Sam Altmans, your Alex Karps of the world, your Jensen Huangs of the world, who are thinking so far ahead and so visionary. And it doesn't mean that those things can't become reality, but they're not reality right now.
Yeah.
And we're trading as though they are. But that's the thing, though, is that sometimes buying buying the person, buying what could be reality sometime works. I mean, Apple traded at a triple-digit forward PE ratio forever until Steve Jobs left, at which point they cratered and went stagnant for 8 years, and then he comes back and it goes rocketing again. Yeah. So clearly people are buying the man, not the actual company in that regard, and it worked for Apple for a long time. It's worked for Tesla pretty much this entire time.
Yeah.
Although Burry doesn't think that's going to last much longer, as we're going to get into next, but it's an interesting phenomenon.
Yeah, I completely agree, and I don't know. It is also just interesting to see like the guys like Sam Altman's, and those guys. They're even just so different at the same time, because it does seem that like Steve Jobs became a little bit more popular for his ideas and the things that he was accomplishing, but it's like he made the medium in which that medium made him popular. Like he created the medium to get himself visibility. The creation of that medium made him popular. So it's like, it's crazy to see like Sam Altman and other, popular figures and businessmen become popular from other CEOs, technology that they produced that gave them the opportunity to even have this platform today. So it is kind of crazy to just see them kind of build off of each other, 10 years in, 15 years in, 20 years in.
Yeah, absolutely. The belief that Woz was a genius is bogus. I've met him. He's a dim bulb for sure. All right, we got first-hand account from Steven. Wozniak.
Steven coming in hot.
Overblown.
Coming in hot.
And then there was one other one I wanted to grab in here. Everything is about to change big time with AI. You can just imagine it. Yes, absolutely. And like I said, that's where the parallels to the dot-com bubble come in for me. I have no doubts that NVIDIA is going to be as important as we say that they are, just somewhere down the line. Well, and NVIDIA, honestly, NVIDIA is the one of these where I would kind of push back on Burry a little bit, just because of how central NVIDIA is to AI. I mean, they are the chief in command of this entire thing. Although if you think AI as a whole is a bubble, then perhaps they're also the chief of the bubble. There's that argument to be made for sure. But yeah, with a company like a Palantir or like an OpenAI, they're throwing around $1 trillion valuation for OpenAI right now. It's like those valuations just aren't justified yet. We're not there yet. We are very much, and like I said, I don't think Palantir is a pets.com, but I think it very well could be a Cisco. I think Cisco is a great analogy to make there, where I just think that 10 years down the line, Palantir absolutely justifies the $400 billion valuation that they have right now, but they're not anywhere close to justifying it right now. So why do they have it? That's sort of where my mind goes there. And I understand how value investing works. I understand that things can trade well ahead of their forward-looking PE ratio, but we're talking about a company that does $4 billion in revenue a year that is valued at $400 billion. Say they have a 50% profit margin, which obviously would be insane in business. It would take them 200 years to make $400 billion. So what are we talking about?
Yeah. I mean, what's the valuation of IG? It's somewhere around the same, I think.
IG?
It's somewhere around the same.
Oh, $5 billion.
Right?
Yeah.
Just above that, and not valued at $400 billion over the astronomical number.
Yeah, it's ridiculous. Insane. It's ridiculous. Yes. Altman is a salesman. He tells anyone he's talking to what they want to hear. Yeah, I think that's apt analysis. Google is now using its own chips. NVIDIA is investing its trillions in everything is smart. It will keep it at the top moving forward. That's a good point. What is that? Tenanta? Do I have that right? Tenanta? That's a great point. Yes, NVIDIA is being very smart with all of this excess cash that they have laying around. I've made many jokes before about their investments in Intel, even though I think that they're fundamentally good. I just think it's funny that NVIDIA is like, oh, here, struggling competitor. We have so much money here. Take $5 billion of it. But yes, NVIDIA has made very smart investments, and they are so integral to this AI supply chain. There's the one graphic with NVIDIA at the center and all of their, subsidiary bubbles on the outside. And it's like if NVIDIA were to go away, you're talking I mean, AI itself stagnates forever. 50 companies just fall by the wayside. Like it would be catastrophic. And they have made, yes, very strong investments. I agree with that.
Yeah, no, definitely a lot of talking points on the AI. And I think one last thing I'm going to leave with the AI talking points is just the fact that AI kind of feels like one of those things where it's kind of here whether or not you like it, and whether or not you participate in AI. I think the market doesn't really care because the way that it kind of seems to, just like on your perspective on AI, if you're not using AI, your competitors are using AI, and you're going to get cooked.
Yeah. No, yeah.
And absolutely cooked. You can't even keep up.
It's identical to the internet in that it is adapt or die.
Yeah,
you got to figure this out or you're going to fall by the wayside because everybody's going to use
exponential gap in terms of what the gaps are talking about in business if you're not utilizing
and between people as well. I was just reading I don't know, I suppose interesting is the word, but not good study the other day that they actually are extrapolating out that the gender pay gap could potentially return because men are utilizing AI more than women in aggregate. And so they believe that unless women start catching up to fill that gap in AI usage, that there's all of a sudden going to be this thing happening where men are getting paid more for more productivity because they're using AI while women aren't.
One really interesting thing that I've found with the AI is, and it was brought up again the last couple of days, and there was 2 different articles written about the same topic from a different perspective. And is AI making us smarter or is AI making us dumber?
No, it's totally dumber.
Well, I think there's another argument to be had because to your point, I would say yes, and then to another point, I would say yes in the fact that I think it depends how you use it.
Sure.
You know, like sometimes.
Yes, it's absolutely a tool.
Do you ever find yourself like maybe in the grocery store, at the gym, or whatever, you're doing research on ChatGPT and going down a rabbit hole because you're like curious about that. Then you get curious about something else. You're like, well, that doesn't make sense. And then, you know, so depending on how you use it, you know, you can get a little bit, you can gain knowledge, but also it's like you can use it to do tasks for you so that you don't have to think. So it's like depending on how you use it, depending on how you approach it, I think can depend on where your learning curve goes when it comes down to AI and if you're getting smarter or dumber.
Yeah, certainly. I mean, yeah, in a research capacity, it all depends how you use it. I mean, it's just a tool like anything else, and how you choose to apply it determines how much you're going to get out of it. Yeah. But there's learning applications and there's also automation applications, and those are kind of 2 different sides of the same coin.
There's been a couple moments where I've caught myself utilizing AI where I'm like, no, Errol, like don't do that. Use your own brain to complete this task because I don't want to fall into bad mental habits either and get lazy mentally, right? So, let it not carry too much of the load for you and get down some of the things that you can do yourself.
Yeah, my best AI application I've maybe ever used in my entire life actually just happened this weekend. When I was headed out for Thanksgiving, I wanted to pick up a couple bottles of wine to gift to my gracious hosts, and I know nothing about wine, and I know that they know a lot about wine, and it's kind of like a whole thing. And so I just walked into the store and took a picture of the shelf, and I sent it to ChatGPT, and I said, which of these wines would not break my bank, but would also be good for a wine snob, like they would actually enjoy and drink. And then immediately, like it thought less than it thinks about a lot of questions, and it was like, here's your top 3 choices. Then it's even like telling me like second shelf down, third bottle from the right,
pretty fire.
This one, and then it like says why.
Was the front of the wine facing on all the bottles?
Yeah, the labels were
very
all
legible.
Yeah, the labels were all facing out. But yeah, just immediately it was like, oh yeah, here's your 3 choices in your $50 to $60 ballpark. Here's exactly what they have. If you know what they like, this is the types that they are, yada, yada, yada. And just gave me a whole thing. And I was able to pick out this wine from Oregon that they were gracious for. So yeah, it's interesting application. Anyway, we do have one more slide to tackle here, and it's not as AI related. We're gonna talk a little Tesla here. This is Burry's most recent short, and this one is a bit adjacent to the AI bubble. He just has his own vendetta going against Tesla here, and I don't know that what he's saying is necessarily invalid. I'm just putting it out here for everybody to critique. But yes,
so don't shoot the messenger.
Yeah, he believes it falls into the same overvalued category, although it has nothing to do with the AI bubble. I just included 2 quotes here because I think that he put it better than I ever really could. His view is that, quote, Tesla's market capitalization is ridiculously overvalued today and has been for a long time. As an aside, the Elon cult was all in on electric cars until competition showed up, then all in on autonomous driving until competition showed up, and now is all in on robots until competition shows up, end quote. So, this is interesting. I will say, this second perspective, this aside that he threw out, was not a perspective that I had considered before. I suppose it does have some truth to it, although, I don't know, I feel like the implication of this statement is that they gave up on EVs or autonomous driving once competitors entered. I don't really think that that's the case at all, in my opinion. So.
No. I mean, from what I've heard from Elon in the past, I know Elon wanted to make Tesla, they wanted to present themselves into the market as more of this like luxury car brand, to give themselves an edge in that way. And then they wanted to become like the Hondas of EV vehicles later on. And it kind of sounds like this comment is aligning with that statement, like how Tesla's evolving into that Honda of EV. Maybe they see that as a lack of tenacity from Elon's part in terms of putting, I was going to say gas to the pedal or whatever with the EV vehicles, but maybe they see that as a lack of tenacity on Elon's part. But I just see that as a part of the plan, and I also see that as a part of them kind of already having more domination over the EV market. So
yeah, well, yeah, I agree, and furthermore, I think that you always are all in on your newest thing. Right. I think that's business. I think that's what companies do, and I will not sit here and pretend that Tesla might not be overvalued. It has the highest PE ratio of anything in the Mag 7 by a wide, by almost a triple-digit margin.
Agreed.
So, like, I understand that the fundamentals are there to call this an overvalued stock, but at the same time, I feel like this is the one that I agree with the least, just because of the way that Tesla moves, the propensity that Tesla has shown to just go higher, even amid bad conditions. You got Elon on this $1 trillion pay package now. He's going to be more motivated than he has been in some time to grow this company because all of that money is tied up in these 12 tranches. So I don't know that I'm seeing this one as much, although I respect the gall and I could see this working out. I just don't know. I never know which way Tesla's going to move in the next 3-month period ever.
Yeah, I mean, I have no idea which way this is going to work out, but one thing with Elon, and I think regardless of how you kind of feel about Elon, is there's one thing you're going to get from Tesla, and that is uncertainty. And I think uncertainty brings a lot of volatility, and I think volatility brings a lot of opportunity for traders in the market. So if there's somebody to do it, it's probably going to be Elon. I don't know if I'd bet against that, but it is a task nonetheless.
Well, Tesla is just another one too that's like, it hasn't been just completely ripping for the last 2 years, the way that Palantir's chart is ridiculous looking. Like the way it is just a vertical line for the last 2 years, they've just increased by orders of magnitude year over year. Tesla or Nvidia, you get into the same thing where even though I buy into Nvidia a little more, it is essentially a vertical line straight up for the last 2 years since all this AI hype has been started. And then you look at Tesla and that's just not really the case at all. I mean, Tesla is right now, what's today's date? November 30th, or December 1st, rather, almost break even with last year. I mean, it's exactly break even with last year's December 12th price. So we've gone almost nowhere year over year with Tesla, which perhaps lends itself to Burry's thesis, but also it hasn't capitulated either. Yeah. It's not working its way down. It's not at all-time highs now. This one I understand the least to me. This feels like maybe just some headline grabbing.
Yeah, I'd piggyback off of that. And to Jeremy's point over here, Joe's point over here, interesting take. I have a lot more faith in AI in general than I do in Tesla specifically. Yeah. I would piggyback off of that point at the same time too. I think if Tesla wants to take it a step further, they're going to need to incorporate AI into whatever it is that I think AI really is kind of just like the internet. It really is. It's not like another little feature. It really is one of those fundamental shifts.
No, I mean, it is a revolution. Yeah,
it is a revolution.
It is something that is going to completely revolutionize the way that human beings do everything.
Right. Yeah. And so I think it's one of those that you can't miss the AI train. So I mean, Elon is going to be the last person I think to miss that train. I mean, he doesn't get into that position by accident in the first place. Very intelligent person. But I will say, when it comes down to AI into the future, I just completely see it as a different ball game. I see it as an inevitable, personally. Just from, I mean, not even just from what we see on social media, just from what we see in our day-to-day life and just how we see things being done. It's just everyday life, when you see certain things being done, and just certain systems that have been put in place for the last 10 years, like literal shifts in how business is being done that I don't think we were even born for or around when it happened last in the early 2000s, in the late 90s.
Well, yeah.
So, a lot of uncertainty. I don't know, but big shifts and big changes. That's all I know.
Well, yeah, I mean, this is seriously like an invention of the printing press caliber thing for humanity that is happening, and that cannot be ignored. But it's just, I also understand the other side of the thesis that we are still in the very infancy stages of this. We are in the dial-up internet phase.
It is very much so.
Of AI.
And but that's what makes it so exciting at the same time.
Yeah, absolutely. That makes it so exciting, and that's why these companies have the valuations that they do. Is because this isn't. I'm not giving any earth-shattering information right now. Everybody knows we're in the dial-up internet stage of AI, and the business is going to go so much more parabolic, and it's why there's so much more excitement. But does that create a bubble? And something that I've said for a long time, I've been shouting this since Bad Trader in 2023, is that one thing that definitely is a bubble, AI conceptually may not be a bubble. You can argue whatever you want there, but something that's definitely a bubble are just all of these AI companies. I don't mean the publicly traded ones. I mean the ones that I mean the companies that you see commercials for, where it is an AI software to help you with your data AI software, and then you can put that into there. Then there's a whole third AI software that they're advertising for data presentations. It's like, all that stuff, that's the pets.com. That's the here's a free computer as long as you'll have an ad strip on the side of your screen for the next 2 years. That's those business models. I don't think that the NVIDIAs and Palantirs and these giants of the industry are going anywhere anytime soon. But what will fall by the wayside are the 101,000 little miniature specific, like niche application AI companies that are trying to work their way in here. I don't think that there's nearly enough. There simply is not enough room in the market for all of them. Some will come to dominate and some will completely go away.
Yeah, completely. Completely.
There used to be these places called record stores. They still got record stores. I got a record player, and I go to the record store from time to time myself.
I really enjoy the vinyls. I really enjoyed. I was never someone that was like in love with old tech growing up, like even in the 2000s, like old tech, whatever. But like I am starting to enjoy old tech now that we're getting a little bit older because of the old tech that is old for us now.
To me, it's more of a tangible media thing.
Yeah.
I really like to own media physically.
I hear you.
We are just in an age where you don't really own anything. Even something I say all the time, you pay for Prime Video, you buy a movie, but then Prime loses licensing to the movie, so then suddenly you don't own the movie anymore. It's like, okay, you never owned it in the first place. That happens.
So really,
I like to own things.
Do you think that in-person events and just like in social gatherings, a third place run clubs, all these kind of things are going to begin to stay getting more popular again because of the social climate that we've been in with the internet and our social relationships?
I mean,
because the point that I'm kind of getting at is the fact that I think that the pendulum is going to start swinging back into kind of that direction to where, we're so used to not having vinyls, everything being downloadable, everything being in the cloud, that we kind of like having these collectible items. In the same way we spend so much time on social media, I think that in-person gatherings are going to get a little bit more popular again.
You've given this thesis before. I don't know how I necessarily think it pertains to in-person gatherings, but I do think that just in general, person-to-person connection is going to be much more valuable. Like, I think that perhaps you would see an uptick of people going to the grocery store instead of using a delivery service or something like that, just to get a little bit of personal interaction. And I'm saying that like as AI begins to take over, and as you call customer service somewhere and it's not a real person, and and there's more not real people to talk to in every facet of your life. I think that just like having actual human connection will come to have a lot more value in that context. But I don't know how it necessarily pertains to like social gatherings in general. I think that it more pertains to like a business context.
Yeah, and to take a slight curve into that business context, the point that you made, you think that human interaction will become a little bit more valuable. That's why I will say, that's why I'm glad, right? Our trade desk, best team ever. That's why I do. Even that, if you are a business that has amazing customer service, you're gonna win in the long term, because people are gonna lack that human to human connection and just that level of trust that a human carries that a robot or AI just can't.
Yeah.
And I think into the future, a lot of businesses are gonna cut out that person to person support because you can do it cheaper.
Yes.
You don't need all these people. You can do it with AI, right?
Yeah. And checkout lines at the grocery store and customer
let's
support.
up the revenue.
Yeah.
We can cut payroll. We can do X, Y, and Z. So I do think long-term businesses that keep that, I think are going to thrive, because I hate speaking to a robot to this day, no matter how good it gets.
Well, I don't know. That's the thing, though, is as they get better, I think I mind it less. If I could have instant robot that can actually take care of me versus 30-minute hold time and talk to a real person, I'll choose the robot.
You're right. And to that point, I think it's going to depend on the industry and what you're talking about, right? If I'm talking about anything that has to do with my money, I want to talk to a human because I have nuanced questions, and whoever I'm speaking to probably can make me feel a little bit more comfortable in this conversation. If it's something else with high volume, maybe not as sensitive information as money is, maybe, maybe an AI, whatever it might be, but it'll be interesting to see how it plays out.
Yeah, absolutely.
I'm off the soapbox.
No, it was a good soapbox.
Cool.
I suspect Errol's idea of old tech is very different than mine. Oh, man.
iPod touch screen.
Thank you for the kind words, Branch. We appreciate it. Fun fact, cassettes were invented before 8-track. I actually knew that. My father has made me very, very in tune with the progression of how music was owned over time there. I know 8-tracks were pretty short-lived as well. We moved into CDs pretty quick. Yeah, CDs is correct. Cool. CD, DVD is still something that confuses me to this day. I didn't have it when I was 5 years old, and I still don't have it. I understand DVD is video and CD is not, but anyway, okay. You have any closing remarks for the people?
All good on my end.
Okay, well, that's everything that we're going to have for today. Thanks so much, everybody, for coming. We seriously never take it for granted. Be sure to stay tuned for more wonderful shows coming on next. We will be back here same time, same place tomorrow, 12 o'clock noon sharp, Central Standard Time. And we'll talk to you all soon. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
We're back. It's still Monday, December 1st, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, hope you had a nice Thanksgiving.
Yeah, it was good. You know, we don't, I'm not a turkey guy for Thanksgiving. I do chicken, but all the same, I guess. It's a bird, and it's tasty.
What's your favorite side?
That's a hard one. Stuffing with some gravy on top.
Yeah, can't beat it. Yeah,
it's
I don't really make stuffing a lot of the rest of the year, so having it for Thanksgiving is nice.
It's a treat.
Yeah, so you got to eat a lot of it. I ate too much of it this week. But probably should have spent less money on stuffing and bought more silver, given the move that we've seen the last few days. I don't know how I tie that into the market, Thomas.
Having a lot of FOMO, Chris.
Many people are saying that it's because of some conspiracy, which I guess we'll get to here on the show today. But it feels like this is a reaction to some of the weekend news that President Trump said perhaps he may have a Fed chair in mind. And the announcement could come by the end of this month. So who would that person be? We mentioned his name on the show before. He's a survivor from the first Trump administration. He's always out there on CNBC saying things to toe the president's lines and ultimately even made to look foolish a few minutes later, as we saw in early April. Nevertheless, he is a good company man. That's Kevin Hassett. If we go to the slides, Joss, the market today is perhaps pricing in what a Kevin Hassett Fed chairmanship looks like. We see here that the odds on poly market is going to flash over there real quick, surged after the weekend's news. Hassett now up to 67.9%, with the no announcement by December 31st having dropped to 18%, previously above 40 coming into the weekend. So we're seeing this knock-on effect in metals. You're seeing the dollar react, not just to the news about a potential Fed chair shift, but also ultimately what the Bank of Japan is saying and what those policymakers are threatening with respect to the yen. But it's a gold silver day. It's a day for treasuries, which are taking a step back. It's a day where Bitcoin and Ethereum are getting clobbered, and perhaps that's another albatross around the broader equity market's neck, although those are proving resilient as we go through more than the halfway mark of today's session, Thomas. We do need to jump into the calendar for this week because we did not have our Friday show, so we did not look at the macro calendar for the week ahead, which we do here quickly. Thomas, I don't see much of anything, perhaps on the U.S. side, maybe core PCE at the end of the week, maybe that. But this is a pretty light macro week, all things considered, considering it's the week which we have a Fed communication blackout window and is the week prior to, well, next week's December Fed meeting.
Yeah, I mean, not too much. The services PMI, I mean, we're going into the holidays. We really want to see how holiday spending is versus spending in November. So be a while before we get those numbers, though.
It's going to be a while. Did you see anything about Black Friday sales?
No, I didn't.
The sales numbers themselves are down about 4% year over year in terms of volumes. But because of the change in prices and the distribution of those sales, sales are going to be up revenue in dollar terms year over year. So speaking to that K-shaped recovery that we've talked about here a lot, if you keep giving tax cuts to the wealthy and removing social distributive outcomes for the lower middle income folks, where do the dollars go? Lower income folks are more likely to spend extra money that you give to them. Upper income folks are more likely to save and invest. And so what does that mean for the stock market's returns in a world where you're seeing more income distributed to the top? Well, this is one of those outcomes, Thomas. Volumes fall because fewer people, the masses, have less money to spend, but the people at the top, they're able to buy the big ticket items still. And so overall dollars are up. PMI here, Ilya probably is going to say that's the most important thing of the week. You're looking at some slight deceleration. It is a diffusion index, which means it's tethered around 50 in this case. When it's above 50, it means acceleration growth. Below 50, deceleration, contraction, in fact. So 52.4 to 52.1 would be growth, but at a slower pace. Nevertheless, a 52 PMI, Thomas, that's still consistent with GDP north of 2%. And that's where our GDP trackers lie right now. So I don't know if there's anything until Friday when you get the PCE reading that could potentially change the calculus for next week's Fed meeting, although I don't think there's much that's going to change that Fed meeting next week.
Yeah, no, I think the Fed rate cuts bets more and more will focus now on this Kevin Hassett headline and everything like that. So the bonds are hurting me today. They're hurting me.
They are hurting me too. They are hurting me a great deal today. But I'm curious, what do you think about this news for Kevin Hassett being the potential frontrunner for Fed chair?
I mean, he's put in a lot of work, a lot of lip service. It makes sense that he's getting the position. This is the gift that he gets. But, we'll have to see how it plays out. He knows some things. I mean, so...
well, between Hassett and Mirren, you're going to have a Fed board that's increasingly filled with people that Trump has appointed or favorable to Trump. That's not to say anything about Michelle Bowman or Christopher Waller, who are already over there, right? We've heard from people like Warsh as well, being favorable to Trump's perspective in terms of influencing what the FOMC may do. So it's looking like a Fed that's getting more and more likely to give us the cuts that the President of the United States wants for a right or wrong reason. And maybe there is a right reason to it, right? After all, Thomas, the Fed's whole edict is that they don't really care about the tariffs. The tariffs are a one-off adjustment. We've done the whole moving line thing here a number of times. Prices are going up, tariffs, and then you go back at the previously applied rate of change. The Fed's more concerned with the decline in real output, in the rise in unemployment, the decline in GDP on the other side of those tariffs, which I know there's been a paper going around the last few days showing that the Fed's own research shows that tariffs don't cause inflation. That is one takeaway from the paper. The paper also says it's because there's a decline in GDP and a rise in unemployment that supersedes whatever price pressures the tariffs introduce. I don't know if that's a good thing. Either way, though, for a stock market today, we're off the lows. We bounce at our 1 week moving average in what's increasingly looking like a market that wants to break out, Mr. Westwater. The downtrend from the highs that we have October, early November here, those are broken with the close that we had last week. And we see that the rebound above that trend line here today in the S&P 500. Similar story for the NASDAQ here, which fell into its 1 week moving average. Likewise, it's 1 month. And that envelope is catching them today. That's a change of pace of what we've seen over the past 2 weeks, where those efforts or the forays into that 521 envelope were rejected. But here it's working as support. So it's a month of December, Thomas. December has been a good month in recent years. Not always the best, but a pretty good one. Do you think we're going to be looking at new all-time highs here?
I'm not sure about all-time highs, but I do think that we at least get back up to this former trendline support that we've had. I think that'll be a decisive moment. I am, well, the order hasn't filled yet. It's been actually longer than I wanted, but I am long, or I'm about to be long, hopefully, a 1 day out call spread in the ES 68.55, 68.60. So playing it pretty conservative, but adding on exposure. I like the technical bounce off the lows today.
Sorry, do you mind just tell me those strikes again in the DTE so I can put up here on the screen?
Yeah, 68.55, 68.60 for the 1 day out call spread in ES.
Keeping it tight, keeping it small, risking 1-to-1.
Yeah. So just getting some exposure on here because I like where the technicals are at, especially with intraday bounce. It looks pretty good. It feels like a decent time to go up. The one thing that's, keeps concerning me, and I'm sure it's concerning you, is this selling in Bitcoin, this, this backdrop of this risk off, really heavy risk off in cryptos. And I think it might speak to some of the economic worries out there. People are, we're going into the holidays. People want to free up some money, perhaps. Perhaps some things are getting tighter for people, the budget. So, you go to your crypto wallet and you sell some of it. So, but it looks like this is pretty heavy. Got a really sharp sell-off just earlier today or overnight. And, it doesn't look like we're getting much buying here through the intraday session like we saw with ES.
No, we're not. And that is one of the continued themes of the market as we go into the month of December. Throughout November, it felt like every time crypto took a leg lower, stocks couldn't resist the drawdown themselves. Maybe it's just a function of liquidity and risk appetite, right? If you're taking chips off the table and the riskiest thing, eventually you're going to start selling something that's risky as well. If Bitcoin losses get steep enough, liquidations could occur in stocks. And sure enough, that seemed where we were. The past several days of resiliency in the stock market, though, Thomas, you mentioned Bitcoin bouncing back. It did rebound, right? We were down near 80K. We got back above 90. Here today, though, we're off $6,000. It's a little over 6.5%. And the S&P 500, I think, to its credit, it has rebounded back. NASDAQ has rebounded back, despite Bitcoin being down near 6.5% and Ethereum down 10.2%. Jesus H. Christ, Thomas. That's not great, boss. But that is the market that we're looking at here, where volatility is coming in equities. And I think that's the most important thing to consider right now, is that we have this positive technical drift that's continuing to emerge. We have volatility that's continuing to come in. I saw a really interesting stat here from Ryan Detrick, friend of the show. He's with Carson Research. How strong do we think December could be? What happens at the end of the year if you have greater than a 10% year-to-date return by the end of October? Since 1980, when you've had at least a 10% return in stocks, which this year was 16.3% in the S&P 500 by the end of October, all of the years going back to 1980, so 82, it looks like 20 instances, in fact. December has averaged a 2% gain, higher 76.2% of the time. Is that an outlier? The average year since 1950, December's produced a 1.4% gain. Final 2 months of the year, Thomas, in those 10% plus years through the end of October, the final 2 months have averaged 4.9%. The average year since 1950 has averaged 3.3%. So just because we've had a very strong market, and the point I'm getting to is just because we've had a very strong market year to date doesn't mean this thing needs to slow down. And in fact, if history is any sort of guide, it would suggest that we still may have some upside here because people tend to look at a market that's rallied double digits and get that FOMO feeling and get that sense that, oh gosh, I better show my clients that I've been long stocks and I got to get the positions right before the end of this quarter because, you know, you can't lose money in a bear market and surely you can't trail the S&P 500. So you're almost incentivized to take those bets to run this thing to the upside for the next few weeks.
Yeah, I mean, that makes sense. You have to impress your investors, especially when you're directionally one way and the market's the other way. You don't want to be caught in that into the year end, having a bad finish to the year. It is, it seems like retail stocks are doing quite all right today. Home Depot, Walmart, Lowe's. I mean, they're all. It seems like maybe the Black Friday numbers or something has a little bit of optimism in there. Ross, all those stores, they're doing pretty good today.
It's a beautiful looking chart too, right? If you're looking at the retail ETF, thinking about the distribution in this market, by the way, retail ETF is up 1.08% here on this Cyber Monday, Thomas. We gap open lower. Where do we gap open lower to? The backside of the trend line, September, October swing highs there. 1 week moving average, and we bounce. And we then go set a new high relative to the month of November immediately. That's got to be a positive. There's signs of distribution in the market today, which I think you're alluding to here, but QQEW, the equal weighted NASDAQ, that's above water. RSP, the equal weighted S&P 500, that's above water. And you're talking about what would be this would be the second highest close ever for the equal weighted S&P 500. Tell me that doesn't look like a chart that's potentially consolidating, getting ready to break out to the upside. So thinking about the way this table's set, last week and the week prior, when we had that big wipeout on Thursday, we pulled 3 stats together. We talked about this on Let Me Explain last Tuesday as well. 3 stats being, 1, when we hit those lows, ultimately it's a day in which the S&P gapped open higher by more than 1.5% and closed by more than 0.5% to the downside. The last time we saw that was April 8th, which happened to be the day that the market bottomed, and then we traded higher for the rest of the year since then. Concurrently, Thomas, we think about all the volatility readings and the VIX spread. We highlighted a chart from Tom McClellan, the McClellan Oscillator fellow, pointing out that the VIX spread, when you look at the highest point on the VIX futures curve and take that from the current VIX price, it was 11% below. And to that end, when you're in that territory, you're probably close to and or nearing a market bottom. And so you begin to piece together, okay, you're at support. You begin to piece together a market that, like, this could be an area where it bounces if recent history has been a guide. And it did just that. So the question is what happens next? And if what happens next is a market that's still queued up for more gains and volatility is still coming in, what else is there to do but look for opportunities to swing this thing long? And I think that's what your plan is here with that 1 DTE, just ever so slightly out of the money call spread.
Yeah, if it fills, I'm not sure why this isn't filling, but yeah, I'm trying to get in there.
It's been a fascinating turn here through the end of November, but queuing things up, the Russell has been the leader in December in years recent. Today, it is a touch softer, so not exactly a full flush for your breadth argument right now. But like the other indexes, it's giving you that nice long lower wick as the session has moved forward. Thomas, the onset of higher yields today, which is something we're going to have to discuss, but the onset of higher yields may be one of the reasons why the Russell is getting held back. I still have some long put exposure here, which obviously has not been great, although because of the way it's structured, it's a smaller position than the MES position right now, so it's not exactly holding back the gains terribly. The point I'm getting to, though, is it's a 12.6 IVR. All of the agita in this market is circulating around the tech names right now. So it's not really a surprise, or it shouldn't be a surprise to folks, that you look at the NASDAQ with the high IVR on the board at 20.3, the S&P at 15.7, and the Russell at 12.6. I don't know if there's a great typical tasty type of trade insofar as you're looking at like 45 DTE going out at 21 in the short put spread in the Russell if we're thinking about being bullish here, just because of the vol profile right now. Do you feel the same way? How are you looking at the Russell in this market, thinking about recent swing levels, how it's behaving, the volatility compared to the other indexes?
Yeah, I mean, I'm not trading the Russell, like I said before. I look at it, but I don't really trade it. If I'm trading an equity index, it's ES or NQ. Yeah, I mean, we're getting over this like November level that we were capped at for a while through mid to late November or October. And then actually, this is a 4-hour chart. This is early November. We were capped around this 2475 kind of. Now we've came and bounced back off of it. Technically, it looks like an okay place to take a long, I think. But the thing is, you're right. The market with higher yields, with bonds falling, the Russell, the companies that are in it usually don't perform well if that's going to continue. So I mean, if you get an expansion of risk taking, I think RTY will follow suit eventually. It's just not reacting right away, and I think you're right. Higher yields is probably holding that back. At the same time, if we're expecting retail to perform well over the holidays, it might, that might win out. There is a good amount of retail in the Russell. I'm kind of a little bit mixed here on the sentiment. If I'm getting long, I'm going to stay in the S&P 500.
Technically, you highlight this 4-hour chart, which I think is an astute observation here. We go to that 4-hour time frame and we look to where the market was finding resistance in early November on the way down, and it was in this 2475, 2460 area, as it were. You can see here that once we punched through last week, we're starting to treat this band as support. And I don't want to ignore that. So this is why it's like, if you want to be bullish here, I guess you could do something around like the 2450 strike. We could go 2450, 2400, 60% probability of profit. It's a little bit better than a 3-to-1. Maybe clip it by 25, closer to 3-to-1, 60% pop. There might be something to do there. It's just a 12.6 IVR. So it's not the most appealing setup in the world. And if we're going to see reacceleration in the major themes of this year, after what was a month of effectively consolidation and pullback for the NASDAQ, you might get a little bit more juice here to the upside, because this feels like a market that people panicked in recent weeks. Is that fair to say? People were panicking in the NASDAQ? No, that was only a 5% drawdown, Tom. Well, there's a 5% drawdown. But how do you square this, though? If crypto clearly today, it had a bigger influence, it felt like, on sentiment earlier. And as the day's going on, it feels like that sentiment influence has waned. Is that like the last obstacle, you think? Like if tomorrow we wake up and Bitcoin's plus 5%, is it just going to be a big green light for the NASDAQ, for the S&P?
I'd assume so, but I think also there's a lingering hesitancy around these chip stocks now. And you see that in the price action. If you look at things like, for instance, Cisco, we had a big drop off mid-November. It hasn't recovered those levels, although it stayed higher than, where we were at early November. You get these, you just have some hesitancy in there now. NVIDIA, the same thing, we're well off the October highs now. You look at other things, super microcomputer, it's all the same. They're down, they haven't recovered, so now I'm questioning, is the enthusiasm going to come back to where it was for a lot of these names that have kind of carried a lot of the gains in the NASDAQ and the broader market? And you ask yourself, how is the market going to look in 2026 if these names, continue to just lag? Are we going to be able to continue this bull run if we don't have the chip stocks joining with the broader market? Although, SMH is up today. It's peaking out to a new high around November 13th. So, I mean, a 3-week high there, that's a little encouraging. But at the same time, a lot of these names are not are just not recovering like, you would hope they would.
SMH is probably the single ETF that's giving me the most confidence in terms of the price action today for what could be transpiring here. And NASDAQ's only up by 0.01, but SMH is up by 0.72, and that's with NVIDIA bouncing back 1.5%, 354 and change, almost 355. But the technical imperative here is that we've retaken the uptrend from the April and those September lows, with the close that we had at the end of last week, and then the continuation here today, despite the gap open lower, Thomas. So we hit our 1 week moving average and we bounce. Both the 1 week and the 1 month have those positive slopes, the positive rate of change, which is showing that momentum is indeed back to the upside as we're effectively sitting at session highs here. We've also broken the downtrend that we had off the highs here in November, or is this October? October, however you want to slice that. We're seeing that this is a market that survived the NVIDIA earnings, if you will, right? You see that downtrend is safe. All right, this is pretty good. And if SMH is able to claw back out of the hole and ward off what was looking like a head and shoulders pattern, that's left shoulder, head, right shoulder, really looked like it was game over for a quick second. What's standing in the way of stocks?
Today, I mean, it's really what we've already talked about. I think it's some of this weakness around, if your higher yields, some uncertainty around the holiday spending. But you're right. Technically, that's why I think I'm just over the fence on taking a long position here. I'm not completely sold, but I'm to the point where I want some exposure. And these are trades where I'm putting on, if I'm wrong, it's not a big hit. I was wrong, move on, try to put it on at another time.
Yeah, wrong and put it on at another time is a good attitude to have, in my view. Is there anything else left to cover here in stocks before we move on to bonds, which I think, quite frankly, that's probably the place that's most interesting for a lot of folks today, given the reaction that we're seeing to Kevin Hassett being the front runner for Fed chair.
Yeah, I think we've covered everything in stocks. 27 minutes on it. We still got bonds. Yeah, and it's not a nice move because I was long ZN and ZB. In that ZB position I've talked about, I've given myself plenty of time, 53 days. And it was working out well until today. So
working out well until today. Maybe we get some more tomorrow. We do want to talk about treasuries here, though, because I don't seem to like the news that Kevin Hassett could be the next Fed chair. There's been this interesting churn over the past week, and maybe this is the market recalibrating itself, where if we head over to the SR3Z5 contracts first, this is a daily time frame. We could see that cut odds for December shot up over the past week and a half. Okay. And during that time frame, initially, you were looking at treasuries that were likewise rallying. But for whatever reason, the past 2 days, we get back to our range highs and talk about a market that's potentially staying range bound. I think we just got a even stronger piece of evidence here that this range that we have between basically 112 and 114 is pretty solid, technically speaking. Hassett's odds jump. So let me just pull that back up on the screen for those that missed it earlier. Kevin Hassett's now at, we'll call it 70% chance, rounding up, to be the next Fed chair. This morning, if we just look at the 1 week change, we're talking about a few days ago, he was sitting closer to 30%. So this is a material shift in the broader market. And concurrent to that point, we see that Fed cut odds next year after May have started to increase because, of course, that's when Fed Chair Powell is expected to leave his term in May when it expires. The market's kind of reading through a little bit like reflation to me today, if we want to think in macro themes, Thomas. Precious metals up, stocks bouncing back, treasury yields higher. The dollar's a bit stronger versus the pound and the Canadian dollar, and the euro's losing ground. Crypto's not exactly participating, but that's kind of where my brain's going right now. How are you interpreting the treasury move today? It's not like it's a 6 IVR. This isn't really stirring the pot, so to speak.
Yeah. I mean, so Chris, anyone, say you take an Econ 101 class or something, and then you tell someone, all right, we're going to get a more dovish Fed next year, more dovish chair. So if you're having a more dovish Fed, do you expect rates to go up or down? And bond prices are falling today after we get, the expectation of a more dovish Fed looking forward. So I think the only way you could slice it, if you look into it a little deeper, and there's probably other ways, it's not the only way, shouldn't say that, but the Fed is going to be cutting perhaps more than they should at a time when the economy is still strong or still, avoiding a recession. And if you're cutting more than you should, I mean, compared to the prevailing, monetary policy dogma that's been in place for quite a while, what's going to happen? People are going to be spending more and more money, more loans. And there goes my ES position that just filled, thankfully. So what happens under that circumstance? People start spending a lot more demand in the economy next year. All of a sudden prices are going up and up. And then you have headlines like, say, for instance, 4%, 5% inflation, then people start getting rowdy about, prices going up so much. At first, you're optimistic because, I could get a mortgage for cheaper, I could get a car note for cheaper, things like that. Fast forward 12, 18 months, maybe towards the end of 2026, somewhere around there, it doesn't matter. And all of a sudden now my groceries, they're getting a lot more expensive. And now, the public, the administration has to react to that because prices are up so much. And now after you just cut rates more than you should have, you're saying, now we may have to raise them. So, I mean, it becomes, this is why Fed policy, it has to be guided by data, things like that. And not saying it's going to happen, but I think that's what the bond market is starting to show here. Because, like I said, it's counterintuitive to the initial, very basic understanding of how yields should move.
So the move in bonds today wipes out all the gains that we've had basically going back to November 20th. Woke up this morning and we were at 117 and near 117 and a half. Looking good. Everything's fine. And then the Hassett news comes out and we really start to take it on the chin. So we're still above 116. As far as I'm concerned, I'm sticking to my game plan of 116 is my line in the sand in bonds. Over in notes, that's 112. So we're nowhere near close to that. I suppose at 112 and 26 ticks, you could make an argument that we're pretty darn close to the midpoint of the recent trading range. So what would an iron condor around there look like? 46% pop, a little bit better than it's not quite 1-to-1, not ideal, but that would be the trading range, Thomas, right? You're not going to break through 114. You're not going to get below 112. We hold the trading range that's been in place since the start of September. I could adjust my bond position with a little bit of this. Yeah, you know what? Short iron condor. It's only a 5.9 IVR, but a 1-to-1 looking for the range to hold. Why not?
Chris, now that Powell is officially a lame duck, does what he says between now and the end of his term matter less for markets?
Yeah, I think so. I think as time goes on, the value of his words matters less and less. And I think we talked about this the past week or two, Thomas, here on the show. Is it a destination or the journey that matters?
It's the friends we make along the way.
Right, but like right. But if it's March and the Fed says, we're not gonna cut in March, the market freaks out a little bit and says, yeah, but they'll cut in May with Fed Chair Hassett, and if they have to do a catch-up cut, they probably would. And then moving forward, so the journey matters less and less as time goes on. Him being a lame duck, I mean, if he does something off the reservation, like starts talking about rate hikes, he could move the markets. Yeah.
Put Hassett in a weird position, going into his term. But now I guess we have a shadow chair, so to say.
You could call him that. But is that a significant shift from where we've already been? The president's been acting like a shadow Fed chair. Stephen Miron's been on the Fed Board of Governors. Wasn't he just over in the White House? So I think we've already crossed that bridge, personally speaking. But maybe other people are thinking that we're just crossing that bridge for the first time, which perhaps explains something in the metals. Silver shines today. Let's start there. Oh gosh, $59. Excuse me for being a little excited. Here's that bullish falling wedge we were looking at last week and queuing up the long $55 calls and the 55.5 call spreads, which if you were long those, congratulations. It seems to have worked out quite well in very quick order. Not a double top, obviously, which is what some of the haters were saying out there, Mr. Westwater. As silver explodes to the upside, we see that volatility pushes up to a new relative high since early October. What's not to like about this chart? I heard that you have some FOMO, though.
Yeah, I'm actually beyond FOMO. I'm a little mad about this one. After being in silver over and over on the long side for this entire year, I've missed it. And I blame the holidays last week. It was a busy week. It was a busy week at work, a busy week at home. Couldn't focus on, trading in the charts as I wanted to. And now I'm left in a spot where I have to wait for a pullback. And it's weird. I have to wait for a pullback just to 58 or something to where I want to get in. And it's like, do I want to do that over just 90 cents, or do I want to get in long now? Do I want to structure in a way where I'm doing a short put spread where I give myself some time and room on the bottom side to get in? I think that's probably the way I'm going to have to get into this. But listen, I mean, silver's been doing pretty good all year. It's had a couple pullbacks. Each pullback has been a buying opportunity, and it's rewarded you after only a couple of weeks if you stayed in it. So this one is, I think it's one I have to get back in, and I have to do it pretty quickly, because this chart, the way it's going, you can miss out on a lot in a short time. And I'm going to do it in a way where if it does pull back, I'll have some room, I'll have some duration, so I'll be able to stay in it. And my actual thesis is pullbacks are going to be bought. So I'm fine if I get in and there is a pullback. Not ideal. I'd rather just have it rip higher right away. But I've been confident on silver all year. I'm going to stay confident. I'm going to trade it to my views.
So today I was sitting at 22 DTE in the first leg of the long 50.5 call spreads that were put on several weeks ago during the initial pullback, where begrudgingly when silver was down 5.6% or so a few weeks back that one single day, here I was kicking myself for getting in a little bit too early. But that is ultimately why I don't like low duration trades. I'm not a 0 DTE or 1 DTE guy. I've known historically, and I've said it here on air before, an absolute garbage scalper. just doesn't comport with my worldview or how my brain works. So I can't do it. Instead, looking longer term is something that has benefited. And so, continuing putting on long silver trades. I took off one of the positions here today. I was trying to get out last week, Thomas. You could see my failed attempts to get out. So good thing that I didn't.
There it is.
Right? Tried. I could not. So today got a little bit lucky, the fact that I was still in the trade. Nevertheless, rather be lucky than good. So taking off one of the legs here, keeping the second one on, it's still putting up numbers. The question is, how much more convexity is there within it at this point in time? And quite frankly, it doesn't feel like there may be a lot left because given how this market's moved in recent days, it's only up a few $100, which I'd be hoping would be up a little bit more by now. So we'll continue to watch this, but silver looks like it's an absolute monster at this juncture. We should talk about what happened on Friday, though. Because Friday, if you were paying attention or you were up in the middle of the night giving your kid a bottle, you went to go check your positions in various things like silver, and you noticed that the market was frozen. So silver is flirting with this gigantic breakout. Prices are creeping up, Thomas, and there is absolute silence because the CME, which is these products that we're trading, and our friend here on the show, that their systems went dark. So there were no trades in any markets, right? Not just futures options. It's just frozen. They said that a cooling failure at a data center is behind all this. So hours later, systems are restored, trading resumes, and silver spikes. So the conspiracy was that the CME had shut down the servers in order to prevent silver from breaking out. I don't think that worked, given the price action of the past few days. But this is kind of the kind of thing that you hear if you get into the weeds trading silver and you start looking around online at fellow people in FinTwit who are trading silver, getting their perspective, their charts, what tools they use to analyze the market. Conspiracy theories are a bedrock of the silver market. Some traders say that there's a massive delivery obligation lurking, one that could break the system if it's not handled just right. And this outage happens to be at this critical moment, technically, when silver's breaking out. So it's fueling this idea here that there was something untoward going on at the end of last week. Listen, the outage definitely reveals some vulnerabilities in the plumbing of the market. There's no doubt behind that. But in terms of the conspiracy or this notion that people are putting their thumb on the scales to make sure that folks who are long silver lose money. Listen, Trading Places is on TV a lot right now. And if you want to entertain that type of silliness, I would say go over there. That's not to say there hasn't been things that have been proven in court with like a JP Morgan and SLV. But in terms of the CME doing anything to the silver futures market, I don't see much there to hang a hat on right now. Which, as a side note, Thomas, I recently learned that one of my neighbors, guy lives down the street, was in Trading Places 35 years ago, which is pretty cool.
Oh, that is pretty cool.
Yeah.
Living down the street from a legend and you don't even know it.
Yeah. And
Chris,
his wife was in Seinfeld.
Is silver and gold going up despite the drop in bond prices? Does that give you any kind of more or less confidence in the trade?
Silver feels like it is a thin market where prices are getting pushed around, and because when was the last time we saw these prices, Thomas? Have we ever seen these prices in silver?
I mean, it's important to realize the silver market is much smaller than the gold market. So when you do get short squeezes or what you're talking about, these supply obligations that need to be filled by a certain date, it can affect the silver market more than gold.
Yeah, for sure. I mean, silver is a chart that we've been talking about and looking at for a number of years here. Long-term bottom. It's going to go back to the 2011 highs. And yeah, it's worked. I mean, silver has been the bread and butter this year for us here on Futures Power Hour. We wouldn't have had the year that we've had without silver. How far this runs, though, I think is the next question, because there has been a segment that was done, has been done historically on air here, not us on Futures Power, but I mean in Tasty Live, generally speaking, where the gold-silver ratio is looked at. And actually, Thomas, this was something I was curious to get your opinion on. because, and I need to pull this up on the screen here to get the long-term chart. There was a point earlier this year where it crossed 100. And when it gets above 100, we had mentioned back in April, oh, well, you know, when it falls below 100 again, that begins a stretch where silver begins to outperform gold, and we should really be paying attention to the silver market. Obviously, that's played out since then. But we went from the ratio of gold to silver being north of 100 to now where it's in the low 70s. And quite frankly, this is the low range that we've been trading in effectively since July 2021. Would you be looking for gold to outperform silver here moving forward? Or is it worth potentially putting a pair trade on, long gold, short silver, thinking that you get some type of, you know, retracement here in the little brother metal?
Yeah, so I mean, the gold silver ratio, because it is a ratio, it does, you know, you could say there's some kind of mean reversion mechanism that occurs with these, since there is a relationship between the prices and they're slightly different, what drives gold, what drives silver. The lowest since 2021, yeah, that's pretty notable. You know, the last time it was that low, it was preceded by another low earlier in 2021, and then we had, you know, the gold silver ratio rising for about a good 18 months in a pretty strong trend. Yeah, I mean, this one would be interesting to look at. You know, if you do want to get long gold, it hasn't had, you know, this crazy rally where you could feel a little bit more confident. If you're just bullish precious metals overall, you could get long gold, you know, and say you think silver's move is already mostly priced into whatever's happening. I think it's valid, you know, looking at the ratio being at this low and saying, I want to get a little longer gold than I do silver if you're just bullish the whole space. I think that, you know, or a pairs trade where you get some maybe short exposure to silver and long gold. I think, you know, that could be something viable.
In April, it didn't happen overnight, right? You had to ride out the gold silver ratio persisting above 100 for a few weeks if that was a pairs trade that you enacted. It's not one that I took. I just said, oh, well, it should probably be more long silver than I am gold at this point, but I'm going to be long both. Why not? I would think then if you're looking at the world through that view, you're probably thinking that you got to do something you can't do the typical 45 and 21 out. You got to think much longer term, like 115 days. This could take months to turn the corner where you get the gold silver ratio back to like an 85. If that's something that people could handle in their account, fine. Maybe it's not the futures to do it. Maybe it's MGC and SIL together and not GC and SI just because of how big those contracts are. But I think that is something in terms of gold potentially outperforming moving forward. Thomas, this is a pretty good looking chart here. It's a triangle, a symmetrical triangle at the top of an uptrend. Historically speaking, those are bullish continuation patterns. We've moved up through the November swing high here today. So we breached this potential evening star candlestick cluster top. And while we have pulled back in since then, it's still a market that looks like it wants to move to the upside. So silver has worked out, going to stay long there. Gold, this is at 22 DTE. Obviously, it's not at the strikes we're looking for, but in terms of re-upping that and rolling it out, looking at the 4350, 4400, I think that makes a great deal of sense still, because a symmetrical triangle should be hitting one of its base tent poles here, and that would be at the October 21st high at 44.27 and change.
Yeah, I mean, a pretty wide measured move there. And, you know, the triangle breakouts are nice. Sometimes you do see it come back down to retest prior support before it puts in, or prior resistance before it, you know, really takes off. There's no way to know what does happen, but be wary of that. If you're doing something, when I'm doing triangle breakouts, you know, and I'm trying to, you know, this works better with selling a put spread, but kind of selling the put spread where it would retest or around where it would retest that prior resistance is something I do sometimes. With gold, I do like the call spreads, getting long call spreads, because as we've seen a lot, volatility does tend to expand as gold moves higher. Say
which
we
it has
go
been
and do
doing over the past week for what it's worth.
right.
We're seeing that.
And so, selling a put spread in gold around that prior resistance, I don't like too much here. But I'm looking at getting long right now because I think it makes sense to get long gold. This is a nice looking chart. And the fact that it's going up, even though bonds are falling today, gives me a little more confidence that gold might be a preferred vehicle if bonds are falling on the view that we're going to get reflation. What is a historical hedge against inflation? It's gold. So I think 2026, from what it looks like right now to me, maybe you have a different view, Chris. I think we're looking at another pretty good year for gold.
I think that we're looking at another pretty good year for gold, most likely. Yeah. Gold, there's a number of ways to approach this, right? I like trading in the gold futures options market. If we're thinking about other ways to express this view, let's say you don't like the volatility profile, gold futures don't fit your, the cut of your jib in terms of your portfolio constraints, could always go over into GC or MGC, Thomas. MGC or 10Z, which is actually the new product. Tick value for GC is $10. For MGC, it's $1, and for 10Z, it's 10 cents. So if you're looking for precise hedging or systematic scaling, or you're actually just getting into learning futures themselves, in my view, 10Z is a place that you can operate quickly. It's kind of like a spot currency market in terms of executing trades because it's futures only. So in, out. But just in terms of the margin math here, for gold, each dollar's worth $100. So a 1% move means a $2,400 swing per contract with margin around $7,000 to $9,000. That's roughly 27 to 34% of your margin being eaten up on a 1% move in gold. Whereas for 10Z, you're taking that, you're divided by 100. So a 1% move is a $24 swing. Again, more manageable for your typical retail account. Okay, Thomas, we only have a few minutes left here. We need to keep moving forward into the world of energy here. Oil up, nat gas down. Although nat gas was recovering its losses as the day was moving forward. And are we still down on the day in natty gas? Where are you? No, we are not. Okay, so little rebound there. Headlines over the weekend. Europe doesn't want Russia to stop the war with Ukraine. That's what Zero Hedge tells me. That seems like it's slanted coverage. Either way, it looks like that we're getting some movement in that direction, but France and the UK are saying that they will put troops in Ukraine to deter Russia. Oil's up a little bit here. Volatility's bouncing back. The US is still considering bombing Venezuela, Thomas. So those little out of the money calls, they're doing a little bit better today. They expire at the end of this week, though, and as is the case until we see the Gerald Ford leave the South Caribbean, I'm going to be putting on these little out of the money end of the week call spreads, looking for a $2 or $3 bounce in oil should something terrible occur. We need to get another trade on for this week. So looking at the 62.63 call spread here, risking 150 to make 850. I think that's a worthy hedge if people are looking for something geopolitical to put into their pocket. Today with the iron condors getting closer to the center of the range, it's all working out for now. But oil could be a tricky market here, I feel like, over the next few weeks as we contend with these geopolitical forces.
Yeah, Trump tweeted something about don't fly over Venezuela. It's not an official proclamation or order from the U.S. It's more of, I don't know, it's a statement that escalates tensions. At the same time, you have Ukraine, they striked a couple, I think 2 successful strikes on Russian oil tankers. So that gave oil a little bit of a boost there as well. You got OPEC. I think OPEC said no production change in the first quarter of 2026. So, although you have these concerns about weakening demand, and I think those are still, at mind. I'm going to continue in my iron condor trading the range that we've been at. I have mine a little tighter than the range has been at, between 57 and 62.5. I'm 44 days out there, so leaving that trade on this week, just leaving it as it is. But we do have to watch these peace deal talks with Russia and the US and Ukraine leading those.
Yeah, the short iron condor that I have on here, 65, 67, 54, 52, it still seems to be something that's sensible. It's wrapped around the 1 standard deviation move. If you were to put it on today, 63% pop, it's basically a 3-to-1. It's a little bit worse than that right now. I would still put it on today if I didn't have it on already. We're getting closer back towards $60. That's been a decent price for oil in recent weeks and months. So short iron condor works. Natural gas, on the other hand, this is bouncing back here as well. I have 2 short iron condor trades on because one is at 22 DTE, but as they are currently structured, Thomas, we have so much time and so much space here because we're looking for the yearly highs to hold. So as long as the yearly highs don't break within our window, it's a trade that should work out. I don't really think there's much to say.
I am a little longer than you are. I'm in both the NGF6 and the NGG6 contracts, both short put spreads there. Nice. Both are working out well. I'm going to keep them on for now. I'm looking for above 5. I want to say within 2 weeks, but the way it's moving now, we could be there, maybe tomorrow, the next day. But I'm at my short puts are at 4.5 in the F6 contract and 4.1 in the G6 contract. So, I have about 40 cents playing room in both of those. So I feel pretty comfortable with them both for now. One expires in 25 days, the further out the G6 contract in 57 days. So I'll take this F6 contract off pretty soon. It's at about 40% profit. When I get to 50, I'll take that off. And I'll probably let the G6 contract ride for a little bit more. If we get more upside, maybe I'll even roll those prices up in the G6 contract. I'm assuming it happens within a week. And just going to continue playing on the long side for now. Of course, that can change day to day, but that's the way I see the market right now for natty gas.
It's a really beautiful market technically, right? Where you had this, resistance near 450, resistance near 450. All of a sudden it breaks, support again. You bounce from that former resistance, become support into a new cycle high. That looks pretty bullish off the lows. So right now, 50 IVR, it's uncorrelated with a lot of different things in the portfolio. So directionally neutral here, it helps bring the beta weighted deltas. But if I was playing this directional, I don't know how you could play this anything other than long at current time. Just charting first. Now it's natural gas, so who knows? But good on you, Thomas. It's been a heck of a few days here, so hopefully that's making up for missing out on some of the silver, I suppose. Dollars intraday reversal. We don't have much time here, but focus is on the yen coming back in. We didn't get any intervention talk over the Thanksgiving holiday itself, but BOJ officials were out overnight mentioning how they might need to raise rates because of what's going on with the currency. So clearly it's becoming more of a point of interest here, but they haven't formally intervened yet. And until we see dollar yen get to like that 158 level, they probably don't. So in terms of someone who is sitting in this market, thinking that this is a market that could continue to make progress, Thomas, this chart looks a lot like what we've seen previously here. I've mentioned this for the dollar yen. We're looking at spot real quick. How many times have we broken out, pulled back, made a new high, pulled back to former, resistance turn support? Here we just had it again, broke out. Now we're pulling back into former resistance turn support, a pivot level we had in February. We're holding above the 1 month, which has thus far been the defining level of support in dollar yen's uptrend. And today we reversed sharply. So I'm still going to be leaning long my short delta exposure here in 6J. Otherwise, the dollar mostly up now on the session. The euro has basically given up all of its gains, failing on an attempt at 117. We will have to cover more later, though, because we are out of time here on Futures Power Hour today. Real quick, the calendar for tomorrow, European inflation, if you're trading 6E. Other than that, quiet session. Fed Bowman is speaking, but this Fed governor will not be talking monetary policy because we are officially in the communication blackout window. You can ignore it. Until then, though, Thomas, we'll see everyone in about an hour's time for last call. Good luck trading. After a brief break, more Tasty Live coming at you. Dr. Jim Schultz coming up next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with forex, now available on tastytrade. Get in on over 80 forex pairs, 24 hours a day, 5 days a week, with the forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
This is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Now, welcome to the Monday edition of what it is that we are trying to do. Welcome to the post-Thanksgiving edition of what it is that we are trying to do, man. I'm glad that you guys are here because it is only because of you all that we can do what we do. So thank you guys so much. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. Man, you can celebrate. Man, I don't know. For a minute there, you could celebrate if you were a bear. Then you could celebrate if you were a bull. And now you can celebrate if you're a bear again. So I'm really not sure what to believe in this market. But man, it's a good time had by most. And so hop into the chat. Communicate with the other people that are watching the show. Make some friends. Make some enemies. Just pump that algo. It's the only thing that truly matters. And of course, if you have any questions for me, you can drop them in the chat and I'll get to as many as I possibly can. But Josh, go and bring us into the market. What's going on? We still got a market? Man, I don't know, man. All of a sudden, it's not so fun anymore. All of a sudden, it's like, okay, it can go back down. The S&P is down 31 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, which is an extremely high-risk product. If you are brand new to the program, that is my very, very B-minus attempt at internet sarcasm. You've got the boomers down 332, and you've got the Russell 2000 futures index down 27 on the day. You got bonds down a little bit over a point. You got notes down a few ticks. You got oil up about 80 cents. You got UB40 down a little bit over a point. You've got, I think I said bonds down a tick. I guess I meant bonds down a point. Bonds down, yeah, just over a point. Man, look at the shifties. You've got gold up 18, where my Hunt brothers at. Let's take a look. Oh, I already have it up. Look at this. Look at the Hunt Brothers, man. Up $1.71 on the day. Silver knocking on the door of 60. Silver is almost at 60. That's crazy. That is absolutely bonkers. It feels like it wasn't that long ago. Hang on a second. Let's look at this. It was like a few months ago, right? Silver was at like 28 or 29 or something like that. Let me look at, hold on. Let me do, I think it's $ SI should give me a continuous contract of silver. And we can take a look at this. If I look at a continuous contract of silver, I go back. Yeah, we got a daily. Go back like a year. That's fine. Let's do, we'll do like 1 year. So if I go back, yeah, look at this. Look at this. If I scroll back just a little bit, let me go as far back as I can. So right now we are here, right? Like you are here. Like one of those like mall deals. Man, I went to the mall on Friday. So I went to the mall on Black Friday. Had to get some things for my wife. And it was packed. I couldn't believe it. I was like, is it 1994? So I was at the mall on Friday, physically there. I was in American Eagle. I'm like, it really is 1994. What am I doing in American Eagle? They had a huge sale that my wife made very clear to me. So I'm like, all right, I need to strike while the iron is hot. But I was there and everybody was there. It was packed. I could not believe it. Couldn't even find a parking spot. But anyway, I digress. So you've got silver up around 58, little you are here deal. But look at this down back here, Liberation Day. You had silver under 30, right? And so, man, that is quite a run indeed for silver over the course of the last 6 months or so. That's some pretty crazy stuff. And if we go into gold, let's take a look at let's do a little continuous deal on gold. $/GC, the old gold COMEX. So similar type of deal, except for the fact that gold was up to almost 4,400. This was about a month ago, maybe 2 months ago or so. And so similar type of deal, like it was, we were all liberated back in April. Although gold actually was it's been fairly strong the whole way through, even through Liberation Day, whereas silver was a lot more of a downturn. But now gold is getting closer and closer to that 4,400 level. And yeah, man, some crazy stuff. Indeed. Josh is telling me that the gold silver ratio is nearing an all-time high. Well, thank you for that information. I don't know how I'm going to use that information. I mean, if there's a way for me to fade what Josh is doing, like let me know in the chat. Let me know that. That's what I need to know. I don't need to know metrics and ratios. I just need to know, what are you doing? What are you doing personally? What are you doing professionally? Because I just need to be on the other side of all that. So just let me know in the chat once you figure all that out. And so, he just told me he's long some gold and short some silver. All right, so we're going to load up on out of the money silver calls, and we're going to do it right here, like on the show together. You can only find this type of inside information on the Tasty Live Network. So welcome to the show. And all right, thank you for that there, Josh. All right, so that's gold, that's silver. Man, look at the portfolio, guys. I mean, I see you guys in the chat, man. I appreciate you guys. Let me know how Thanksgiving went, by the way. I'd love to know how your holiday was. Let me know what your favorite dish was. Mine would probably, as I kind of, as it was written and we foreshadowed before the actual Thanksgiving, I would have to go with my mother-in-law's dressing. Very, very good. It's not quite as good as my own mom's stuffing for obvious reasons, but it's very, very good. And so I thoroughly enjoy that quite a bit. But let me know in the chat, what was your favorite thing on Thanksgiving? I would like to know. The algorithm would love to know, I can assure you. And so put that guy in there. But take a look at the portfolio. Man, we don't have anything on anymore. All we've got Home Depot and we've got Starbucks. That's it. That's all we've got. And we cleaned everything up before the holidays, or the holiday, I should say, because the holidays are actually coming later on this month. But yeah, all we have is Home Depot and all we have is Starbucks. Now, Starbucks, this is a trade that we've had on it's been almost a full year now, right? Like I did this back at the end of December of 2024, and we now have it on is December 1st, 2025. Oh, by the way, let me be the first to wish you a happy month anniversary. Happy month anniversary to all of you out there that are watching the show. I could not do this without you. I just appreciate you guys so much. Have I ever told you guys the origin of the month anniversary? I don't think so. So in 2006, I met my wife and I asked her out on a date. And it was just like the end of June 2006. I asked her out on a date and she reluctantly said yes. I don't think she was feeling well that day, but she kind of said, okay, sure. Like, that sounds all right. So on July 1st, 2006, we actually went to coffee on our first date, and we were there for like 5 hours. And let me tell you something. I talked for 4.5 hours straight, 4.5 hours straight, but she listened, right? She listened. She seemed mildly interested. It went okay. Well, here we are 19 years later, but we have been to coffee on the first of the month ever since, and we called that our month anniversary. So happy month anniversary to you guys. December 1st, 2025. This is what, like 4,000 in a row? I can't do the math in my head. I'm no Julia Spina, but maybe you guys can figure it out. In fact, somebody figure it out for me in the chat. I would love to know this. And again, the algorithm, it's craving this knowledge. How many months in a row is that? Because we have not missed a single month. So if I went July 1st, Josh, I'm all set on your commentary, man. July 1st, 2006 to the present. How many months consecutively is that? Somebody figure that out for us, because we all need to know. But anyway, I digress. And happy month anniversary to you all. So let's see. If I go ahead and do, let's see. Okay, so we've got Home Depot, we've got Starbucks. Home Depot, it's really interesting. The Home Depot situation, I mean, look at this. We were dead to rights on this trade, right? Like, we were absolutely dead to rights on this trade, and it was not looking too good. If I bring up my change here really quick, I go into the chains. You can see that we did Home Depot back on November 17th. We did this for Home Depot earnings, if I'm not mistaken. And we were long for Home Depot earnings, and Home Depot crashed, boom, banged on earnings, and it was not great. It was not whatever. And they came out and said, hey, listen, it's this, that, and the other thing. And, the stock obviously plummeted. And so that was not good for our short put spread in Home Depot. But again, this is the beauty of defined risk, right? Whether it's a vertical spread, whether it's iron condor, once your risk is defined, like, if you sized the position correctly, which that's totally on you. There's no reason not to do that. Now, if you're brand new, you're just getting going, you're going to make mistakes, you're going to get scraped up a little bit here and there. Like, that, of course, is all part of the process. But once you get beyond that and you understand what you're trying to accomplish from a sizing standpoint, then there's really no reason to oversize yourself in a position. Hey, we've all been there. We all will continue to return to that spot, myself included. But we all know that that's on us. We all know that that is a voluntary choice. The market didn't beat you, right? Tesla, Elon tweets didn't beat you like you beat yourself, right? But that's the beautiful thing. If you're sized right, define risk, you can just you can sit back and just let it work. You can sit back and say, all right, I still feel good about the position. I still want to play the probabilities out to the end, which, oh, by the way, remember, all those probabilities that you see on order entry, 63%, 71%, P50 is this, P50 is that, whatever. Those are all assuming that you hold the trade all the way to the end. They're all assuming, it's all baked in. It's baked right into the center of the pie. It's right there in the middle of the ingredient list. You are expected to hold this thing to the end. Now, does that mean you have to do that? No, it doesn't. Does that mean that you can't exit early and say, hey, I don't think this thing is coming back. I'm going to save my $1.50, whatever. Of course you can do that. But just understand that when you see these probabilities, it is assuming that if this is a 44 DTE trade, you're going to hold it for 44 DTE. If this is a 55 DTE trade, you're going to hold this thing for 55 days. So just understand that if you go in and you kind of short circuit the probabilities over time, then you're not really doing justice to what you saw on day number one. Now, I respect the fact that markets move, things change, the risk parameters aren't the same that they were when you put the trade on. And so we have to obviously make decisions day to day. But I did want to point out that all the numbers that you see, all of the objective numbers, it's not my opinion, it's not your opinion, it's not some, prognosticator's prognostication about what's going on. These are the cold, hard mathematical facts of the marketplace. This is what it's showing you. One of the things that it means that I think is kind of lost on a lot of traders is it is assuming that you will be in the trade all the way to the end if that's what it takes. Well, when you have a defined risk position, the beautiful thing is, if that is what it takes, I got to run it inside of 21 days. I got to run it down to expiration. I got to do whatever. Hey, my risk is defined. So if it never comes back, if I end up taking max loss, it could be a lot worse. A la Oracle from a couple months ago, right? A la, what was that other stock? Not Wolf. Forget about Wolf. That other one. The Quantum, the Scott Bakula company. The Quantum Leap company. What was that? Rigetti. Right, Rigetti, we got crushed on Rigetti, although I think we actually kind of recovered on that one. But it's still in my mind, it's kind of cemented as having gotten pretty steamrolled on that position. But anyway, I digress. And so for Home Depot, it's actually back. It's actually out of the money now, which is crazy. And so we're going to sit tight. I mean, I'm up a couple of shekels on the trade, but we're just barely inside of 21 days to go. It's not that crazy. And so let's go ahead. See people trolling me on Chipotle in the chat. We don't talk about Chipotle on the show anymore. And so I would appreciate you not mentioning it again. But Home Depot, we're up about 50, 55 cents on the trade. Let's sit tight. Let's sit tight. We don't have anything on. But if I take Home Depot off, all we have on is Starbucks. Like if I close Home Depot and then close Starbucks, we'll have a blank portfolio. I'm pretty sure it's somewhere in my contract. I can't have that. Like I'm pretty sure somewhere. I don't even think it's fine print. I think it's like 32-point font. Like you can't have a blank portfolio. Like what are we going to do? Are we really just going to really rely 100% on the B-minus humor? That is not smart. That is just not a good strategic decision. Like as a compliment, sure, to kind of bring down the value of the show. Okay, that makes sense. But if you're going to lead with that and that's going to be your only thing, nah, man, that does not make any sense at all. So for Home Depot, we're going to sit tight and we're going to do nothing. Now, Starbucks is getting beaten up a little bit today, which I'm actually going to Starbucks after the show. I'm running up to Starbucks. There's one that's not far from here. I'm grabbing myself a coffee. I'm grabbing my wife a coffee. I'm coming back and I'm finishing my day. And so I'm very excited about this. I'm not super excited about the fact that Starbucks is down $1.88. But that's the way that it goes sometimes. And so Home Depot and Starbucks, it's very much a do nothing type of scenario. There's no reason to really do anything with Home Depot yet for the reasons that I just talked about. It's pretty close to obviously being economically significant. And I mean, you could actually argue it's economically significant now at 65 cents. This is back to the Home Depot trade. And I would not necessarily fight you on that. I would not necessarily disagree with you on that. I'm not going to take it off, but I think you bring up very valid points for taking it off. The reason why I'm not going to take it off, by the way, is we've worked so hard to get to this point. I don't really want to just, pull the ripcord just yet. I'm like, hey, we finally have Home Depot in a decent spot. We're going into the final month of the year. We got through the Thanksgiving rally, which was quite impressive. We're right on the precipice of the Santa Claus rally, which is probably going to be doubly impressive if history is any guide. It's like, I kind of want to ride that wave. Like, let's ride that wave for another 10 or 17 cents in this Home Depot spread, and then we'll see what's what. And so that's kind of what I'm thinking there. And then Starbucks, I'm not going to do anything because that's kind of, that's just been part of us for over a year now. And so there was no reason to do anything with that just yet. But what I do want to do is I do want to get, and I see you guys, man. Look at Scramble, everything in the house. Dan Ducarn in the house. Man, Catterday Night in the house. Man, look at this. I see Mr. Pillows is here. Anderson Homestead in the house, man. Joel James, Adam Armfield, Danish Dynamite, Sam L in the house. Man, I got N1C3 boy in the house, man. I appreciate you guys. So let's go ahead and what I want to do. So volatility is up a little bit today. I mean, you can see the VIX is up 77 cents. I think it was a wee bit higher earlier. With the market being down more this morning. But still, VIX up 77 cents. That's not too bad. Volatility futures up 15 cents. That's not too bad. Let's use this as an opportunity to sell some premium. Like, let's sell some premium in the indexes and let's start to rebuild our positive theta. Because obviously right now I don't really have any positions on. And I mean, you can see for yourself, the theta numbers are basically zero. I mean, I'm slightly positive because of the short put spread in Home Depot. But if you just net those two guys together, I'm only positive about 2. Like, it's like, all right, man, let's get some things working. Let's kind of rebuild this portfolio. And oh, by the way, if I'm not mistaken, we've got the government's back online, right? Which again, has that changed your life? Probably not. It hasn't changed my life one iota. But still, the government's back online. So what does that mean? And that means we have a slew of fake, made up, imaginary data that we can trade. CPIs, PPIs, NFPs, PCEs, right? We got those Spanish durable goods prints. Those guys are back online. Like, it's all coming. I think it starts later on this week. If I'm not mistaken, we have NFP this Friday. In fact, I'm almost positive it's going to be this Friday, 8:30. Man, we're back. We are 100% back. I cannot wait because all that Jobs Thursday business, I mean, it was no less fake or imaginary. But man, it sure didn't feel right. It didn't feel right at all. So let's go ahead and let's go into, I'm going to do the futures options again. I really love the futures options because, they just give you so much buying power relief for index exposure when if you've only got a $30,000 account, you may not be able to do something in SPY. You may not be able to do something in IWM. You may not be able to do something in QQQ. But you can step into, the micros, MES, MNQ. You could even step into the minis if you wanted to with like RTY for like some Russell exposure or whatever. And you may get a lot more buying power relief than you would get with something with a straight, more plain vanilla, equity option, SPY, QQQ, IWM, etc. So if I go into MES, I was looking at this earlier and I was like, you know what? I'm kind of thinking, let's mix it up a little bit. Like, again, we all know it's Monday, it's chest day. It's Tuesday, it's back day. Wednesday is leg day, so it's off day, right? We understand that's your kind of standard protocol. But from time to time, going on a Monday, do some legs. Going on a Monday, do some back, right? Obviously, we know you can't do delts on Monday. You can't do arms on Monday. That's not allowed. But there is a little bit of play around the edges. You can kind of shock the muscle a wee little bit, just if you think outside the box, just a tiny, tiny bit. So I'm thinking here for MES, let's go into the 46-day cycle. So we're going out to January now, which we have to be mindful of the simple fact that, MES is still the Z contract. Going all the way out to January of 26, we are now trading the H contract. And so you have to understand that there's going to be a pricing difference, right? Generally speaking, the financial futures are going to be in contango. Like they're going to be where the futures are trading higher, than the current month. And so it makes sense that the H contract is going to be above the Z contract. And then the, what's the June contract? M. The M contract will be above the Mars contract, and so on and so forth. And so just understand that, when you're looking at your strikes, you might be looking at, you're like, hey, 68.28 and 68.75 is only a 47 delta. Like that doesn't even make any sense, because how can it be out of the money if, the 68.75 strike is above where the current price is? Well, the reason why that all lines up is because the current price of this contract is not the Z contract, it's the H contract. So if I go into MESH, let me just bring this up really quick. MESH6, you can see there it is, 68.89. So if I bring up the January cycle again, there you go. So now you can see pretty clearly, my hope is, that the H contract, the March contract in 26 is actually trading 68.90 or thereabouts. And so when we're setting up our strikes for whatever strategy we want to choose, we have to be mindful of the fact that, the futures contract, the underlying futures contract is not Z, it is H. And so we have to respect the pricing differences that come along with that. And so what I think I want to do here, though, we haven't done one of these it's been a minute. Let's do a ratio spread. So let's do a ratio spread in MES. I much prefer put ratio spreads to call ratio spreads for the same reason that I much prefer short puts to short calls. Because remember, at the end of the day, a ratio spread, it could be the standard 1x2, or it could really be any combination, 2x3, 3x5, whatever. All the risk on the ratio is going to be with the extra short units that are tacked on the end. And so it's simpler when it's a 1x2 or even a 2x3, because you only have one extra unit. And that's where all of your risk is, because that's the unit that's not covered by a corresponding long. When you start getting into like 3x5s and 5x12s and whatever, you just have to be mindful of the fact that you have a lot more extra short units. And so just be aware of, what that means for directional risk, what that means for, potential delta risk if they go in the money and things of that nature. But generally speaking, I'm usually, pretty satisfied with just a standard 1x2. And so when I do a 1x2 put ratio spread, you have all the risk that comes along with a short put. And so, I've mentioned this many times before on the show, so I'll remind you guys, if this might be your first time to the program, welcome to the show. I appreciate you guys so much. I like short puts, and they're my favorite strategy, because at the end of the day, if you have to take the stock and just hold it, that's a huge advantage. That's a huge advantage in a market that wants to go higher. That's a huge advantage in a market that has shown historically, the positive drift is a very real thing. The positive risk premium in equities is a very real thing. And so I think most people are going to look at, the market and feel pretty good about, hey, if I've got to hold some MES, I got to hold some SPY for the long term to the upside, I feel okay about that. Now, obviously, the doomsayers and the doom scrollers and the this, that, and the other, like, man, this thing is going to, S&P 500, 1,500 by the end of the week. It's like they're going to look at it a little bit differently. But they've been wrong every single day now for about, 75 years straight. So I don't think today is going to be their day. But if you look at this, I'm thinking, and I have a bearish tint from time to time. I kind of have a bearish tint right now, honestly. But I'm not a doom scroller. I'm not a doomsayer like some of these cats on the internet. Man, they really... Man, but one of these times, it's going to be their day. And I can assure you, they're going to let every single one of us know it when it happens. And so, all right, let's go ahead here. I'm thinking, man, I don't know. Maybe we'll buy a 68.50 and we sell a couple 68.25s. I mean, look at this thing, man. It's a thing of beauty. This is why I love the ratio spread, because there's so many ways to win. There's no guarantee you're going to make money, of course. I mean, it could blow up in your face and the market could crash and now the short put goes in the money and all of a sudden, you're just bleeding right all over the place. That could certainly happen, of course, as it can with any strategy. But man, I love the ratio spread because, in fact, let me go to a curve view here really quick. Just real quick. Let me see here. Can I do a curve view with futures? I think I can. Let me do, let's see here. Oh, maybe not. Hold on. Yeah. There it is. I was like, I'm pretty sure I can. Let me try to minimize that. So if you look at, I need to change oh, there we go. Beautiful. Okay. So if we look at the visual representation of a ratio spread, this is how all put ratio spreads look to some degree. The slopes might be different, the shape might be a little bit different, but the general spirit, it's going to look something like this. Of course, if you're doing a 2x3 or 3x5 or whatever, it's going to look a little bit different, but it's going to essentially follow this same type of framework where if the market rallies, so we're over here now, right? If the market rallies, then what happens? You keep the credit that you sell it for. All the options move out of the money. They move further out of the money. You keep the credit you sell it for, and nobody gets hurt. Everybody's happy. Okay, that's good. That's a win, obviously, right? Well, what happens if it lands somewhere in the actual vertical spread? Well, this is where you can actually make more money because you could end up with that Goldilocks scenario where, the vertical spread is making money, but the extra short put is not losing money because it's right there in the spread. Like it's right there to where the long put spread that's baked into the middle of the strategy is performing well, but you're not so far down that the short put, the extra short put is kind of taking over. Okay. This zone though, you have to be aware, you really can't maximize or extract any value from this zone until the final week or two of the strategy, if not even the final days. And so to understand, if you're really going after maximum profit potential on a ratio spread, you have to go inside of 21 days. You have to. There's just no way around that. Now, if you're happy with kind of this area right here, which oftentimes I am, and oftentimes I think many of you also will be, then 21 days to go that's the way to play it, because you're controlling the gamma risk. You're, kind of minimizing that late cycle exposure that we have as we get closer to expiration. And so all of those things kind of fall into line, which is super, super nice. But just understand, if you're trying to, in fact, let me grab a different color here. If you're trying to maximize this region right here in the glacier freeze oval, you've got to be closer to expiration. That's not going to happen with 35 days to go. It's not going to happen with 41 days to go. It's not even going to happen with 22 days to go. You're going to have to carry this thing closer to expiration. And then, of course, you can see that now my profits begin to drop off as the short put takes over, the extra short put, I should say. And I have the risk profile that looks very similar to a naked short put. So anyway, with a ratio spread, the flexibility with the strategy is really second to none. Not to mention all the different management things that we can do. And so I like putting this guy on because we haven't had one on in a while. And I think this will be good. And I think it'll give us something to monitor for the coming, days, weeks, potentially even months. And it'll give us a way to take advantage of. All right, there you go. We got filled for 107.75. I may have just went in at the bid price. I didn't mean to do that, but that's okay. So we got filled on the MES ratio spread. All is good. Man, let me see where you guys are at. Man, let's go. Where are you guys at? Let's get into the chat. Man, I appreciate you guys so much. I see some people in the chat. I see Daniel says, poor Mrs. Autumn. That sounded more like brainwash rather than a date. Yeah, I don't think she was ready. Right? I used to sell windows when I was 18, and I've built up a significant skill set in negotiation tactics, high pressure negotiation tactics, and she just wasn't ready. And the next thing you know, you're married for 16 years, you got 3 beautiful children, and hey, what more can I give you? What more can I give you? I'll try to find something, but I'm pretty sure I'm maxed out. And so, but I appreciate you there, Daniel. And so let's see, where else are we at? We got somebody, man, I see Joel James says, Dr. Jim, thanks for all you do posting. So the algo and change will be happy. I like that. So I like that a whole lot. We're going to stick with the Allison change as kind of the tried and true. But again, just to mix it up every once in a while, where Monday might be a back day, Monday might be a legs day. Like, I like the algo and change. That's pretty good stuff. But let's go back to the beginning. It's Orgdenu again. How about that? Hey, man, Orgdenu lucked out. He got the surprise and delight and the first comment. I don't know that that's ever been done before. And so that's some pretty good stuff. Greetings from Italy, Dr. Jim. Hope you had a great Thanksgiving. You too, my friend. It was really great. It was fantastic. And I really hope the same for you and your family. Paul Heyman says, so did Autumn select the Publix turkey at 49 cents per pound or the $20 a pound fresh turkey from the city farm? So, yeah, so neither. But here's something that is very funny. And this actually traces back to when Autumn and I first met. So my favorite dessert of all time, and not like holiday related, but just like any run of the mill, like Monday or Tuesday. So my favorite dessert of all time are brownies, right? Love brownies with walnuts, like fudge, like it's unbelievable, right? So that's tippity top for me. Well, what's funny is when I first met Autumn and we started dating, she knew that about me, right? Like that's first date material. I said that within the first 5 minutes, I can assure you. Well, she remembered that. And so we had been dating for like, I don't know, maybe a month at the time. Well, she made me some brownies from scratch. And that's when I knew, I'm like, okay, I'm probably going to marry this girl. Like, this is unbelievable, right? And she made them like from scratch. Like, I think she went like in the field and like picked the wheat. I mean, this is how she tells the story. And so that's how it's etched in my mind. And so I'm like, she's like, like sweating over like a candle, like melting the butter. I'm like, this girl's unbelievable, right? So she did that. So fast forward 19 years later, Thanksgiving 2025. Do I get homemade brownies? No. I got Publix brownies. Now I still love them, of course, but I got Publix brownies. Oh man, it was brutal. I was like, "Are those brownies for me?" She said, "Those are all for you." I said, "Where are the homemade ones?" She said, "What homemade ones?" No homemade ones. You get Publix brownies. And so that's what I got there, Paul Heyman. No Publix turkey, but I did have some Publix brownies. And they're pretty good, actually. People are sleeping on Publix brownies. And of course, I got a discount because I worked there a few nights a week. And so let's see. N1C3 boy says, Doctor, I think I'm a dog, but I'm not allowed on the couch. I don't know what that means, but I appreciate you there, N1C3. That sounds like an inside deal that I'm on the outside of. I think I'm a telephone. Take these pills, and if you still don't feel any better, give me a ring. Oh, that's good. That's pretty good. That sounds like a dad joke. That sounds like something my kids would love. My kids love when they come up with their oon dad jokes or when I tell them dad jokes. I may use that for them if I'm understanding it correctly. Wolf's in the house. What's up there, Wolf? Appreciate you. Night Move's in the house calling for some Vecchio. Man, you guys just had an hour of Vecchio, which is not enough Vecchio. Like, I understand. Like, you need more Vecchio. Like, I totally get that. Let's see. Joel James. There, Adam Armfield. Hey, Jim, I'm starting with 2,500. I could write, starting with $2,500, I could write 10 SoFi puts for $1, keeping 50 cents. If I use the premium to write more, I'll be writing 645 puts by cycle 29. Have I found the infinite money glitch? No, I don't think it's going to work that way. Using the premium to write more options, I don't think it ever works out that cleanly. Like, you have to set aside buying power, especially for naked positions. And so, and what you're going to collect, you're never going to collect enough to offset the buying power required for the put. I mean, maybe I'm like, SoFi is not a cheap stock, is it? SoFi is like 20 or 30 bucks, I think. Yeah, SoFi is at 30 bucks. Yeah, it's not going to work for SoFi. Now, could you do it for Wolf? Maybe, but Wolf's going bankrupt. Right? It's only a matter of time, probably a matter of minutes. And so you might be able to get away with it for like a really low price stock, but you can't do it for like SoFi. I'm not even convinced you could do it for a low price stock because the buying power requirements are going to overwhelm whatever you're collecting in premium. And so at a certain point, you're not going to be able to do that. But Danish Dynamite's in the house. What's going on, my friend? I did have a wonderful Thanksgiving. I hope the same for you and yours. I appreciate you, my friend. Thank you so much. Samuel in the house. What's going on? The open P&L, bro. Don't leave us hanging like a bad earnings whisper. I mean, I'm not leaving anybody hanging. I'm just trying to rebuild the portfolio. I was going to do a couple of trades, but I've been off for like 4 or 5 days now. And so it's like, I got to get back into mid-season form. And so we're not as tight and as efficient as we normally are, which we're not usually that tight or efficient to begin with. And so, I was going to do MNQ too, but we can wait. We got the whole week, man. We got the whole week. Right, we got the whole week. We've got, let me think. I mean, nothing on the horizon. I know that I'm going to go on vacation at the very end of December, but that's not till the end of December. That's like right between like Christmas and New Year's. And so I know that we're doing that, but until then, you guys are stuck with me, whether you like it or not. And so let's see. Bogus Family says selling calls in AMD. Yeah, that sounds like a terrible idea. That sounds like something Nick Batista would do. AMD at 219. Man, look at this thing. Let me bring up a chart of AMD. Wow, and it's down. Yeah, AMD was up to 270. How crazy is that? Look at AMD, man. Wow, that's really wild stuff. So it's actually down. If I was going to trade AMD, right, being the expert technician that I am, just dissecting these charts, man, just dissecting them down to the bone, you got to be bullish here. You got to be bullish. I mean, is this not basic stuff? I mean, look at this. We got a little, I mean, some would call it a gap fill. I'm going to call it a gap bounce, right? We got a little gap bounce that's just about to take hold of this stock. Again, I'm not reinventing the wheel. I'm pretty sure you learned this. This isn't even technical analysis 101. This is like the prereq to get into technical analysis 101. Like this is super, super basic stuff. So basic, even I can do it. So I think here for AMD, I think you got to be bullish. That's how I would play it. But anyway, I digress. I appreciate you there, Bogus Families. Mr. Pillows, Dr. Jim, what's going on? What's going on there, Mr. Pillows? Dan Ducarn in the house. What's going on there, Dan Ducarn? Errol Coleman in the house. Favorite show on the network. Let's go, man. Errol Coleman in the house. You know what I'm going to do? Because my man is here. He's probably not here anymore because he put that comment in, though, 35 minutes ago. Let's do it, guys. I want everybody to join in. Everybody click on a chart. The stock doesn't matter. The index doesn't matter. Everybody go click on the 2-minute, 2-day settings. Those are the Errol Coleman settings. Every time you click on this, my man gets a 17-cent royalty. And so let's help him out. He's got Christmas shopping to do, too. Like he's got friends and family to, you know, to please and surprise and delight himself. So everybody do a little 2-minute, 2-day deal and let's hook him up. And so Errol Coleman, I appreciate you, my friend. Thank you so much. Let's see. N1C says he was on this morning explaining Black Scholes was a good chat. Oh man, I appreciate you. Thank you for watching the show with Liz and Jenny. What an uptick. We're talking about upticks. I mean, you guys think the market reversal was an uptick. That was nothing compared to what I experienced this morning with Liz and Jenny, as opposed to, you know, Nick and Tony. I mean, that's a huge uptick. And so that's like limit up type stuff. And so let's see, Dan Ducarn, Wolf. I'm not doing Wolf. I sell puts in the house. What's up with crypto? The poor crypto bros. What is up with crypto? I got Bitcoin. Okay, Bitcoin's up to 85,000. I mean, it's back on the upswing though, right? I mean, let's get back off the 2-minute chart. I want to see kind of a broader swath of what's going on here. Yeah, it's down in apparently last few days. Ooh, yeah, yikes. And man, that is again, guys, I'm no technician, but that chart looks ugly. And by ugly, I mean, you got to be bullish. I don't know how you could possibly not be bullish here. That might explain why I don't use technical analysis very much because I'm not very good at it. But when I look at this, I mean, that looks like, yeah, it's not good. But it was down below 80, right? No, it was down to 83 on the low, I guess. And so it's getting close. Yeah. Just pour one out for your local crypto bro, but don't pour out the good stuff. Like, I don't want to hear you guys pouring out banana daiquiris, and I don't want to hear you guys pouring out, you know, some LMNTs or some Ghosts, but you can pour out a little Natty Light Ice. Like, you can drop a little bit of that on the pavement and it's going to be okay. But thank you there, ISL Puts. I appreciate you. Anderson Homestead in the house, silver to the moon. Yeah, apparently. Let's see. Argent Purrs in the house. Appreciate you, my friend. Let's see. We're talking about some platinum packs and lunar stuff. I like it, man. You guys should be buddying up. I've said this from the beginning. Man, you've got 500 people that are watching the show, and they're all trying to do the same thing that you're trying to do. Some people are bulls, some people are bears, some people like, you know, indexes, some people like individual stocks, but it doesn't matter. Everybody's trying to take an active control of their portfolio, and we can all learn from each other. Like, we can all learn from each other, and it's like trading. Especially, you know, when you're super active, it can be very lonely and very isolating. And so, man, I would strongly encourage you guys to find people that you just, you know, jive with on the internet, which, you know, will you jive with them in real life? Maybe, maybe not. But you may never have to, right? You got Orgdenyus in Italy. You got somebody else in Arkansas. They're very, very similar. They already have a lot in common. And so if they come together, you know, it might be all good, man. They might be able to kind of learn some things from each other. But anyway, I digress. And so let's see, Mr. Pillows. Let's see. You guys are talking about some gold miners. Mr. Pillow says he hasn't been to the mall in months. Man, I don't think I'd been in years. It's been a couple of years, I think, and I was very surprised at how busy it was. Grumpy Mike says, I wish it was 1994. Life was better then. I kind of feel the same way, but I think it's just nostalgia, Grumpy Mike. I think that you and me both, which I think you're a little older than me, if I'm not mistaken. Not much, but a little bit. And so I think every generation is like this. It was so much simpler back in my day. It was so much this back in my day. And it's like, I think it's better now. And Josh says it was definitely better in 94. Yeah, maybe so. But that, I think Josh was like walking and stuff in 1994. So he's got a valid reason. But the rest of us, we don't have a good reason. But he's laughing, but I think you were, if I'm not mistaken. And so let's see. Dan Ducarn, let's see, laid back. Oh, there we go. With my mind on my money. Yeah, now you're taking me back. That's gin and juice, right? Yeah, there you go. Oh, yeah, you said it. Sipping on the gin and juice. There you go. Let's see. Where we at? Saturday night, buy some silver. Sell gold, buy silver. Nah, I'm not going to do that. Because that's what Josh is doing, I think. Right? And so, no. Josh is doing the opposite of that. Yeah, so that's what we need to do. We need to sell gold and buy silver. I like that a lot. And so let's see, Mr. Pillows, let's see. Scramble everything. Says there he is, getting the gotchas and waiting for the Dr. Jim gimmies. You normally get gotchas though. Like you want the gimmies, and I'm trying to give you the gimmies, but everybody just gets blasted with some gotchas, right? That's just a typical, Dr. Jim power 3/4 of an hour. Like that's generally what we're up against here for this 2:30 to 3:15 time slot. Well, let's see where we at. Let's see. Buy the miners, profits with historical low oil is the key. Yeah, that might be right. Where are we at? I'm trying to find. We've only got a couple minutes to go. Man, that was fast. Wow, we've only got like a minute left. Let me try to surprise and delay somebody at the end. Where are we at? Oh, here we go. Scramble everything. Thank you, Scramble everything. Is it 233 months in a row? That sounds about right. I mean, it's a big number. Obviously, it's a very, very impressive number. If I don't mind patting myself on the back. 233, that sounds about right. Man, that's a lot of months. We haven't missed a single one. Not a single one. Now, we've made up some rules along the way. We've been a little fast and loose with, most of the time at Starbucks, but sometimes it might be a little local coffee shop. Hey, it's our game. We can make up the rules as we go. Sometimes I'm like traveling for work and arms at home, and so we just do a little FaceTime deal. But again, it's our game, so we'll do it however we want. But yeah, 233. Wow, that's a lot, man. That's a whole lot. And so let's see where we at. Let me try to find one more. Oh, scramble. Well, hold on. Where are we at? Can I find one? Well, Jared Kramer says looks like the Condor on SPX was the play today. Darn it. Apparently so, but man, what a wild ride, man. That's the thing. I mean, when you're selling this 0 GT premium, I mean, the research team has looked at this a number of ways, and so they've given you a pretty good, guide, a pretty good reference point for how to handle those types of things. But man, you've got to be ready for rides like this one. Like you 100% have to be ready for rides like this one, especially when the VIX is at 19, 20, 21. I mean, I know it's only 18 or 17 now, but it was just at 19, 20, 21 just recently, and it might be back there today. Like you just never know. We're just one tweet away. Man, we are just one tweet away. It could happen at any moment. But guys, I'm done. I can't believe it. I am done. I cannot believe it. I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with forex, now available on tastytrade. Get in on over 80 forex pairs, 24 hours a day, 5 days a week, with the forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Step into the futures arena with Tasty Trade's active trader. multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Okay.
Hey everybody, happy December, good to be back. It's only been a week since I've done this, but I always feel so rusty if I miss a day or two. It's been a full week, but I'm glad to be in front of the camera again, and I hope you had a good Thanksgiving. I certainly did. Well, we've only got 3 full weeks left in trading, and what I mean is sort of uninterrupted weeks. The 4th week will have Christmas, and the 5th week will be a partial week with New Year's, so not much time left. It's a really interesting day. It's a pretty red day, not as red as we started. We bottomed not long after the opening bell, and it's been kind of fighting its way back, but we're still red across the board with the equities. And I haven't screwed up too badly today, and we can kind of thumb through charts and we can reflect upon that. But really like how things are going. So let's catch up, because the markets have been in motion since you and I have been looking at each other. We begin with a spider, and it's funny because over the past month or two, I've written, on occasion, we have got to fall the next trading day. You know, it's sort of I don't like to go out on a limb like that, because if we don't, then it's like all hope is lost. But there have been occasions, and last Friday was one of them, when I said we've really got to fall on Monday today. Mercifully, we have. And so what that means is that the breakdown is still intact, because what we've got here is this is the lifetime high. Then we've got a lower high, and we've got another lower high. Because last week was just like bang, 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 just green all the way up. It's just raging higher. And, Santa Claus rally and all the cliches and all the tropes that get trotted out. And we closed at the high, at its high on Friday, very close to it, but it didn't quite bust this level here. We still had a lower high in place, barely. And that has stayed intact. Because yes, today's bar is green, which doesn't mean it's up. It just means that we're higher than the open. But we've still got that sequence intact, which is good. The diamonds have an interesting shape of their own, because we've got our wedge pattern here, and we went exploding thousands of points higher, but we did not pierce that broken pattern again. So we still have a clean broken wedge on our hands. In fact, I was wondering, do we still have our wedge on the spider? Yeah, but it's so deep in the rearview mirror that I'm not even talking about it anymore, so that's fine. The small caps also broke their uptrend a while back, and in this instance, it's a little murkier. What this line represents is simply the peak from last year. So this line has been a repeat visitor. This is approximately the lifetime high here. And we beat that by a little bit right here, but it's roughly the same amount. And then we beat it more than a little bit for a while here, for a week or two, and we are above that level now. So we've been just flopping all over the place, but we exploded higher last week, and we've undone pretty much Friday and Thursday's lift, and we're approaching that line again. The line's not particularly important as a support and resistance level at all. It's just kind of a marker for where those prior highs had been. The cubes have also retained the series of lower highs. So this was the lifetime high, here was the lower high, and the lower high. And what that means is simply, keep in mind, out of 1 million people, there's like one bear, and everybody else is buying. And so you have to watch all those buyers, and how much strength do they have? How much power do they have to lift the market up again? And if all they can manage with each thrust higher is a level less than the one before, you get sort of this bouncing ball effect down, descending. It's the very definition of a downtrend. When with all that 999,999 versus one guy, if all they can muster is to make a lower high, it shows the internal strength of the market just can't cut it anymore. Whereas beforehand, when we were doing this shtick, it was just endless, and there's no telling how high it would go. So for the moment, we have our little downtrend in place. The other sort of quirk I've noticed is that the really garbage stuff, the junk, the stuff that just did nothing but go down, even that junk had a lift last week. That's how desperate people were to buy anything that would give them some outsized returns. And so, we look at like BLSH, which is bullish is the company, and they're down today. Then we have Bull. They're down today. All these were up like crazy last week. They were trying to recover from like being down 95% to being down only 93%. But that is waning because people are realizing, oh wait, these are garbage stocks. I'd rather not have them. Here's another one, Circle Internet, CRCL. This was the, remember all the hoo-ha about stable coins. And the hoo-ha lasted a while, as you can see. But we essentially did a full unwinding of those gains. So we had this tremendous lift here, and then over a long period of time that just zeroed it out. And last week, got a bit of a bump. But again, today it's down, these are all down 4 or 5%. So they're undoing some of those gains from last week. And I think this is just illustrative of the change in the environment because the zeal is gone from this stuff. Their wretched performance is not unknown to people. And if a few days of gains crackle and dissipate, people are like, oh, forget it, and they just turn their back on it. Here's another good example, DFDV. This was one I'd pointed out as having this sensational right triangle pattern here, because this is DeFi development, so blasted higher. This is all part of the crypto craze. And then it peaked here and then began hammering out this, in retrospect, beautiful right triangle pattern, which finally cracked on this day. I mean, the moment it slipped a penny below that, it's like, it's all over. Sometimes it'll fall and then retrace and just try to clamber back to the other side and fail and fall away. This time it couldn't even manage that. It just fell and fell and fell and fell and fell. And last week, for whatever reason, the whole Thanksgiving bullishness shtick, it was zipped higher, and then that's unwinding. Well, yeah, it's down 12.5% today alone. So these long-term patterns have more strength than like the whole, turkey and stuffing zealotry. And our old friend DJT, this is the Truth Social company, Trump Media and Technology. And this went bottomed back here on the 21st, and then up, 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 up. And then today, now that we're in a new month, down over 4%, and as you can see, long term, not doing so great. So that's just part of the zeitgeist I'm seeing out there. But much bigger than the likes of DJT and such is, of course, the king of crypto, Bitcoin. And Bitcoin is an interesting critter. It has, in a very short amount of time, lost a lot of value because this peaked on October 6th it was approaching $130,000 coin. And it, as you can see, fell precipitously. But as with stocks last week, it had this big bottom right here. It throttled down to around 80,000. These big round numbers are very psychologically important. So it got down to around 80,000 and then started to rally. And I wrote a lot about this. My supposition and my target was maybe it'll get back to 98,000. And if it gets back to 98,000, then anything with a ticker symbol, just short it. And it started climbing thousands of dollars. So it climbed, 80, 81, 2, 3, 4, 5, 6, 7, 8, 9, 91, 2, 3. And then it pooped out. And it pooped out just this weekend at around 93,000 or so. And I actually wrote a piece about what if BTC poops out? And that's exactly what it did, because it couldn't even manage to get to 98,000. And of course, Tom Lee's scurrying around talking about $200,000 and all that. Because these crypto guys, if we get a sell-off, they desperately want the thing to go up. And so they'll talk about buy the dip, 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 as people are getting wiped out all the way down. And so when it went from 80 to 93, naturally, it's like, you see, told you. And then just in a span of hours, it unwinds a week's worth of gains. My guess is that this is going to be approaching 70,000 soon enough, maybe this month. 75,000 or so is a really interesting figure, because that's about the average cost for the tens of billions of dollars of Bitcoin that Michael Saylor has bought for strategy. And things get interesting then. I don't trade this stuff, but it's really, really important to the psyche of the market. Because if Bitcoin goes to, I'll just throw out a number, 50,000, a lot of people are going to be freaking out. I'm not making any long-term projections about where it's going, but I think that, the lower 70s is pretty likely in the next, 2 months. But it could be tomorrow, for all I know. And of course, hand in hand with this is strategy, which really should change its ticker symbol, because it was MicroStrategy for a quarter of a century. And so but anyway, there it is. A lot of chatter about this. At the moment, it looks really oversold. This is a very, very nice hammer going on right like so. But there's a lot of talk about the financial house of cards that's been constructed with this company, and how absolutely dependent it is upon Bitcoin for whatever reason, flying higher. That's an interesting thing to watch. Over in the land of things you can actually hold, precious metals, those have been doing better. Silver is just setting the world on fire. Here's SLV, another lifetime high. It's just doing great. Gold, by way of GLD, is up, but not quite setting the world on fire, because unlike silver, it's not at lifetime highs. And unlike silver, it's actually facing a bit of a challenge here with this gap. It's got to beat that gap in order to kind of let loose. I'm a little skeptical at the moment of its ability to do so. I've got a medium-sized short position on GLD as of today. And of course, if it crosses that gap, I'll be out of there in a shot. You can see also, by way of OUNZ, which is another gold ETF, same gap, like so. Early today, because I had been long palladium and had a good week last week, I scurried out of this early today because this range really scares me. PALL has been banging around this range for weeks. Bang, 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 bang. And we got quite close to the top of the range today. And between that and the fact that GLD looked like it was facing the gap, and the fact that silver's just been on a tear, I decided to take my profits and get on out of there. And I'm glad I did, because palladium went from like being up $50 to down $40 or something along those lines. So had a pretty big reversal. I've also shorted some GDX by way of buying dust. That's kind of a clumsy way to put it, but I bought dust in order to take a bearish position against miners. I don't have a GDX position at all. Another kind of funny short I've got right now is Oscar, OSCR. And this was a weird one because the reason I shorted this, that's dreadful, let's get rid of that, was that not only did it fail this otherwise really nice bullish pattern, but after it fell, it clambered higher. And so last week, I don't know if it was Thursday or Friday, I think it was Thursday, I shorted it. And it's kind of hard to explain, but I guess the best I can do is to say that having failed so dramatically this pattern and having attempted to lift itself up, I figured that's about all the gas it's got. And so go ahead and short it, and that's working out okay. So today alone it's down about 6 1/3%. I suspect plenty more droopage to come. Just some other odds. I've got a lot of shorts. I've got 28 different short positions, but Arista is another, ANET. This is one here. BDN, Brandywine, is another, which seems odd to be short considering it's already lost almost all its value, but I think it's got lower prices to come. And I've also taken a position against the quantum craze on Friday. I shorted IonQ. And that's down nicely today too, 3.55%. One last short here, Vistra, VST, which is down not quite 3% and has a really good looking top. But I've actually done better with one long than I have with all these other little scattered shorts today, which is our friend Rivian, RIVN. And Rivian, as you can see, this is our like 6th green bar in a row. And I like the fact that it's up about 3% today, even with all the equity futures down and the market in general very weak. It's iffy because Rivian has been a trickster time and again. It is based and then flopped. And for whatever crazy reason, I'm thinking maybe it'll be different this time, to use those scary words. And that'll finally get his act together and rally. But it's so far so good. I bought this this hammer right here. I bought it on this day. And I've actually got one portfolio completely dedicated to this one long position. And it's like I say, so far so good. And I've tightened up the stop loss quite a lot, just where that line is. So even if it does flop, I'll at least get some kind of profit out of it. But just to say goodbye, we'll let Ethereum be our swan song. It's looking pretty ugly in crypto land, and we'll see if that speaks to the equity market as well. Anyway, as I said, good to be back. Thanks for joining me, and I will see you here tomorrow. Bye-bye.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click, from micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University, #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago, #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign, #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, we're back. How's your day going?
Fantastic, my friend. A little bit quiet coming out of the holiday. Guess that's not really that much of a surprise, though. It's good. You?
It's good. I'm glad you're good. Yeah, no, I'm doing well. And I'm glad to see you here on Last Call this Monday. It's an interesting market after the holidays. There's certainly some volume back here. S&P is north of 1.2 million contracts traded. So I guess money gained or lost does count here in this session. Crypto, though, is an absolute mess still. I think that's probably my first point of interest.
Yeah, I mean, there's no doubt that's the number one topic of today, which, you know, like you said, there is volume, but for the most part, it's kind of slow compared to the recent trading sessions, right? And yeah, I mean, crypto is, I think, the number one thing that everybody's keeping an eye on, whether it's actual Bitcoin or Ether or any other one of the smallers, or specifically MicroStrategies, I think is the biggest story of the day, right?
MicroStrategy, we have to talk about that in a few moments here. But before we do, let's just do a quick overview of these markets. S&P down by 0.4%, NASDAQ off by 0.3%. Your Russell's the big pain point in stocks, down 1.1% here. Bitcoin and Ethereum are doing no favors to anyone, down 6% and 9.7% respectively, as we see big sell orders make their way through. I was looking through the market here, Jamal, and looking for commentary on why crypto is going down so much. The top story on CoinDesk right now is that traders were surprised by the BOJ's comments and their intention to hike rates potentially later this month. I didn't realize Bitcoin and Ethereum traded on BOJ rate hike expectations.
Yeah, I know, right?
So it seems like it's a story that needs a little bit more there. Otherwise, though, in the world bonds, it's bad news for bonds today, taking a big hit as Kevin Hassett looks like he'll become the next Fed chair. His odds jumped in recent days from about 30% to close to 70% on Polymarket, which may be good news for gold and silver, Jamal, which gold up 0.45%, silver up still 2.7% here, despite coming off the highs above 59. And the dollar is rebounded and is still mixed, but up mostly across the board, save the yen here. You wanted to talk about MicroStrategy, though. I think that's a great place to start because they are looking pretty ugly here. Where to begin? Ball is yours.
I mean, look, it's the biggest story right now in the market, right? We know at least the story coming out today was that they created a strategic dollar reserve because there's all the worries about whether or not they're going to have to sell as Bitcoin goes lower and lower. I mean, we know that MicroStrategy has been buying Bitcoin hand over fist for years now. And a lot of people are worried that that's going to come back to bite them as the price continues to go lower. I think it does bear mentioning to say or repeat what you just said. It's hard to find any stories behind Bitcoin. And I'm not just saying that because I'm this massive Bitcoin bull. I mean, I'm just an opportunist when it comes to Bitcoin, honestly. I don't really have a strong opinion one way or the other, but I say that because there really hasn't been a story about the downturn more recently. There hasn't been some crypto exchange failing or some massive redemptions going on in crypto land like that I've seen. There really isn't a story. And so that's what I find interesting. And I, as a result of that, I find the MicroStrategy story interesting. Now, don't get me wrong. I thought all along it was kind of wild that they were buying so much Bitcoin and using it on their balance sheet. Nevertheless, the market didn't seem to really care when the stock was trading upwards of $400+. And now all of a sudden it does seem to care. So I've taken a long position. It's risk defined. It's something that I've been doing on a lot of different names recently, and MicroStrategy is no different. I sold put spread to buy a call spread. I actually did one in January, about a week and change ago. And then I added a new one last Friday, maybe, and in February. So I'm pushing that further out. Obviously, January and February, hopefully that gives it some time. But I'm short the 160, 150 put spread in both months, whether it's January or February. It's the same trade. I just did one in January, one in Feb. Short the 160, 150 put spread, and I'm long the 230, 240 call spread. Actually, 230, 245 call spread. So essentially, I just want to see if it can get back up to kind of that area where you can see the failure or the sort of the lows there where you're seeing around some of those moving averages. So we'll see what happens.
It's been a messy chart. There's no way to put it. Strategy CEO Feng Li clarified that the company would consider selling its Bitcoin holdings if the stock trades below its MNAV. MNAV is 1.16 right now. So if that falls below 1 and they exhaust all other funding options, would they consider doing so to keep the Bitcoin yield in check? Bitcoin yield seems like one of those funny metrics that have been made up recently. Either way, though, crypto is clearly still the albatross around this market's neck because all morning long, the stock market was fine. All night long, the stock market was fine until Bitcoin and crypto started selling off. So ETH down 9.5%, closing in on what would be the low close for November. Bitcoin off 5.92%. This would be the low close. Well, almost at the low close for November. So not looking too hot out there. But stocks, they weathered the storm a little bit today. They're off the low, 6,832 here in the S&P. It's still a 0.4% loss, but we did move off of 6,800. It feels like some of these markets are trying perhaps to stretch their legs a little bit more. What do you make of the 5 straight days of gains seemingly wiping out any concerns around the NVIDIA earnings?
I think it speaks to the market's ability to forget things quickly, honestly. And I also thought we were a little bit oversold. I'm also not surprised that we're pulling back today. I know I've seen multiple people tweet out the idea of the statistic that after 5 straight days up, especially during the week of Thanksgiving, usually we'll see a pullback on Monday. And this doesn't surprise me at all. Matter of fact, I was kind of hoping for it because I think at some point it does become a situation where people start thinking we're a little bit too bouncy after a little bit of the fear that we saw in the previous week. So I think it makes sense to see a little pullback today. But overall, you're right. Bitcoin has been the main thing that's weighing the market down. Outside of that, I just think it was a somewhat quiet day. I will say we are seeing a little bit of change on the correlation that we've seen more recently when you talk about stocks, particularly tech stocks and gold and gold and silver, if you want to say, and Bitcoin. We're seeing gold and silver outperform today, which I think is different than what we've seen over the last couple of weeks. And I think it's a good thing. So I did release some of my gold positions last Friday, but overall, I've been kind of like the last 3 trading sessions, Chris, I've kind of just been building cash here. I mean, my core positions right now are essentially what we call the Delta busters, short put spreads, long call spreads in Tesla, and SPYs, and Qs, Palantir, and Meta, and Microsoft. Those are my main longs. The only short that I have is an SPX, where essentially I did the reverse trade where I sold a call spread and bought a put spread. That put spread is basically at the 6,800 strike, 6,800, 6,890, which essentially was the lows of what we had today. And so, I got those longs in a few tech names and SPYs and Qs themselves, but you might want to say I have a small hedge, but more than anything, I'm just anticipating the market being higher in January come February, because that's where my longs are.
Jamal, before we take a quick pause here, just a quick note from Frank. Volumes right now, SPY over 9 million, Q is about 5 million, SPX about 4 million. SPOOs have obviously cleared 1 million here, now north of 1.2 at the start of the show. Tesla, though, less than 1.5 million, and NVIDIA about 2. So nothing really standing out in terms of the options market volume. But if you go over to futures and you think about silver's obviously had an astounding few-day run here, surging from near 51 up to north of 59 at a point today. Almost 8,000 silver futures options with calls exceeding puts 2-to-1. This is 5 times the average right now. What's going on in the silver market and gold? Why isn't gold performing like this? And more importantly, why is silver going bonkers?
Shit, I thought you were going to tell me. I mean, this is your game. You tell me. I was going to ask you. I'm curious. I mean, are you still loving silver up here? Or is it a little too much in the nosebleeds? Because this is your area for sure.
Oh yeah, if I liked it at 52, why wouldn't I like it at 59? Right? I like things that go from bottom left to top, right? The disconnect of the last few days, though, I mean, I can't see a rhyme or reason or rationale, although this talk of Kevin Hassett potentially becoming the Fed chair. He's a guy who's close to Trump. He was there in Trump 1.0. He's now going to be Fed chair. You're going to get lower rates. Treasury market probably doesn't like it, which maybe that's why we're seeing what we're seeing today.
When you say disconnect, you mean between gold and silver in the market, or you're just saying which one? Which disconnect?
Like silver's had this huge 3-day run where it's up like 10%. Gold is not doing that.
I mean, silver is the little brother, right? We've seen a little bit of outperformance at times like this. That part doesn't surprise me, I would say. I think more than anything, the question is it a little overextended, honestly? If I could find the right short trade for the medium term, I would definitely take one. I just can't really seem to find it. I tried, and I haven't been able to find the best way that I want to do it. Because look, it could continue to go for another $3, right? When we see silver do this, it can definitely punch up a bit higher before having the strong turnaround. I mean, truthfully, this is kind of the move that we saw back in early October, or I should say maybe the beginning of that move that we saw in early October for gold, right? When we saw gold making this strong move. It's kind of looking the same. If we came in tomorrow and this thing is up to 62, I wouldn't be necessarily surprised. And honestly, at that point, maybe I jump straight into a short SIL contract. But right now, I don't really think it warrants it. Despite these big 3 moves, I honestly could see silver going another $3 to $4 before we get the turnaround. And I really don't want to get in front of that.
Yeah, I mean, silver tomorrow, if it's at 62 or if it's at 56, I mean, I wouldn't be surprised either way. So still hanging on long right now. Got to love the fact that silver vol is expanding as the market's breaking out. That's been a very positive development. Telltale sign that it's a strong underlying market. Maybe this is a tail wagging the dog situation because of the options activity. Maybe not. Either way, though, gold, silver, and even at a point today, you had copper, which had moved up through 535. It's off now since back down to 527. But you can see the metals, they're getting a little perky up here again. They're getting perky and the dollar's pulling back and stocks are going up and yields are higher. That feels a reflation, liquidity, reckless monetary policy perhaps coming in to people's purview. I don't know, Jamal, but I do know is that we still have this interesting refer a friend promo for some folks. Production team, you could pull that up on the screen here before we finish up this Monday edition of Last Call. When a referred customer opens a new account and funds it with a $2,000 or more initial deposit using a friend's referral code, both the referrer and referee receive a $100 bonus. That's nice, Jamal. Go to tastytrade.com. Go to tastytrade.com/referral for more information and get a $100 bonus when your friends join. For each of you, Jamal, can I recommend you?
Yeah.
Are we allowed to do that?
Well, I think I already have an account, so I don't know if that works.
All right. Well, we'll figure out other ways to make money around here. Like natural gas, oil. I mean, what's your take on these markets today? How have they been treating you? I see oil's up 1.67%. You have some interesting headlines. Volatility still in the 20 IVR. Energy stocks are doing a little bit better today. Surely you have a view on that sector overall at this point.
Yeah, crude is still the total best candidate for the iron condor trade. You haven't been able to. You've also been able to play it directionally if you want to. I missed out on that opportunity going back to late last week, but it's definitely still the candidate for the iron condor. So is nat gas, actually, although I took mine off. It actually came in enough where I decided to close out my iron condor. So like I said, it's been more of raising capital here. I just wonder what's on the other side of this meeting. Again, we got the meeting in about, a little under 9 days time at this point. And so I'm looking forward to maybe, things picking up a little bit again. I mean, usually when we come out of these holidays, somewhat slow, right? You get to the Monday after a big holiday. And so I didn't expect a whole lot of trading activity today. Volatility came in a little bit today. It seems to be a little bit perky towards the end of the day, but still we saw it as low as 18 in the front month for the VIX. So things being low, you can imagine there's going to be kind of that trading activity all across the landscape. But like you said, oil and gas and that gas have still seen some perkiness here today, and I'm here for it. But no trades in those as of now.
Westwater's been pushing me on a long natural gas position, which over the past 3 days has worked out really well.
Really?
Chart looks kind of nice if we want to be ticker agnostic about it. Resistance becomes support, and we just cycled up into a new high relative to the previous high that we carved out in November. What's not to like there? Oil, lots of these headlines today, though, Jamal. I mean, the volatility, it feels like, is a little out of touch with the geopolitical environment, from everything we're hearing, Russia, Ukraine, to whatever's going on in Venezuela. I know last week I was prattling on about this in, variety of mediums, but then over the weekend, Trump said that we're declaring, closed airspace over Venezuela, which is like one of those things you do prior to launching an attack. So I'm still leaning a little bit long delta here in crude. Is there anything there that we need to be worried about? Like, this feels like a risk that the market may be underpricing still.
It's hard to say, Chris. Honestly, I don't know if it's going to react. I mean, it's you would imagine it would have already reacted if it was going to. I think something actually has to happen. Not that you want to see any of that, but I think something actually has to happen before we're going to see sort of a move to the upside for geopolitical risk reasons. Other than that, I think it's perfectly priced. And I think for that reason, oil has just been in a lower channel compared to 6-9 months ago, a year ago. I mean, it's definitely been in that lower channel range. And to be honest with you, it's been fairly quiet. So it really hasn't caught my attention as much for that reason. And you wonder if it's heading towards a new lower range, right? It seemed like it was headed that way at the end of October, early November. It seemed like for sure we were going to be talking about oil in the 55, 56 range. Well, now it's starting to leak that way again with these lower highs. And so I do think at some point oil is going to be in the 56 to 55 range.
We have less than 10 minutes here. going through the high options volume watch list today, Jamal, NVIDIA sticks out, Tesla sticks out. Obviously, you have names like SLV and IBIT, given the moves of Bitcoin and silver. But these are all tech-heavy names at the top. Intel, Meta, Apple, Google, MicroStrategy. It's all Mag 7. Mag 7 here has been under a lot of pressure, but the NASDAQ has been recovering. And I can't help but notice that on a day like today, semiconductors are trying to get back into their uptrend from the April and September lows. What's the story that we have to watch for the month of December for stocks? Is it that this is a resilient market where we are shrugging off whatever's coming out of DC and whatever's happening in the economy? Is it a market where we don't care about any of that at all? Google versus NVIDIA world. I mean, what's the driver right now for this market?
I think the driver is, how ingrained, truthfully, how ingrained a lot of these stocks that we refer to, these big companies, the NVIDIAs of the world, OpenAI, which isn't even public yet, how ingrained are they in our society? And I don't just mean the US society, I mean the global society. I think that's the real take-home message here. And as much as people may be calling for the downfall of a lot of these stocks, I think they have to realize what that really entails. I looked up something earlier about NVIDIA. I mean, because I feel like every day I wake up, I'm seeing a new way that NVIDIA is finding ways to spend money or shift money around. Same thing with OpenAI. And so I think you just have to be aware of how many companies that these companies own. How many different things are they embedded in? NVIDIA today, I'm blanking. Was it NVIDIA or OpenAI? I'm starting to think of them as the same thing for whatever reason. But who was the one that did a deal with Synopsys, SNPS? One of them did a deal with them today. And NVIDIA did. And then, that's right. And then OpenAI did a little partnership with Accenture, right? And so you're just seeing more and more of that every day. And so for those who at some point or another, if the cult-like following of NVIDIA starts to shift, starts to change, if people really do start to believe that it's something like Enron, I don't believe so, but I've seen these headlines. If you start to believe those type of things and it does lead to a failure in these stocks, look, it's not just going to take down those stocks. It's going to take down way more than that. So just be aware of that. But I think those are just headlines, honestly. In the meantime, I think those are still the things that are ruling the market. You just mentioned it. You talked about volume. I mean, you can't talk about daily volume without incorporating NVIDIA and Tesla, let alone some of the other names, AVGOs of the world, AMDs. And so I think they're still the most important stocks. And as a result, those are the stocks that I want to be in. That's where the volume is.
Two funny stories. Accenture, it told its 800,000 employees over the weekend that they are no longer considered employees, but in the age of AI, they are now called reinventors.
Is that like contractors or what?
The other thing is, as ASML here charges up into a new high, there's a funny rumor going around on Twitter right now that ASML canceled its Christmas party this year, which it must be a bearish sign, of course.
It usually is.
No one got the memo apparently today. Stock's going to close up at a new all-time high. Jamal.
Cost savings, Chris. You're canceling the Christmas parties, cost savings.
Oh my, think about all the money that they could send back to shareholders, right?
Yeah.
Right. You mentioned Accenture though earlier in today. This has been a stock that's really beaten down off the highs that it had this year. We just crossed through 250 again. This is a stock had a high of 398. Is there any bottom fishing? Do you have any stocks on your Christmas wish list, Jamal, that you want to go fishing in that feel like they're undervalued and could catch a bid here in the final few weeks of the year?
Maybe Netflix is one of the few that come to mind. Honestly, outside of that, there's not too many. Netflix is I thought, it did not do what I thought it was going to do ahead of the split. I'm sure I'm not the only one, but it's having a nice little rebound today. But it does seem to be on near-term lows, and so that's one that I'm keeping an eye on. I have no interest in chasing it here. I mean, I want to see if it goes lower and maybe breaches new lows. But if it doesn't, all well and fine. But this is really the only one that I have on the list that I can think of at the moment.
There are some names that, Elko is up now year to date. It's been a long drawdown. Some of the home builder names, we could go over it. I just think first off, we'll go to X.
I know, but I need
XHB.
like the impending catalyst and things like that. Like I could definitely make a story for home builders because they've been so underappreciated for a while. But I need the catalyst, especially the way that I trade options. Otherwise, it's just going to bleed out. You know what I mean?
Yeah. I'm looking through my list here and like some of these names.
But I think it's important, to your point, I think it's important to make a list. Keep that list handy for when you get the signals for when things are happening. Because right now, I mean, like this is a perfect example. This Airbnb, this thing could trade sideways for who knows how long, another 2 months or whatever, right? Especially that's pretty tough for those of us who trade in the 45 to 50 something day window.
Yeah, it is. The one thing that does have me going, because I look at some of these names that are down year to date or just climbing out of the hole, like a Home Depot, a UNH, for example. Some of these are consumer facing. Some of them aren't, marred by scandal or otherwise. But there's a lot of companies here that feel like they're a little bit more defensive or cyclical. They should be a little bit more resilient, right? Staples, if you will.
This one for sure.
Staples have been beaten down. Costco. Why are you not doing great this year?
Yeah, especially since I just went there this weekend and spent $700.
Oh, well, look at you. But like a Verizon, Texas Instruments. There's some names here that if the fundamentals are there, right, and there's a narrative that can lift up this market, even the dogs are going to have their day. And one might surmise that there's a little bit more upside convexity in a name that's down year to date in the final few weeks than an NVIDIA or a Broadcom, what have you, Jamal. So like one of my exercises this week right now is finalizing my shopping list for if I get the trade setups I want and I get the volatility that I see in the market, let's roll the dice on the end of the year. Let's place some trades that would comport with a market that looks like it wants to go higher. Not last week, but the week prior, that Thursday, we checked those 3 boxes. We had our seasonality for volatility in the market, high point of the rest of the year for vol, low point for the rest of the year for stocks. And since then, the stock market has been up. We had the gap, 1.5% gap in reversal, which last occurred at the April lows. We had the VIX spread, which blew out to levels that we didn't see since the April lows. So that the trappings of a bottom were coming together. Now what's next? We've had the nice rebound. We've made it back to within 2% of the all-time highs. This is a market that probably needs to see a little bit more rotation. One would say that they're disappointed. Then I would say that I'm disappointed then with how the market's shaken out today, because earlier you had a QQEW and RSP, the equal weighted indexes. Those were leading the market cap weighted ones. And it's just been a deterioration over the course of today. So not feeling great about Monday's action outside of silver. This week, Jamal, what's the number one thing you're watching for? Earnings, Fed officials, otherwise?
Powell speaks tonight? When is that? Tomorrow?
Yeah. They're in a black. Are they going to do anything on monetary policy in a blackout window?
Probably.
So
I'm grasping for straws here on Catalyst, Chris.
Well, Josh pointed out that there's a few earnings coming up this week. Did he do that? I thought he did that. Doesn't really matter. Macy's. Did you trade Macy's earnings? I don't think so. Anyway, we have more to discuss. Ilya, Bradigan, they're up next. It's time for overtime. Thanks, Jamal. Catch you in a bit.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
Global markets never sleep. Explore them with forex. Now available on tastytrade. Get in on over 80 forex pairs. 24 hours a day, 5 days a week. With the forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Stocks just still Monday, December 1st, 2025. This is Overtime. I'm your host, Chris Vecchio in New York. He's Ilya Spivak in San Francisco. Here to take you through the next 25 minutes as we get ready to wind down this trading session. Good day for stocks, and then not so much where they fade off in the second half of the session. Ultimately, it's crypto that draws everyone's attention, with Bitcoin down more than 5.5%, Ethereum off 9% still in today's session, a really bad day overall. Concerns over MicroStrategy potentially having to sell Bitcoin in order to be able to pay out their dividends moving forward. Is that the number one thing to watch this month of December? Perhaps. Otherwise, Fed Chair Kevin Hassett, that has a nice ring to it. He's the front runner according to Polymarket, following comments from President Trump over the weekend saying that his mind has been made up. Polymarket no longer seeing that no decision made by December 31st as the most likely outcome. And so gold, silver have pretty decent days. Treasuries suffer. Yields are up. Ilya, start of a fresh week. Volumes are strong. Participation is running high. 1.4 million SPOOs go across the board. What do we make of this on the other side of the holiday here as we wind down this calendar year now?
I think that was kind of a bit of a reset last week. So if we look at what the benchmark assets are showing us, obviously there was a massive risk rally last week. Obviously the dollar pulled back heartily against that backdrop, but it makes you wonder that you didn't cross any Rubicons ultimately, and that all you did really was you reset the preceding sell-off. And that's across whichever benchmark you want to look at. I mean, S&P here is stuck at its former high, just around 6,900, the place from whence it started to fall at the beginning of November. So the whole, euro is a great benchmark for what the dollar is doing. If we take a look at what the euro is doing, we can see the candle today is ugly. The situation in the yen is obviously its own. It continues to strengthen here a little bit. I'm actually a little bit long yen now as of last week. It's my only anti-dollar exposure. But the rest of it really looks like last week was kind of a reset before the holiday, where everybody just said, you know what, we just had a crazy first half of November. Let's not go into the holiday loaded up with any kind of exposure on the short side or any side. Let's just even out. And the way that you see this starting this week, especially with the opening gap immediately out the gate this week, and stocks' inability to erase that gap ultimately. We get the gap over the course of the day. We close the gap, and now we're closing underwater after that effort. That's the most we can do. It doesn't bode well, and seems to, in my mind, keep alive this idea that we're going to be on pins and needles ahead of next week's Fed meeting. I think looking at crypto, kind of as you were alluding to, gives you that idea. Crypto, as a barometer of risk sentiment, looks god awful.
Yeah, something doesn't look right there. I was mentioned this on last call earlier, that we were searching for a narrative. Why is Bitcoin, Ethereum, why is crypto struggling so much today? I thought it was supposed to be like up December or something, as folks
whatever
anyhow
call it, yes.
CoinDesk, their article regarding the state of the Bitcoin market right now, when they pointed out that BTC dropped below 84K, the quote they had in there from a market professional was, the BOJ's rate hike talk last night spooked traders, which to me was a bit of a surprise because I can't recall the last time that crypto dumped 10% on BOJ rate hike fears, unless this goes back to like August 2024 when we had the carry trade unwind. Maybe feels like a reach, but that was more like a knock-on effect for risk assets. Anyway, what did the BOJ say last night? Are they setting us up for another December meeting where there's thin liquidity, it's holiday conditions, American traders aren't paying attention, so they do something to reset the board? They have done that before, even if they didn't do it. Even if they didn't intervene over Thanksgiving.
They have. This is an interesting spot because it seems like the yen has started to strengthen a little bit after that aggressive sell-off. And the BOJ is, over the years, managed to kind of get religion on how you intervene effectively. And after years of fighting markets, they've learned that you don't do that. You let the markets kind of wash over you, let them become exhausted of themselves, and then kick them while they're down. So this is the kind of thing, to your point, exactly where the BOJ might not so much intervene of their own accord, but they are an instrument of the Ministry of Finance in this sense. And if the Ministry of Finance wanted to say, you know what, this is the place where you intervene, that would be very much par for the course. The yen has started to strengthen a little bit. The pressure is off. This would be the place for them to go, you know what, let's yank the yen sharply higher. And let's let everybody know. I would be careful here reading into the BOJ tea leaves because they're not really in charge here in the strictest sense. That would be a Ministry of Finance call. And I think it would be very difficult for Governor Ueda, unless, of course, he wants to gamble his job, to go in the teeth of the new prime minister and hike rates, because we know she's opposed. So, but the talk is surely helpful. And there's probably a conversation, or certainly it's reasonable to think there could be a conversation being had between the Ministry of Finance and the BOJ saying, hey, listen, you go out there, get the ground soft, say some things, get them spooked. That's when the Ministry of Finance gives the go-ahead and we kick them. And I'm a little bit long yen at this point, as I was saying, kind of expecting that something's going to happen here. Not necessarily intervention, but something's got to give. This move seems to have run out of steam, at least near term. We'll see, of course. So I don't think they're really primed to hike in actuality.
Yeah, is this a broader dollar problem right now, though? Because it looks like the dollar is pretty weak. It, you know, I know the Canadian dollar, the pound, the euro, they all turned off their highs versus the greenback today.
Everything's turned, yeah.
This isn't exactly the most appealing chart in the world. I mean, we do break below the uptrend. We have a nice long wick there at a place where we found support near 99.
Yeah. It seems to me this is more like a risk conversation. Last week, we had a real big risk on week, and the dollar weakened accordingly. We saw bonds rally. It seemed like everybody kind of unwound, oh no, the Fed may not do all the dovish things we want idea last week. It seemed like if the fear really from late October onward that's been animating markets is, oh no, the Fed won't do what we want after Powell essentially rug pulled everyone after that FOMC meeting.
Mm-hmm.
If that was the animating thing, and it really seemed to be the animating thing because any other version of news flow, be it earnings or whatever, really didn't make a dent. Nobody cared. It was that story. And so if that was it, then last week was not that. Across assets, metals rallied, dollars sold off, yields came up, risk was on. It was a kind of broad-based, whatever we've been afraid of since October, unwind that.
Mm-hmm.
And today it looks like we've stopped that unwind because liquidity is coming back and the market is going, wait, but actually.
Talk to me a little bit about gold and silver here today. Silver had another really strong day across $59 an ounce in the futures market earlier. It closed
surging.
At 47.
Man, am I glad I followed you into this thing. Woo!
Why silver? Why the past three sessions? I mean, we bought silver thinking that this is a bullish falling wedge, and bullish falling wedges, what do? They return to the base. So looking at 55 calls, that makes sense. But now at 58.47 here after hours, this is an enormous 3-day run.
It is.
Why silver? Why silver when Bitcoin's falling apart, when gold isn't rallying so strong, when the dollar's not getting crushed? No. Why silver?
It's a good question because it's not as though it is a very risk-on day. Now, before today, you could make the argument, well, look, it's been really aggressively risk-on. So, of course, last week it made sense that silver outperformed gold. Risk was very much rocketing. Why silver today? I don't think that it's entirely clear. And I think when you look at the disconnect between silver and Bitcoin in particular, and you go, wait a second, both of these are kind of higher beta risk barometers to some extent, or risk barometers in any case. Mm-hmm. Higher beta, lower beta, that's debatable. But in any case, both of them end up being, to some extent, barometers of sentiment. Sure. And they're telling you very different things today. Now, maybe silver was flattered to some extent, but it's unclear what it was that flattered it as relative to gold, which had an okay day, but not like silver.
It was an okay day. Yeah. Silver, I peeled off half my position. I was at 22 DTE. There's no reason to keep it on.
I peeled off half my Bitcoin position today.
That was something that we were doing. Was it Market Measure the other day? Tony and I on Wednesday morning, and three of the trades that people pitched were AMD, Costco, and IBIT. And I said, I kind of like all those. The Costco one is working out. The AMD one is working out. The IBIT one is not so much right now, but net between the three, they're still doing fairly well. It feels like something is off in silver. I don't think it's a conspiracy. I know last Thursday night into Friday morning, Twitter was aflutter with the news that the CME futures were frozen, and therefore it was a inside job to prevent silver from breaking out. If that was the case, they failed because silver broke out. But either way, though, it's not normal.
No.
Right. So
no.
As for myself, like managing the position, got lucky. It looked like it was going to go higher. It went higher. It went higher than more than I thought in the faster period of time, taking up the position off the table. There's still enough time to expiry that if this thing pulls back, I add more. And it kind of feels like a market where you have your push up into 54, 55, you get a pullback. As you start to break the corrective move, all you do is look for a return back to the prior high. So if we get a pullback into the mid 55s here, we see some consolidation and then start to base again, look for a swing back towards 59.60. And we just keep trading the numbers in front of us as opposed to, I know a lot of people out there, I see it on Twitter, like, oh, silver shouldn't be here. I'm going to sell it at 60. For what reason?
Shouldn't be here according to who is always my retort. Like, markets should or shouldn't this or that according to who? Like
anything.
Yeah, like markets can go as high as they want or as low as they want and not a tick beyond that. And there's not a thing that anyone can say, including central banks and politicians. So I always get into these things with people that go, well, this is too expensive or this is too cheap, according to who and what?
Right. Which there's a really interesting, there's a really interesting article going around from Michael Green, Professor Plum on Twitter.
Yeah.
About the cost of living and how the real poverty line is around $140,000 a year. He's since issued a secondary follow-up to that, saying that maybe some of the math was off, but the point remains.
Yeah.
Which, I don't know.
Fair enough.
Maybe just if you make a point that's predicated on certain numbers being true and the numbers aren't true, then the point may not remain anymore.
Yes.
But certainly the sense of feeling
you're going to want to not do that. Yes.
Yeah. But the sense of feeling where, they say people in the middle class and even more than that feel like they're running on a treadmill just to stay above water, I think is very relatable for a lot of folks.
Sure.
One of the things that isn't hurting people right now would probably be the price of oil because it's still below $60, but it did come out of the weekend with a bit of a gap higher on news that the U.S., or at least President Trump, has declared the airspace above Venezuela to now be closed, which is effectively a blockade if that's actually happening, but it's effectively a blockade then of the economy.
Yeah.
Ilya, that's something that also happens en route to war. It's one of the
military
drumbeats of war.
action of some kind. Yes.
Are you thinking about this more? I mean, I have some long delta exposure in crude specifically for this very purpose because I'm just trying to read the tea leaves here.
Mm-hmm.
Is this a gray swan that could disrupt markets this year as we look to wind down 2025?
I suppose it's not impossible. I don't think that we have the kind of thing in crude here that has me terribly concerned about dislocation. I mean, if we take a look here, markets are still in a very kind of slow grinding descent here, going back to late October. So the trend is down narrowly. Venezuela is not exactly the world's biggest producer. Its output has been off market for the most part for a long time. In any case, it's been greatly diminished by awful mismanagement and all kinds of other things. But certainly it could be the kind of spook that the markets would find unwelcome. Now, if this is a Granada level situation, it need not be long lasting or complicated. But the likelihood that any kind of military engagement in the current charged environment is going to go over smoothly, even if it goes smoothly abroad, that it's going to go smoothly domestically, seems unlikely. I don't think that there are any tremendous economic consequences that would immediately arrive as a matter of course, but markets are jittery here.
That's the number one thing here when it comes to oil, right? I always hate minimizing the human cost in any of these conflicts, but the goal here for what we're trying to accomplish is to inform people for how a conflict like that could ultimately impact their wallets and their life savings, the portfolios that they're building up to pay for a home or kids' colleges. And so like, we don't want any of that disruption here. So
Sure.
obviously, concentration risk is something to be considerate of right now. You don't want to be too over levered in one thing because if the market does go sideways for a small window and you're close to expiration, you may find yourself flat out of luck. But the other thing is that, you know, Fox News is running stories like this. Trump gave Maduro ultimatum to flee Venezuela as land operations loom. This is from yesterday night. It just feels like something that we should have in our pocket. Gold,
I mean,
silver,
the signaling is
oil.
emphatic.
The military buildup, all of it's there right now. How far can it run, though? That to me is the ultimate question, because if I'm buying $65 calls, I think they're going to expire worthless. Venezuela adds maybe 1 million barrels per day to supply. Right. It's not like a Strait of Hormuz situation. It doesn't matter that they have 300 billion barrels of oil reserves beneath them because it's untapped and it's not part of the market right now. And there's no real plan to onboard that supply to the market anytime in the near future, which is why I would say, Ilya, that if this is another war for oil, which feels, you know, very nostalgic. It reminds me of my childhood when we went into Iraq. If this is another war
almost
for oil,
quaint.
Yeah. At least back then they were like, war for oil. Like, no way. That's a conspiracy.
We're going for geopolitical remaking reasons. No, we're going for oil. Well, none of them were blowing up random boats off the Caribbean coast.
No, but I bring that up because this time around, like Trump has said in the media, he said on like, oh, they have a lot of oil. It's like, okay, straightforward.
Yeah.
No ball under the cup this time. Well, if that's the case, I mean, just the prospect of significant supply disruption, as I've said last week, it just seems minimal. You probably get a pop on the headlines and then nothing more than that. So I think $2 or $3 in terms of structuring these hedges for everything else, because I could totally see a world, Ilya, where like stocks get slammed for a day or two on these war headlines. What does oil do? At 4 DTE, I'm long the 61.62. At 11 DTE, I need to get this in the next few days, but I'm thinking another 61.62, risking 1 to make 3, maybe getting a little bit better odds, going a little further out, maybe more like a 5 to 1. But having something like that in the pocket still makes a good deal of sense. So today those hedges are up a touch in a market that, for me, basically did nothing.
Yeah, I mean, I'm a little bit short from back a few weeks ago. It's not going great, but it's not going poorly either. It's kind of sitting. And so I'm just waiting. I'm just waiting to see. I mean, the worst case scenario here, since I'm in put verticals, is already locked in for me. So I'm just waiting.
I'm just thinking about what didn't work today. I mean, I suppose that's the bonds, and that's a good place to end. Just looking at my personal P&L on the follow account here. It's the bonds that took the biggest beating.
Yes.
So, Ilya, we're still above 116 in bonds. Yes. We're still above 112 in notes. And those have been the lines in the sand with which I've been operating. I think perhaps you have been too. Thinking about long delta trades here. Why did bonds get walloped today? And do you read into anything that this move lower has zero bearing on volatility whatsoever?
It seems to me...
IVR still below 10.
Yeah. I mean, it seems to me that what's going on here is, again, this sort of one-size-fits-all kind of a reset. So last week, the bonds were higher because Fed rate cut odds firmed up and it was risk on and metals were up and the dollar was down, and it was all kind of a type, the price action. And today we see reset. We see reset back to sort of where we were before that illustrious week. Now, it's not a reset in levels for S&P, certainly, but it's certainly or NASDAQ or the Russell, but it's certainly a reset in tone. It's a reset in tone in the dollar, as we just talked about. For the bonds, it's quite literally a reset in level. And we're going to have to see now. I'm fine staying long here at about these levels at the long end because I don't think we've cleared out any key levels. We're basically still in that range that you've got on the screen here in ZN. My reference point for what I have on with TLT is ZB, and it's the same story. You're in a range. You're not really going anywhere. So let's see. Let's see what happens. It's kind of a strange week this week because technically the Fed's supposed to be in blackout, but there's a Powell speech and a Bowman speech. Neither one is policy related, which I suppose is how they're doing that. But
yeah, they're not.
Typically, they don't speak at all.
No. There have been instances where they've talked. I can definitely recall that, but they will not. They're not going to stray.
It's possible, but they're not going to stray from any kind of scripting here.
No. They're not going to talk about monetary policy if they're asked even anything about the economy. Right? Like, how's the job market been? Oh, good. Oh, what does that mean for the Fed rate cut? Like, they're not going to, that's not the territory they're going in. Ilya, a quick trade idea out the door. I have my ZBZN exposure. You mentioned TLT. I see 88 maybe as a line in the sand over the past few months. Kind of feels like it was resistance, then support. Looks like 112 in ZN, 116 in ZB here. For people looking at potentially, you know what? I don't know if this thing's going to go up, but I don't think it's going to break 88. A short put spread on the other side of that right now, risking 3 to make 1 at a near 70% pop. Those are decent odds.
Yeah.
Right. The way that I structured it in ZN, obviously not working. In ZB, long calls not working. But other thing, the short put spread side of my double bull, that's still fine because we're still above 112. So like the structure here matters a lot. I think that's the way we have to lean, though, because the data that's coming out this week, the little that we have, maybe decelerating economy, maybe a little bit firmer inflation.
Maybe. It'll be interesting. I mean, the ISM numbers are out this week, and that'll be curious. I mean, we of course already got the manufacturing side, and it was not great.
Yeah. Speaking of not great one way or the other, I'm just looking at the P&L and the account change right now, down $20 today. So operating in about 19 different trades right now, and net it comes out to maybe 2 lattes at Starbucks, Ilya. So great, successful Monday here.
Yeah,
good job. We'll pack it in
for all of the rallying that the S&P did last week. I'm still net up on the trade because I literally got in on Fed day, so I'm just sitting.
Yeah, great. You were smart enough to get long silver. You were not smart enough to get out of stocks or bonds or
no.
Balanced as all things.
Well, no, the yen I flipped over.
Well, for me. In any event, overtime's out of time for this Monday, December 1st. We'll be back tomorrow, same time, same place here on Tasty Live every Monday through Thursday, right after last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak, I've been Chris Vecchio. Catch you soon. Take a quick break, then come back. Ilya's still here. Macro Money up next.
See you there, everybody.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
We are ready to build. This is make or break for this team.
It's down to the last 2 minutes, and it's time to rock and roll, baby.
That's all I got is 2 minutes, and that's on a good night.
I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime.
I think we're going to overtime. Here it comes. Shalaka.
Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof!
Take one. Hey, baby. I like the looks.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
We are back, and it is December. Markets returning from a holiday last week where things were meaningfully shortened, but nevertheless, action-packed. We're going to see if we can't make sense of what happened and what that sets up here as the last month of the year gets underway. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we're going to start the conversation with a breakdown of what happened last week as we usually do. We'll take a look at the price action here and see if we can't make sense of what happened. And from there, see if we can figure out where we might be going next. It is, of course, an action-packed sort of week next week because that fateful Fed meeting that we've all been so urgently waiting for, that's coming our way. But the run-up should be interesting onto itself because, of course, now with the benefit of returning liquidity, markets are going to be in a place, perhaps, where they're going to start to reposition or to pre-position, as it were, for whatever this might be. So let's take a look at the price action here and see how that might look, because, of course, we barnstormed higher last week, aggressive gains in the S&P, aggressive gains in the NASDAQ, and it looked really like if the mood since basically the beginning of November and really early October with that fateful FOMC meeting after which Fed Chair Jerome Powell came out and basically told everybody, you all think that it's a foregone conclusion that we're going to cut rates in December, but let me tell you, it is far from that. And of course, markets have been basically in risk-off mode since. Last week seemed like a bit of a reset on all of that narrative making. So if we look across the major assets here, what we find is that all of what we see is a bit like the inversion of that idea. So stocks were down around worries that the Fed may not cut, or at the very least may not be as dovish as desired. Well, last week they were up in aggressive form. If we take a look at the bonds, they were down. But of course, the overall story here, again, in reverse. So now we have yields coming in a little bit last week and bonds edging up, perhaps again around the idea that some of this concern is abating. Not a big move for crude oil, certainly after a 3.4% down week. A 0.8% gain is hardly anything to write home about, and perhaps says more about just how little the markets care about this escalation of force threat in and around Venezuela. But gold, again, responsive and giving us a strong 4.3% rally. The dollar down, euro up 0.7%, Bitcoin up 7.6%. Of course, it has since cratered. If we take a look at what happened here today, we're back at the lows for Bitcoin. More on that in just a moment. But the overall story here seems to all sort of fit in one tale, where stocks are up and yields are down and gold is up and the dollar is down and Bitcoin is up. And so you get this sense of risk on because risk is tied to the Fed outlook, and the Fed outlook, at least as of last week, was shifting back into a mode that the markets were more comfortable with, largely because it had spent weeks upon weeks going in the opposite direction. And without really one catalyst or another last week, certainly not even in the lead up, it's not as if the Fed changed its tune materially. We got a few comments from Fed officials that were maybe evocative of more of a cut probability, but hardly anything that we haven't heard before. But for whatever reason, the markets decided that last week, going into the holiday, perhaps, going into diminished liquidity, perhaps, the markets were going to be in correction mode. And they were going to say, okay, whatever we were doing since late October, we don't want to hold that bag over the holidays, so we are going to put all of those dynamics in reverse. And that's seemingly what last week boiled down to. Now, interestingly, if we look at where Fed policy expectations now sit, they haven't been so terribly changed in recent days, and that seems to kind of lend credence to this idea that it wasn't so much a change of substance last week as it was the markets opting to de-risk exposure on a week when there wasn't a lot of liquidity, there wasn't a lot of conviction, but there was every reason to be concerned, because if some headline were to come out of left field and challenge the narrative, there wasn't really a lot of participation, and markets could get very jumpy when there are so few buyers and sellers in the fray because of the holiday. So if we look at the substance of the matter, we can see here a week back, we were already in a place, this is at the start of last week, already in a place where the likelihood that we'd get a rate cut in the December 10th meeting was north of 80%. It has held there basically ever since. Now, if we look a month back, of course, it's just a touch over 60. So we can see that there's been something of a shift here. But the meat of what we saw last week, the sort of relentless risk recovery, by Monday, that was already there in the outlook. And so it's curious that, of course, the markets were as dramatic in their adjustment as they were. And that perhaps speaks to this idea that maybe this wasn't really a shift in sentiment so much as it was an adjustment in positioning around the possibility that, look, we have this major story alongside diminishing liquidity. Let's not front run anything. Let's instead reduce exposure, de-escalate, and come back after liquidity has returned and see where we land. And where we've landed is not incredibly encouraging. The start of the week here, certainly not anything shocking or dramatic, but the dollar having been back overnight to the lowest levels since mid-November, so call it 2 weeks, now closing the day flat against the euro, a little bit higher against the pound, a little bit higher against the Aussie, a little bit higher against the Canadian dollar. The yen, of course, still doing its own thing here, so the dollar is a little bit weaker there. That seems to have more to do with domestic Japanese concerns than it does with anything else. But elsewhere, it is a story in the opposite direction. Yields are higher. Metals are not exactly surging here, especially looking at gold. Silver is faring better, but gold is up only about 0.3% on the day and struggling to make hay above that mid-November high. And so the story here, as we start this new month and as we start this new week, seems to be that the momentum from last week's correction has been sapped. We're finishing down 0.5% on the S&P, down 0.33% on NASDAQ, down 1% and some change, almost 1.1% on Russell. And of course, the ailing instrument, the ailing risk asset of the bunch, Bitcoin, and crypto in general, but certainly Bitcoin, off 4.7% and back to where it was on November the 21st, which is when it bottomed, before last week's tepid attempt at a rebound against this backdrop of overall risk. And I say tepid, even though obviously the move here was quite significant. 7.6% was last week's move in Bitcoin. But when we put that 7.6% rise in the context of a 10.4% decline just the prior week, we obviously see that this is a market that, despite the magnitude of the move, was only just correcting and couldn't even erase the preceding week's decline, never mind the 36.5% decline from the high on October 6th down to that low on November the 7th, or the week of November the 17th, so the week before last. Now, as far as the data here is concerned, and this is where sort of the motivations for these moves become interesting. We started the week here with some questionable data out of China. We can see back to contraction mode on the official PMI numbers here for November. So the world's second largest economy back to shrinking mode. As ever, PMIs are done in terms where 50 is neutral, neither growth nor contraction. Above 50 is growth, below 50 is contraction. The further you go in each direction, the faster the pace. So the further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. We can see readings below 50 across manufacturing, services, and overall. We, of course, also get the first batch of this week's meaningful U.S. data, the ISM Manufacturing Index. We still don't have any quality government data of substance that's current, but looking at these third-party indicators here, the Institute for Supply Management giving us a little bit of a clue here. So we can see 48.2 ends up being worse than expected, and of course, deeper into contraction territory for U.S. manufacturing. If we take a look at the way that this thing was breaking down, we can see new orders falling deeper into contraction territory, employment deeper. So both of these are now falling at an accelerating rate. Meanwhile, the inflation component is actually picking up steam when we look at the November data. So when everybody was hand-wringing earlier in the year and saying, well, where is this stagflationary risk from tariffs that everybody keeps banging on about? Well, there it is. So obviously it didn't all happen at the same time, and obviously things have been quite uneven, but even going back to the start of the year, we can see here the adjustment was lower on new orders, lower on employment, and then much higher on prices. This was the response to the onset of the tariffs at the start of the year. We can see prices have since cooled, and these issues in new orders were almost trying to recover. That's ultimately failed. Employment has been trending lower the entire time. So we can see businesses are retrenching. Since this shock at the start of the year, employment has steadily deteriorated deeper and deeper into contraction territory. Now, we're going to get the bigger deal service sector report later this week. That's one of the main touch points for sentiment this week. 52.1 expected on that services index. That would be a little bit softer than the prior month, but still very much within the realm of this range that's prevailed late last year and into the beginning of this year. And the key question, of course, here will be, will the service sector continue to be able to carry the economy here? Because, of course, If this story on the employment side in manufacturing is telltale, well, then consumption is going to be impacted adversely, and 68% of the U.S. economy is household consumption. So to the extent that services are being held up by consumer spending, we have a story here where we might very well be in a situation where, as ever, the economy moves slowly. It's a barge and not a speedboat in terms of how long it takes to turn around. But we could finally be seeing those stagflation risks that we were getting warned about and that everybody was kind of hand-wringing about when the tariffs initially arrived. Now, to the extent that we're watching consumer confidence, of course, the other main thing here on Friday is going to be the December consumer confidence report, where we're expected to see a little bit of an improvement on the main headline index from 51 to 52. Now, we can see here that sentiment has been in an unwelcome decline. Here's what that consumer confidence index has looked like so far. And perhaps the most worrying part of all of this is that over the past 4 months, sentiment has been deteriorating even as inflation expectations ease. This was really a one-way bet for a long time, going all the way back to the beginning of 2021, the relationship between sentiment and inflation, where we can see here's the post-COVID inflationary spike. Obviously, consumers didn't like it. Early 2022, the Fed starts to aggressively hike rates and inflation expectations fall. Sentiment improves. At the start of this year, we get the threat of tariffs. Inflation expectations spike by a whopping 4% here, from the lows up to the highs in the first quarter of the year. Sentiment craters. Inflation expectations come back in. Sentiment seems to steady, but over the past 4 months, it is deteriorating even as inflation expectations cool. So something is clearly misfiring here with the most significant engine of U.S. growth, and we're going to have to look at that here as we look at this ISM data, because yes, the Fed is expected to cut rates. Markets clearly still want a lot more rate cuts out of them than they've owned up to, and they are going to be updating their September forecasts in the summary of economic projections at this December meeting. This now may be the bigger deal than the cut itself. Of course, we can see back in September, the Fed projected this December cut. In September, the baseline Fed funds rate, the median, was 4.4. Down to 3.6, narrowly, is 3 cuts. So the Fed already told us in September, with 2 meetings after September left, and a cut already done in September, that there's 2 more cuts after. Let's see if we can do that math. Oh, there's 2 meetings left for the year. Oh, there's 2 more cuts on the board. Gee, I wonder what the Fed is saying. So, although the December cut may be controversial, we certainly saw that in the discussion in October, it's not as if the Fed didn't tip its hand on what the likely scenario is. The larger issue is what happens next year, because there the disconnect continues to be wide. The Fed's only got a single rate cut for 2026. And if we take a look at what the markets have for them, despite the fact that they've kind of diluted expectations a little bit, we're still looking at 61 basis points. That's at least 2 cuts and 11 basis points in the direction of a third. Now, that's somewhat less aggressive than what we've seen it look like recently. That's only about a 44% chance of that third cut, so call it just slightly shyer than even. So maybe the markets are getting a little bit fuzzy about that third cut, but in any case, they are way more dovish than the Fed has accounted for. And so to the extent that we're looking at a situation here where growth starts to perhaps show more signs of wear and tear, if there's not visibility into that from major economic data, and all we start to see are these third-party indicators kind of tip us a little bit in this direction, we're going to start to see the markets probably respond to those. But the range of response is inherently limited because they are already so dovish relative to what the Fed has said, then that the stage seems almost set for disappointment. If any of these numbers are anything short of awful, if they're relatively as expected here, and these expectations are by no means aggressive, what we're looking at here is a little bit of a cool down in services, a little bit of a pickup in sentiment. If we get anything that's meaningfully steady here, we probably get some disappointment around what the Fed might actually signal. There's also a euro area inflation reading, but the ECB is not priced in to change policy at all next year, so this seems like something of an afterthought. In any case, if we look at what S&P Global PMI numbers have shown us so far, they're suggesting that the economy is in relatively solid health. So perhaps that gives us a service sector number that's relatively upbeat for ISM, or at least foreshadows as much. But that, of course, would stick in the market's craw, as it were, because what they want is rate cuts. And a solid ISM number would diminish that likelihood. We can see that clearly here. Once we get the October cut and the Fed comes out and gives it, but Powell says, don't hold your breath for December, the market's top, and they've been heading lower ever since. Here's the Thanksgiving week recovery. It fails to break any of these highs and basically stops at the same spot where the post-Fed hangover left them. If we look at how the dollar is performing here, it's cooled again last week against the backdrop of the sentiment improvement, but still in the uptrend and still holding its former range bottom. So all of this seems to be making the case that last week was the correction, and this week perhaps the resumption of what was started in late October. So as far as exposure goes here, I'm still a little bit long gold. That's working here. A little bit long silver also. That's working. I peeled off half of my Bitcoin short. That's been an excellent ride. I've been holding it for weeks now, and I peeled off half because we got back to the low, and it seems like things can get a little squirrely here. So I took half. I also took half on my exposure in EWZ. This is the Brazilian stocks ETF. It seems to be back at its swing highs today. And if I'm expecting risk off, then that's good enough for now. I have another piece here with expirations in January. We'll revisit that then. Still long the dollar, a bit of relief there today after last week's pain. Aussie, pound, and euro. I have all of that on the short side. Still short risk via this put vertical in SPY. Still long the bonds via call vertical in TLT, and still a little bit short crude, Venezuela notwithstanding, although I only have 18 days to expiration here, and the trade isn't really making much headway, so I might have to start to think about what I want to do here next. That might be decision time this week. And that is Macro Money for today. As ever, we are here Monday through Thursday after overtime, a show I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Good morning. Welcome to your first day of the Advent calendar. Where are they?
No, where's my chocolate?
Producer Phil, we're missing something.
Whiskey Advent calendars. Could that be nice, couldn't it?
Maybe we'll have an Advent calendar with a profit in it each day for us to find. How are we doing, everybody? Did you survive November? That is one of the toughest months that I have seen in a long time because we had the FTSE flat, the S&P flat, the DAX was down 0.5% in November, but
panic stations.
Nvidia down 12%.
Yeah.
Oracle down 23%, and Alphabet up 13%. I mean, what kind of trading environment is that?
Nvidia is flat over 3 months, and Google is up. Sorry, Alphabet's up 50%, something ridiculous. So yeah, it's what you should have done.
Now we know what we should have done. Yeah. Just market was obviously the market was going to be flat for the whole month. How did you all do? How did everybody's November go? I see a bit of chat in the Discord over the weekend. Just be reassured that was not an easy month by anybody's terms. So here's hoping for 2026. It will get a little bit easier.
It's because you insisted on buying the market. That's what ruined it. If you just kept out and stayed short, it would continue to potter higher quite happily.
It was looking good until about 5:45 this morning when I looked at my screen and I thought,
yeah,
what on earth is going on this morning?
A little bit of a post-Thanksgiving hangover, I suppose, really, maybe from the US, and then obviously we'll come to in a minute with Japan.
Right, what's coming up on today's show then, Producer Phil? Pray tell, because I think Angeline's off gallivanting, isn't she?
Yes, she has told me she's gallivanting, yes. No, the word doesn't get used enough.
It's a good one, isn't it? What's the source of that word then?
No idea. I looked that one up. Answers on a postcard.
My scholar. Right, Beachy and I through till, 8:15, we go on to fast markets. That's before Axel comes in and gives you his trade of the week, and technically speaking. And then we've got my good old buddy Garth McKenzie coming in at 9:10. My trader friend. Garth will be joining us for his updates on the action. And we are going to be talking more about, remember when Maturin came in? Mm-hmm. And then Antonia asked on the Discord for more of the sort of process stuff that Maturin was talking about. So Garth and I are going to talk about that today. Fun weekend?
Yeah, very nice.
Good.
Birthday party, children's birthday party on the Saturday.
Is that good?
Not one of ours, to go to one, yeah. So
that was even worse then, isn't it?
A little bit, yeah.
I'd never met a parent who goes, oh, we had one of the kids' mates' birthday parties the weekend. Oh, it's such a laugh.
No, it was all right. It could have been a lot worse. Well, it probably could have been that way. And then we had our first carol service on Sunday. So
I also did last night at the Queensgate HTB. Oh, it was beautiful.
Oh, okay. It's nice because all in candlelight. I'm not singing for you, Gannery, not this morning. No, Silent Night's Christmas carol service. This is an Advent carol service. So
Well, what's the difference?
There you go. Well, it's different music, which always catches a few people out because they turn up and think it's a Christmas carol service. But
Oh, well, that's what happened to me. I
you thought it was usual carols, and it wasn't.
We had Hark the Herald.
Did you? It's a bit early. Oh, you've lost Harkageddon already.
Yes.
There you go.
Yeah, that was a good one. But I'll show you the video after. Well, thanks for asking. I had a lovely weekend as well.
Sorry, did you have a nice weekend? Oh, he's a bit angry this morning, isn't he?
Well, it's just normal, isn't it? Monday morning, you come in and have small talk in the office.
Do we? I don't. I don't talk to people.
Well, we want to talk about the Christmas party then, Chris Beecham. Did I see you?
No, you didn't see me. I was at home because my wife had something else on, so I was.
You didn't come?
No. Well, you didn't see me. You didn't know I wasn't there. I'm cut to the quick personally by that.
Axel's got a good story. We'll let you.
I haven't seen him yet to update me on.
Ask him how his Christmas party was. Good stuff. Right, let's go to some overnight action. Right, well, let's go straight to it because Bitcoin's down over 5% this morning. It was all looking really nice. Everybody was going to their Thanksgiving dinners. They were going, chance to buy crypto. Let's get involved. And then, boom. What on earth has the Japanese said?
Yeah, you had the Bank of Japan Governor Kazuo Ueda, said, it gave a clear indication, according to the FT, that the bank might raise interest rates this month now. So the Bank of Japan hike is on the cards. He said, if the outlook for economic activity and prices is realised, the bank will continue to raise the interest rate and adjust the degree of monetary policy accommodation. So there you go.
So that must have given the old yen a nice kick.
Gave it a boost. He also said that even if we raise the rate, accommodative financial conditions will be maintained, which suggests that he got room for more rate increases. So you've given the yen a bit of a boost. I mean, if you look at, I don't know, you've got it there, I've got it in front of me. He says, where's my chart?
I think they're sleeping in the gallery.
They haven't shouted me to.
Come on, boys, wake up.
So there you go.
We've got. I don't know if you're watching. I'm a Celebrity, Get Me Out of Here.
I confess I'm not, which probably doesn't come as much as a surprise.
Not a surprise at all.
I've never seen a single episode. I'm delighted.
So there's a character on there called Angry Ginge, right?
Is that you?
He was. But we've got his twin who works for us in the gallery. So we've got Happy Ginge.
Oh yes, of course.
Right. And then Cam. Yeah, Angry Cam and Happy Ginge.
Cam's never angry. Oh, he is sometimes. But yes, if you look at the bank dollar yen, this is the 4-hourly chart. You can see how we've been steadily rising all the way through back into November and into, back in October rather, all the way through November. And so we've come off a bit.
Yeah, so this last we've got a little bit of strength.
Yeah, if you look at the weekly chart for more context. As people were saying, it's getting back to the 160 level, which means it's time for the Bank of Japan to intervene again, etc., because that's what happened. Obviously, if you cast your minds back to the fun of July 2024, that's when it last did it, or that he had the Bank of Japan really come in, didn't you, strongly to upset everybody's summer.
Now, remind us why a strengthening yen...
You're going to do this to me on a Monday morning.
is so outproportionally negative for Bitcoin.
Oh, for Bitcoin?
Yeah. Well, it's for